You would complain if
Yep, we're good to go.
Great.
Maybe.
All right. Morning, Nick. Okay, let's make a start. I declare open this hearing of the Senate Economics Legislation Committee into the 2025-26 supplementary budget estimates. I begin by acknowledging the traditional custodians of the land on which we meet today and pay my respects to the elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee has set 17th of October 2025 as the date by which senators are to submit written questions on notice, and 28th of November 2025 as the date for the return of answers to questions taken on notice. The committee's proceedings today will begin with the Department of the Treasury's Macroeconomic Group and International and Foreign Investment Group. The committee will be conducting today's hearings in person and via video teleconference. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. The Senate has endorsed the following test of evidence of questions at estimates hearings. Any question going to the operations or financial positions of the departments and agencies which are seeking funds in estimates are relevant questions for the purposes of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policy or factual questions about when and how policies were adopted. Witnesses are reminded of the Senate order specifying the process by which a claim of public interest immunity should be raised. I incorporate the public immunity statement into the Hansard. An officer called to answer a question for the first time should state their full name and the capacity in which they appear. I remind committee members and witnesses who are appearing via video conference and who are not speaking to mute their microphones. I remind all senators as we continue our work implementing the Set the Standard report, as Chair, I will also ensure that the proceedings are conducted in an orderly, respectful and courteous way. I now welcome Senator Ayres, Minister for Industry and Innovation and Science, and Minister for Science, representing the Treasurer. Minister, do you wish to make an opening statement?
I do not.
And the committee welcomes representatives from the Department of the Treasury, Macroeconomic Group and International and Foreign Investment Group. I welcome Ms Jenny Wilkinson, the Secretary to the Treasury, and first time in this role, congratulations appearing. Thank you. Ms Wilkinson, you have an opening statement to deliver?
I do, Chair. I understand it's a tradition for the Treasury Secretary to provide an opening statement to outline the sort of international and macro environment, and I understand that has been of benefit to the committee in the past, so I'd like to proceed on that basis. So thank you to the committee for the opportunity to make this opening statement. The uncertainty that's characterised the global economy throughout 2025 continues. Trade patterns have changed quite markedly. Late last year and early this year, imports into the United States surged as firms tried to get ahead of increases in tariffs. Trade between the US and China has since contracted significantly. China's finding alternative markets for its exports, and US imports are shifting towards other countries in East Asia and, to a lesser extent, Europe. This flows from the announcements on 31 July by the Trump administration, which were updated tariffs on goods imported into the United States, including those coming from Australia. But negotiations with the US's three largest trading partners, Canada, Mexico and China, are ongoing. According to one estimate, the effective tariff rate on US imports has increased from just over 2% at the start of the year to around 16% now. The impact of higher tariffs is now becoming evident in the prices of imported goods in the US. The tariffs are expected to weigh on global growth. The IMF, the World Bank and the OECD have all downgraded their outlook for global growth since the beginning of the year. The most significant adjustment has been to the outlook for the United States. The IMF recently downgraded its outlook for growth in the US to 1.9% in 2025 from its forecast of 2.7% in January this year. Consumer and business confidence in the US has fallen and employment growth has eased sharply. This likely reflects both the effects of the tariffs and also other policies such as the mass deportation of immigrants. On the other hand, a strong pipeline of artificial intelligence-related investments is supporting growth and consumer spending remains strong. While the Federal Reserve cut its policy rate by 25 basis points in September, it is facing a difficult trade-off given that inflation remains persistently above target in the US while the labour market is looking weak. Notwithstanding the trade tensions, the Chinese economy is on track to grow by around 5% this year. However, there are signs that economic conditions are easing. This is in part due to weaker consumer demand and a slowing in investment, which has been weighed down by falling real estate investment and softer infrastructure and manufacturing investment. Chinese exports slowed in August, with exports to the US falling by around a third since the beginning of the year. While, as I said, Chinese exporters have so far been able to redirect their products to alternative markets, recent trade data points to the risk of a broader slowdown in exports later this year. So the global outlook remains uncertain, and the most significant effects of the Trump administration's embrace of tariffs and other policy shifts are likely still ahead of us. The legality of the tariffs is still being disputed, with the US Supreme Court hearing arguments in November. Uncertainty over trade policy is adding to a more complex and uncertain global environment facing Australia. Against this backdrop of elevated policy and geopolitical uncertainty, we are likely to see more bouts of financial market volatility and disruptions. Earlier this year, there was a sharp rise in global long-term bond yields and a short-term decline in market liquidity as investors rapidly unwound leverage positions in some overseas government bond markets. Compounding this uncertainty are concerns about the sustainability of fiscal positions for some economies. There have been instances in a few jurisdictions where bond issuance has experienced soft demand or elevated yields. While bond yields in Australia have experienced similar volatility to those overseas, our bond market continues to function well, and there have been no disruptions to the issuance of Australian government bonds. Australia's resilience in these times is the result of a deep and liquid market for Australian government bonds, a highly diversified global investor base, and a strong credit profile. Prudent fiscal management remains important to ensure Australia is well placed to navigate future periods of disruption and volatility. Gold prices have increased to record highs. Gold is considered a safe haven asset, and the uncertainty regarding global trade policy, falling interest rates and geopolitical tensions, as well as the weaker US dollar, have lifted demand for gold. Central banks have also increased their purchases of gold as a means of diversifying away from US dollar assets and to hedge some geopolitical risk. On the domestic front, growth in the Australian economy has increased over the past year. The economy grew by 0.6% in the June quarter and by 1.3% in 24-25. Private final demand has driven growth in domestic demand for the past 3 quarters. This reflects higher growth in household spending, including on discretionary services, which is being supported by growth in real disposable incomes and falling interest rates. Dwelling investment expanded by 3.3% in the 24-25 financial year, driven by a rise in new medium to high density construction. Increases in building approvals over the last year are translating into strong commencements, particularly for apartment buildings. Easing inflation in construction costs, more accommodative financial conditions and continued strong demand are expected to support dwelling investment in the near term. Business investment grew by 0.9% in 24-25 following 3 years of strong growth and is expected to remain around decade highs. New non-mining business investment expanded by 2.9% over 24-25, supported by strength in business balance sheets and elevated capacity utilisation. Much of this investment has been in renewable energy projects, building data centres and spending on computer software. Large mining investments have reached completion, and a weaker outlook for the demand for bulk commodities has resulted in a contraction in mining investment of 5.5% in 24-25. Growth in public demand in 24-25 was driven by spending on demand-driven programs such as Medicare and the Pharmaceutical Benefits Scheme, in addition to spending on cost of living relief and infrastructure projects by Commonwealth and state governments. In more recent quarters, growth has eased as a number of major infrastructure projects have neared completion. While momentum in the economy has gradually increased, underlying inflation has eased to a rate that appears to be sustainably within the Reserve Bank's target band. Contributing to the decline in underlying inflation over the past year has been a moderation in the growth of prices in rents, insurance, and new dwelling purchases by owner-occupiers. A pickup in headline inflation is expected over the coming quarters, as foreshadowed in the 25-6 budget, following the expiry of Commonwealth and state government electricity rebate schemes. At the same time, Australia has been able to maintain a robust labour market. The unemployment rate is currently 4.2% and has remained in the low fours for over a year. Unlike previous episodes when inflation has been reduced, the unemployment rate has increased by only 0.75 of a percentage point from its trough in October 2022, while inflation fell by 5.75 percentage points over the same period. In previous episodes, namely in the early 1980s and the 1990s, a significant increase in unemployment occurred alongside the reduction in inflation. Over the past 12 months, demand for labour has gradually slowed, largely reflecting declining job vacancies rather than a significant easing in employment growth. This differs from the experience of many other advanced economies around the world, where easing labour market conditions have led to larger declines in employment to population ratios and larger increases in unemployment rates. Over the year to the June quarter 2025, GDP per hour work grew by 0.2%. This masks differences in sectoral productivity. Labour productivity in the market sector grew by 0.3% over the past year and is now 3.5% higher than its level in the December quarter 2019. In contrast, in the non-market sector, measured labour productivity fell by 0.1% over the past year and is 5.3% lower than its level in December quarter 2019. Weakness in productivity growth has been a long-standing challenge in Australia. Most other advanced economies, with the exception of the United States, have experienced a similar decline in labour productivity growth over the past decade, including France, Canada and the UK. Against this backdrop, Treasury supported the Treasurer to deliver the Economic Reform Roundtable, which brought together leaders from business, unions, civil society and government to discuss how Australia could boost its economic resilience and productivity growth and ensure budget sustainability. The forward work plan announced by the Treasurer following the roundtable spans most portfolios across the Commonwealth and includes a focus on how regulators can better consider the growth impacts of how they operate. Many initiatives are being taken forward by the responsible ministers. For example, the Minister for Environment and Water is leading the reforms to the Environment Protection and Biodiversity Conservation Act and addressing the backlog of environmental approvals for new homes. Treasury is supporting the Housing Minister to deliver improvements in housing construction productivity. This includes working with our state and territory counterparts to pause and streamline the National Construction Code to help reduce the time and cost of building new homes and encouraging further uptake of modern methods of construction, such as the use of prefabricated housing. There is significant effort across most jurisdictions to reform planning and zoning systems to reduce approval timeframes. All of these efforts are aimed at increasing the supply of housing. In relation to other reforms, public consultation is underway to remove additional nuisance tariffs. Collaboration is continuing with the states and territories on road user charging and a range of reforms to move us towards a single national market. The financial regulators have committed to working together to reduce red tape and the compliance burden on the financial sector. On the fiscal side, the final budget outcome released on the 29th of September reported a lower than expected deficit of just under $10 billion, 0.4% of GDP, for the fiscal year 24-25. This was $17.9 billion smaller than the estimate in the 2025 PFO. Payments were $4.9 billion lower than expected at PFO. This reflected lower than expected payments across a range of programs, including $3.1 billion in lower payments across several national partnership agreements, including those relating to natural disaster relief, climate change and housing. Tax receipts were $12.6 billion higher than estimated at the 2025 PFO. This was mostly due to higher than expected receipts from company tax, personal income tax and superannuation fund tax. Treasury released modelling in September that informed the government's net zero plan, 2035 target and the 6 sector plans. The purpose of this modelling is to illustrate the structural changes to the Australian economy that are likely to flow from Australia's net zero commitment alongside other countries' emissions commitments. It uses scenario analysis. The modelling uses scenario analysis to examine the implications of the different pathways Australia can take to reach net zero. The modelling uses the latest available estimates of abatement opportunities across sectors to determine potential emissions reduction pathways and assumes these are generally sequenced from the easier to the harder to abate sectors. The modelling assumes a global commitment to an outcome of well below 2 degrees, which is the Paris commitment, and acknowledges that additional commitments by many countries will be required to achieve this outcome. At this point, more than 80% of global GDP is produced in countries committed to the Paris Agreement. The IEA expects that renewables, particularly solar and wind, will increasingly dominate electricity generation regardless of countries' net zero commitments because they are assessed as offering the most cost-effective source of new generation capacity. The modelling illustrates that Australia's net zero transition is a significant transition for the economy that involves a range of structural changes and investments in long-lived assets. As a consequence, it shows that an orderly transition, including credible intermediate targets, provides the most cost-effective pathway to net zero. This is because this pathway provides the certainty and confidence to the private sector to make the required adjustments and avoids wasted investments. A disorderly transition, in contrast, results in higher economic adjustment costs because uncertainty leads to delayed investments and higher cost energy production during the transition. The modelling also illustrates the potential upside to the Australian economy from an increase in global demand for low emissions, energy-intensive manufactured goods, which we will likely have a comparative advantage in producing. Finally, in relation to Treasury, a major outcome of the recent administrative arrangements order was to centralise Commonwealth housing functions within the Treasury portfolio, with responsibility expanding to homelessness, construction, cities and planning functions. To ensure the government's objectives are realised, Treasury formed a new housing group to bring together this expanded role. Functions relating to bankruptcy, personal property securities and credit reporting were transferred into Treasury's existing markets group. As part of these changes, Treasury formally welcomed 150 new staff from 4 other departments: the Attorney-General's Department, the Department of Industry, Science and Resources, the Department of Infrastructure, Transport, Regional Development, Communication, Sports and the Arts, and the Department of Social Services. I'm pleased to advise that the staff under the machinery of government transfers relating to the Treasury portfolio have now been fully integrated into Treasury's ongoing work. Since Treasury last appeared before this committee, 3 new Deputy Secretaries have been appointed. Earlier this year, Dr. Angela Grant was appointed as Deputy Secretary for Macroeconomic Group. More recently, Mr. Ben Rimmer was appointed Deputy Secretary for our new Housing Group, and Ms. Katrina DeMarco was appointed as Deputy Secretary for the International and Foreign Investment Group. Thank you for the opportunity to make this opening statement, and I welcome your questions.
Thank you very much, Ms. Wilkinson. I just might kick off with a couple of very brief questions before I turn to my colleagues. You talked in your opening statement about the growth in real disposable incomes and falling interest rates. I just wondered if you could talk a little bit more about what the return of real income growth means for our economic recovery, and particularly, what are the key sectors that are driving the growth in our economy?
Thank you, Chair. As I said, the Australian economy is emerging from this period of high inflation, and the recovery in real household disposable income is in particular expected to support higher household spending, with the unemployment rate remaining low, and wages growth is forecast to continue to remain above the pre-pandemic average. So higher real disposable income provides confidence to consumers to consume, and confidence to businesses to produce those goods which consumers are looking for. I think the other thing to say about this is that this is part of the transition that the government has been speaking about, the Treasurer in particular has been speaking about, in terms of the transition from a period in which public demand has driven growth to a period in which private demand is growing, is delivering growth, and that's been particularly evident within household consumption.
And in terms of the drivers of demand and the kind of categories around that, what are some of the measures that are kind of driving that in terms of the different categories, goods and services, private versus public sector?
I might just ask Dr. Grant if she'd like to add some details.
Hi, Senator. Dr. Angela Grant, Deputy Secretary, Macroeconomic Group. As the Secretary said, for the past 3 quarters, we have now seen the contribution to growth from the private sector outweigh that from the public sector. So this is based on the latest national accounts, the June quarter national accounts. In terms of that quarterly result, the biggest driver or the biggest contributor to growth was household consumption. We also saw some strength in dwelling investment in the quarter, and that's now growing at 4.8% through the year. So what we're seeing, it's the private kind of final demand sectors of the economy that are contributing most strongly in the kind of the recent data that we've got. In terms of your comment about real household disposable income, that is now growing at 4.1% through the year. Mm-hmm. So relatively strong growth, and we think that is helping to underpin some of the recent results we are seeing in household consumption.
So presumably, that sort of strong growth in the private sector, what would you say this indicates about the health of the private sector in this country?
So it is the case that economies will have different drivers of growth through different periods. And what this is showing us is that momentum is shifting from the public to the private sector over recent quarters.
Okay. Thank you. I might turn to my colleagues.
Thank you. Just want to take the opportunity, Secretary, to formally congratulate you on the record on your appointment as Treasury Secretary. You're obviously a very experienced and very well qualified appointment to the Secretary of the Treasury, and we want to opposition formally congratulate you on that, and we look forward to working with you. My colleague Senator Bragg will kick off for us, and then I'll have some more questions.
Well, good morning, Secretary. I wanted to ask you about housing. So I noticed you mentioned it in your opening. I imagine you're spending a certain amount of your time on housing. Do you have a broad sense of how often you think about housing?
Senator, I am, though I might add that there's a lot that's going on in the Treasury portfolio. So,
of course, there is.
So yes, I am, but I also obviously heavily rely upon Housing Group and the Deputy Secretary who's responsible for housing in relation to some of those matters.
So I guess my question is, as Secretary, you are involved in housing policy at some level, aren't you?
Sure.
Yeah. Are you aware of the reports today in the paper about the review conducted by Treasury into the governance of Housing Australia? So,
Senator, I am aware of that review. I was made aware of that review, though, only very recently. This is a review that I understand was undertaken, or it was triggered at the end of 2023, and it was undertaken in the early months of 2024. Obviously, I wasn't involved in that review at all, and Look, Senator, I'm happy to be as helpful as I can be, but I suggest that questions in relation to the review, the details of the review and how it was conducted or the outcomes might best be handled by Deputy Secretary, Head of Corporate Area, who's responsible for most of this sort of governance reviews when they take place within Treasury.
Okay. Who conducted the review?
So I don't know the name of the person who conducted the review, but I'm sure Ms Anderson will be in a position to provide you with those details.
Okay, but it was an internal review conducted by the Treasury. There wasn't an external reviewer. Senator,
I don't have those details in front of me, so I don't want to mislead. I think corporate area is appearing before this committee this afternoon at 2:10, and they will be well placed to assist you with any of those questions.
Okay, just because there's been a lot of changes to this program. There's parts of Treasury that have been scheduled after dark, which is highly unusual. So I just want to make sure for the record that the questions in relation to this governance and probity review should be directed to Treasury's corporate division.
Correct.
Okay.
Senator, there's an agreed schedule for these processes. It provides plenty of time for the different components that people have an interest in. It's not controversial. Sort of asserting that this is that some of these proceedings occur after the daylight hours end, daylight saving notwithstanding. It's not unusual. We'll be here until 11 o'clock tonight. I'll be here.
Oh, thank you.
The relevant officials.
Thank you.
The relevant officials will be here. There'll be plenty of time to canvass all of these issues, and officials are very keen to answer your questions.
We agree to extend the program by half an hour to 11 o'clock. Thank you, Minister.
Thank you very much. Okay.
Let's see, this is the first bungle of the sort of Ayers appearance in front of this committee is extending the hours.
There are worse ones.
That's all right.
But I'm grateful, Senator Patterson, for you pointing out that it does indeed conclude at 10:30 p.m.
Okay, so that's fine. So
That's right.
So we're very happy to take that direction from you, Secretary. But I do want to ask you about the overall performance of Housing Australia. It has a lot of money that it needs to spend. It has a number of programs it needs to administer. Why was it necessary for the government to appoint an observer to the board of Housing Australia?
So, Senator, Housing Australia, as I think you've pointed out and we've certainly acknowledged, has a very significant role to play in the government's housing policies. Their responsibilities have expanded quite considerably over time. The government has been keen to ensure that we have, or at least, and I think this decision was taken before my time to appoint an observer to the board, but keen to ensure that we had good connections between Treasury and Housing Australia, and we were kind of well placed to understand how the operations of how Housing Australia was operating. Obviously, that's important for the delivery of all of the programs that Housing Australia is responsible for, and this was one mechanism by which we could both provide reassurance to government,
right,
but also provide support to Housing Australia in the delivery of their functions.
Okay, so I assume you're seeking, or the government is seeking, reassurance, which is reasonable, because the performance of the agency has not been up to scratch. It hasn't been able to build houses, or it hasn't been able to complete a particular outcome. Is that right?
So, Senator, the Housing Australia Future Fund, sorry, let me step back. there are a range of different programs which Housing Australia has been responsible for administering.
Yeah.
If you wish to go through the details of each of those programs and how they're performing, Housing Group will be absolutely in a position to do that.
Excuse me.
There was some...
Yeah. Sorry, just to clarify the question,
yes.
if you don't mind, Chair. Just, the question is, as the Treasury Secretary, given the Minister has appointed an observer to the board, has that been done because the government broadly is concerned about the performance of the agency?
I think that has been done. My characterisation is that that has been done because this is an important priority for the government, and it's another mechanism for, as I say, to improve the ability for the government to get the confidence around the operation of the agency. Okay.
What sort of updates are you receiving as Treasury Secretary about the operation of the board?
So I meet with the Deputy Secretary in charge of Housing Group every fortnight and are provided with an update on all of their functions.
Okay, so you don't... Do you meet with the board of HA?
I haven't yet met with the board. I have met with the Chair.
So you have met with the Chair of Housing Australia?
That's correct.
Okay, and I assume you were given an update on the macro performance of the... What do you call it? An agency? Body? What do you call it?
At the agency, we had a discussion on all of the responsibilities of the agency and their performance.
Okay, and what was your takeaway from that meeting? Well,
I think, as I said earlier, my takeaway is that the Housing Australia has a very big agenda, has a lot to deliver, and their responsibilities span a number of different programs, and I think that some of the challenges in relation to some of the programs reflect when legislation was actually passed in order to commence the rollout of those programs, but there are other programs which have been effectively run and take-up has been relatively strong. But I don't think anyone is resiling from the fact that they have a very big agenda.
Okay, thank you. So I guess the primary task of this agency, given the Housing Australia Future Fund mandate, is to build houses, is it not?
They run a number of different programs. I don't have a list in front of me of all of the programs that Housing Australia is responsible for, but they have a number of different programs. They're certainly responsible for the Housing Australia Future Fund. They're responsible for the bond aggregator. They're responsible for the 5% deposit scheme. And I'm sure I've missed some of the programs that they're responsible for, but as I said, Housing Group can walk you through all of those details.
But building houses would be one of the main objectives?
Supporting, both supporting state governments and supporting community housing providers build houses is one of them.
So it's got $10 billion in its kitty. It's been operating for over 2 years now. How many has it been able to build?
So, Senator, I think these questions, if I will have the officials who will have all of those answers to these questions available to answer these questions when Housing Group appears before estimates this evening, and they will be able to take you through all of those details.
They haven't given you a macro position of how many it's been able to build?
So within this section of the estimates hearing, if you would like us to talk more broadly about what's happening within the housing market, we are absolutely comfortable to do that. I have, at a very high level, an understanding of the number of houses or dwellings which have been supported through the Housing Australia Future Fund in terms of those that have either been constructed or are under contract. But I don't want to mislead the committee and not provide detail, with the sort of the depth that the officials in Housing Group will be able to.
Okay, well, maybe, I mean, given your suggestion that we direct some of these questions about the performance of the agency to corporate, I mean, would it be possible for corporate and housing to appear at the same time so we can work through these questions properly?
Chair, we've got the agreed program.
I'm just asking the Secretary if that's possible from a resourcing point of view.
Point of order.
Well, anything's possible, Senator Bragg, but there's an agreed program.
Correct.
Well, I'm just worried we're not going to be able to get to the bottom of these murky issues.
If you want to agitate, alternative approaches to the program, there's weeks and months of potential discussions prior to hearings. That, I mean, if this isn't a place for a scheduling discussion. If you want to have it, I'm sure Senator Hume and Senator Darmanin will be delighted to re-engage about future hearings and what happens at 9:45 and what happens at 10:05. Like that,
Okay,
that discussion can go on.
I understand.
But we're not rearranging the thing on the fly.
So you want me to ask questions about the Housing Australia housing agenda
to the housing officials,
to the corporate division, and then you want me to come back later and then ask the housing division about housing issues. So I'm just concerned it's going to get very murky very quickly. We're trying to get to the bottom of these issues.
I'm sure you can bring precision and clarity to your questions, Senator Bragg, and we'll endeavour to do the same in our answers.
Okay, so do you have, I mean, as the Treasury Secretary, do you consider the quality of the spending that's undertaken by Housing Australia? It's got $10 billion of taxpayer funds. It is, as you say, apparently building some houses. It's also acquiring houses. There are reports on the weekend that it's paying up to $1.3 million in some cases to build houses. Now, the average build cost is more like $450,000, so it appears the taxpayers are spending, in some cases, over $1 million to build a house. Do you have oversight in any way of the quality of spending from Housing Australia?
Senator, I think it's most appropriate that these questions are asked of the officials in Housing Group, who will have all of these details for you. As I said at the outset, I don't think that anyone is denying that this is, that it is a significant challenge to meet the government's commitments around, increasing the stock of social and affordable housing, which is what the objective of the Housing Australia Future Fund is. It always takes time to make agreements, agree contracts with entities like community housing providers to deliver these houses. There's no question that some of the challenges which flowed from increases in construction costs towards the end of the COVID period have made it more expensive to build houses. All of that has made it more challenging.
Senator Bragg, you're at 15 minutes.
Can I ask one final question?
Sure.
Just to finish my block. So I guess my final question is, thank you, Chair, for your indulgence, is just, you said before that you had some high-level knowledge of how many houses had been built. You then said just now that you didn't have any oversight of how the expenditure was operating from Housing Australia. They have $10 billion. So, I'm just wondering, what do you know about the operation of this agency?
Senator, you are putting words in the mouth of the Secretary that don't come close to her efforts to answer your questions that everybody acknowledges would be more sensibly put in the relevant section of the proceedings. As the Secretary said, this is a government that tries to do hard things. It is a hard thing to re-energise Australia's housing sector and to produce affordable housing. The previous government produced 373 affordable homes over the 9 years of its carriage of these issues. We have built many times that over the course of the last 24 months or so that we have been engaged in this task. We've got a lot more to build, to work with the private sector to meet these targets that are in the national interest. We're going to shoulder behind the wheel, and we'll be delighted to answer more detailed questions about housing when the right officials can come to the table and engage with you on the detail, which I'm sure you'll try and do.
Well, Chair, that wasn't my question. My question was to the Secretary about the level of knowledge about the overall expenditure.
I think the Secretary has answered that a couple of times now in different ways and directed you to later in the program. So we might rotate the call now. I did neglect to table the Secretary's opening statement, so I'll just do that now. And I also neglected to say, so we'll do 15-minute blocks first off. So I think, Senator Patterson, you're going to...
Thank you,
15
Chair.
minutes.
Appreciate that. Secretary, I've got some questions about your opening statement.
Yep.
And in particular, I'm interested in the observations you've made about the budget and public spending. You say on page 3 of your statement that growth in public demand in 2024-25 was driven by spending on demand-driven programs such as Medicare and the PBS. Help me because I'm new in this space, but as I understand it, there's a colloquial distinction of spending pressures that sometimes talks about pressures being things that are kind of demand-driven and measures that are things that are active decisions of government taken. Is that a fair kind of... or use your own language to describe those categories?
So the way I would characterise it is that pressures are the pressures that government is facing on a range of different fronts, and sometimes those are reflected in higher spending in demand-driven programs, and sometimes those pressures are reflected in decisions by government to respond to the pressures in order to address outcomes.
But does Treasury distinguish between growth which happens without a government decision and active government decisions to change spending or initiate new programs? Or
I think what you're referring to perhaps is what's in the reconciliation table in the budget papers. And in the reconciliation table for every budget update, there is an estimate which is provided for that budget update of the effect of policy decisions on both the receipts and the payment side, and then the effect of parameter and other variations, which encompass a range of different things, some of which are things like changes to programs which flow from changes in macroeconomic parameters, and others which are changes to spending in programs which flow from program-specific factors.
Understood. So you mentioned you were watching the finance estimates last night. You would have seen that they said that the net effect of decisions taken in the last financial year was $22 billion. Does that accord with your understanding?
So I did hear that number. I didn't go back and check it. I do trust my finance officials that they are across the budget numbers.
It'd be worrying if you didn't, given how closely you work with them.
That's right.
Okay, so we'll take that as read, $22 billion. What is the net effect of those pressures, those demand-driven changes that you've referred to in your opening statement? If I want to just break out and understand which has made a contribution to which.
So Senator, as I said, I didn't. I think that the numbers you're referring to probably come from. I did have a look at the 25-6 budget and to see what was in the reconciliation table for the 25-6 budget. I don't have the 24-5 budget in front of me. The 24-5 budget papers would have captured what were the decisions taken in the 24-5 budget and what were at that point the estimated pressures and estimates variations at that time. So unfortunately, I don't have that table in front of me. I can. Particularly since you're asking this question now, when I can make sure that Fiscal Group have that information in front of them when they appear before estimates, or we can see whether somebody could get that information.
Thank you. I will probably return to these topics with them, but given that it was in your opening statement, you said growth in public demand in 2025 was driven by spending on demand-driven programs. What's the basis for that statement? What's the... Oh, sorry, Senator.
That was looking at the national accounts.
Yep.
So on the basis of the national accounts, not the budget documents, but on the basis of the national accounts, that's where demand came from.
Okay. But obviously, we're interested in the budget as well.
Yes.
And so you're saying right here now you can't break down the distinction between those decisions of government which have contributed to increased public spending and things which happened regardless or independent of decisions of government.
So I don't have those figures in front of me for the 24-5 year, which, as I said, I think would have been outlined in the 24-5 budget papers.
Okay, so fiscal group will be able to answer those questions. Yep. Okay, thank you. You went on to talk about the final budget outcome, and you talked about payments being lower than expected and revenue being higher than expected. I have some flow-on questions from that. So let me find my page. So again, it kind of comes to what I was asking before. Is it true that the net effect of decisions taken is larger than the deficit?
You're saying for the 24-5 year?
Yes, that's the final budget outcome, isn't it?
Yes, so it is exactly right. That's right. So the final budget outcome is in relation to the 24-5 year.
Yep.
And I think that question goes back to your previous question, which is what in the 24-5 budget papers was the split between policy decisions and estimates variations.
Yep.
In the final budget outcome, so that distinction is the distinction that is drawn in the budget papers when you're looking at what the changes in the projections or forecasts for the budget aggregates are. There is not the same distinction that is drawn when you look at the final budget outcome. So in the final budget outcome document, as you I'm sure have seen, there's not a reconciliation because at that point there are, if you like, all programs which exist are programs of government. Those programs of government might have been put in place last year or the year before or the year before that.
Yeah.
And so it's not a distinction that is straightforward, I'm not quite sure how you would make that distinction, frankly, when you're trying to break down an outcome.
I'm trying to be fair to the government, right? So there are some things that are within government's control and there are some things which are not. Yeah. And I'm trying to separate out the things which are in a government's control and the things which are not. And so if the government is responsible for the decisions it takes, but if, for example, unemployment is slightly higher or lower, which means there are slightly more or fewer people on benefits, that's not directly within the control of government, whereas spending decisions are. So you're saying it's not possible to do that, or it just isn't done in PFO, or it's just not here in this section?
In the final budget outcome. So it's not done ex post. I have never seen an ex post assessment of how you would distinguish the outcome or the change in the outcome between policy decisions and estimates variations.
Okay.
But as I say, when fiscal group appears, it is certainly the case that in the 24-5 budget, you can look at, in a forward-looking sense, what were the decisions taken just in that budget, and what are the estimates variations in relation to existing programs that existed going into that budget. That's the distinction.
Can we isolate it to all government decisions which took effect in that financial year?
So there'll be some government decisions that took effect in that financial year which were decided in earlier budgets.
Yes, that's what I'm saying. Like, can we isolate the net effect of government's decisions in that financial year regardless of when they were taken?
So, Senator, honestly, I think that would be a very difficult thing to do because there will be... So there could be a decision around a measure 3 years ago. That decision was taken at that point. There could then be an estimates variation in the 24-5 year which affects the outcome. So is that a decision or is that an estimates variation? It's not clear to me how you would draw that distinction. What the budget papers show is that at that point in time, what are the new decisions that have been taken, and then what are the variations for all of the existing stock of measures, both on the revenue and the payment side, that exist at that point.
I mean, finance was kind of reasonably quick to agree with it. It didn't seem to them to be a shocking number. They kind of said, "Yep, that's right, Senator."
So I think if they were answering the specific question, which is in the 24/5 budget, what were the decisions that were taken? And they read them from the 24/5 budget papers, I presume. Then that is a well-defined question. But I don't. But I think your question then went to, and what are all of the other government decisions which took effect in that year? And as I said, government decisions that took effect last year could have been decided 2 years ago, 3 years ago, 4 years ago. Those are not captured. Those would not have been captured in the numbers that were discussed.
Maybe for the ease of this conversation, let's take it on notice and we can revisit it on notice.
You've got 5 minutes.
Thanks, Chair. Grateful for that.
So sorry, Senator. Ms DeMarco, did you want to add something?
Oh, sorry. Thank you. Senator Katrina DeMarco, Deputy Secretary, International and Foreign Investment Group. I think the Secretary's right, and sorry, just drawing on having lived this over a few years. In the final budget outcome, what you get are the actual items of expenditure in that year. But that is going to be an accumulation of a range of different policy decisions over consecutive budgets. What we don't do is recost policy proposals. So in that given year, you're not able, in the final budget outcome, you're not able to determine how much of that is due to policy over an accumulation and a range of budgets. That's quite distinct from the 24-25 budget, which would have had an estimate of, in that year, in that budget, what are the policy decisions that impact that fiscal year.
Right.
But the FBO will be an accumulation of it over years and decades.
Yeah. Look, I don't claim to be an expert on this, but I'm advised that all you need to do is accumulate the reconciliation tables across budget updates, and that gives you the figure. Does that sound fair?
I don't think so.
No, because parameters will change underneath those policies. For the policy, when you cost it in that budget, is costed as against a range of economic parameters, but they'll change over budgets.
Okay. Let's just take it on notice to the extent it can be answered.
Sure.
And I'll try and move on to other matters quickly. Given the time, is it possible using 22 PFO as a baseline to say what the total amount of net budget upgrades since then has been through to the current financial years?
So what the change in the underlying cash balance has been?
Yeah, taxes net of spending.
Since
22 PFO.
Since 22 PFO. So, yes. So, as I understand it, so the underlying cash balance since the 22 PFO has improved by just over $200 billion. And that's taking it from the 22 PFO through till the to 28-29, the end of the current forward estimates period.
Okay. I've got slightly different time frame here, which might account for a difference, but from 22-23 to 25-26 financial years, is it about $260 billion?
I don't have that figure in front of me, but again, can we take that? I can get my fiscal group colleagues to confirm.
Yeah, I'm just trying to assess what the windfall was, right? What the unexpected net upside is.
So I'm not quite sure what that figure is. What I've reported, which is the change in the underlying cash balance, reflects the net of estimates variations, both on the positive and the negative side.
Exactly, that's what I want to try and get to.
And policy decisions. Okay. So it captures those together.
Can we set aside the policy decisions? Because obviously we can have a separate discussion about that, but just effectively what was the forecast error?
So again, Senator, I think it's quite hard to do that on a cumulative basis over those years. I think that what the budget papers are clear about in terms of the outcomes is what the underlying cash balance has, in an outcome sense, been compared with what was projected at PFO.
Okay,
and
well, how about, to make it more simple, how about just revenue? What is the unexpected additional revenue that was collected between those financial years compared to what was forecast in PFO?
So I don't. Can I take that on notice? I don't have that figure in front of me, and again, it's going to be, when you're looking in a cumulative sense over time. What's challenging in doing a calculation like that is working out what the sort of what you're holding constant, because tax policy is changing over time, and so in each update there will be an estimate of what is the unexpected change in receipts, which is in that reconciliation table that you've talked about.
So we can't measure that?
Well, except that at each time it's taking into account all of the existing policies in place at that point. So for example, in the 24/5 reconciliation table, that estimates variation line doesn't just capture, all of those policies which were in place in 2022 at the PFO, but it actually then captures all of the policies, its estimates variations in relation to policies which have been announced since then. So
you don't intend to measure revenue upgrades?
I don't think it's... I think part of the problem with this line of questioning, and you'll get an opportunity with Fiscal Group to, I guess, go through this in more detail, but the assessment of the fiscal performance, I understand the, sort of combination of your side of politics, a sort of frustrated ambition and a sense of entitlement about fiscal management. It's hard to accept.
That's completely uncalled for.
That fiscal performance has improved over time.
Minister,
there was a $209 billion turnaround.
These are just factual questions about the budget.
Can I just interject, please?
Partisan point.
We're at time. Senator Patterson, perhaps we can come back so that we can let Senator McKim ask some questions.
Yep, that's fair. Senator McKim.
Thank you.
Thanks. Morning, Minister, and good morning, Ms Wilkinson. Congratulations on your appointment as Secretary. I watched the Economic Reform Roundtable with particular interest, and you've referenced it in your opening statement. I'm sure my invitation just got lost in the mail somewhere, but...
questions about that, Senator McKim, should be directed to Australia Post, I think.
That was aimed at you.
Should be directed to Australia Post, I think, is my point.
But Ms Wilkinson, obviously one of the themes, and it was reported that this was by consensus, was the theme of intergenerational inequality or intergenerational inequity, and acknowledging that those words can mean different things to different people. That piqued my interest, and I went through Treasury's tax expenditure and insights statement. Are you aware of what the most inequitable tax break in Australia is, according to the Treasury tax expenditure and insight statement?
So, sorry, Senator, not off the top of my head.
That's fair. And by the way, it's not even close. It's by a fair margin. Cost the budget $22.7 billion in the last financial year. 82% of the benefit of this tax break goes to the highest 10% of income earners. It's the capital gains tax discount. The stage 3 tax cuts were amended by the government in the last Parliament, contrary to the position that the government took to the last election. Are you aware of how much of the benefit of the stage 3 tax cut, the original stage 3 tax cuts, went to the highest 10% of income earners?
Sorry, Senator, I don't have that on the top of my head either.
That's fair too. It was 58%. So the capital gains tax discount is by some margin more inequitably distributed than the original stage 3 tax cuts. Now, presumably Treasury provided advice to the government in regards to the amendments that Labor made to the stage 3 tax cuts. Is that right?
Treasury did, yeah.
You did?
That's right.
Are you aware that, is Treasury aware that the original stage 3 tax cuts had 58% of the benefit going to the top 10% of income earners? Are you aware of the inequitable nature of those? Presumably, I mean, it's fair to say the government amended those on the basis that they were too inequitable in that they favoured high income earners unfairly, and therefore they were amended. Did you provide advice to the government at the time about how much of the original stage 3 tax cuts went to the highest 10% of income earners?
So, Senator, obviously I wasn't in this role at the time. Treasury did provide advice to government in relation to the stage 3 tax cuts. If you wish to go into the detail of what advice was provided, I suggest that those questions would probably most appropriately be provided to Revenue Group, who are joining straight after this session, and they will be able to provide you with the details of information that was provided to the extent that that's appropriate.
The Treasury Tax Expenditure and Insight Statement also provides a breakdown by age of the beneficiaries of the capital gains tax discount. The great majority of that tax break goes to people aged over 55. So given the massive inequity in terms of its distribution based on income and its massive inequity based on its distribution in regards to age, I mean, is it possible to address intergenerational inequity thoroughly in Australia without reform or abolition of the capital gains tax discount?
So, a couple of things. First of all, governments obviously have to make decisions about tax policy, taking into account a wide range of factors, including thinking about the tax system as a whole and then thinking about what the implications are. There are different ways in which governments can think about how to address different policy objectives through tax policy. I don't think that it's appropriate for me to offer an opinion about whether there is one reform or another reform which is sort of better or worse for addressing particular outcomes. Whenever we think about tax policy, we've got to think about, as I say, the system as a whole and what the potential implications of changes are. I'm not saying this to rule in or rule out any particular tax changes that could be considered at some point in time, but tax policy is a complex area of policy and you do need to think about it holistically.
All right, thanks. So the RBA's raised concerns about an increase in property investors returning to the property market. Are you aware of that?
So I'm aware in the latest financial stability review that came out from the RBA, they captured, I think it's the latest lending data, which suggests that, as is frankly, often the case during the cycle, there are different points in which different parts of the system respond in the housing sector. Yep. Yeah,
I mean, credit growth for housing investors has accelerated in the year to August. Mm-hmm. I mean, you've referred to, you've got a new housing group, and I understand there's been some discussions already about the timing of their attendance, and it is regrettable that they've been brought in so late in the day. But I wanted to ask you in regards to the capital gains tax discount. The government has said it hopes to build 1.2 million homes in the next 5 years. would reducing or removing the capital gains tax discount change the ratio between investors and owners in regards to who would buy those 1.2 million homes?
So, Senator, I'm aware that you've had an extended discussion with the former Treasury Secretary on exactly this issue, and as he outlined in his responses in the last few estimates, this is a complex area of policy.
But all other things being equal, Ms Wilkinson. A phrase beloved of economists, I might add.
That's right. It could have an impact on the balance between owner-occupiers and investors, but I'm not in a position to offer an opinion as to kind of either the magnitude of that impact or how significant that would be. And any change like this, you would want to think about, like, carefully and broadly how it would affect the whole of the housing market, because obviously if there's less investors, there's also potentially less rental properties. But so, Senator, I'm not sure that I can be particularly helpful for you. It might be the case that my colleagues in Revenue Group can provide you with a better summary of the literature as to what the potential impacts of such a change would be, but I'm not sure that I can go any further.
Well, Ms Wilkinson, could I just explore that briefly? You've said it could change the ratio. I mean, it would change the ratio, wouldn't it?
So I'm not in a position to be more definitive.
You're not prepared to say that if you reduced the most inequitable tax break in Australia, that insignificant part is used by property speculators to underpin the decisions they make to invest in property. You're not prepared to say if you reduced or removed that inequitable tax break that it would change the ratio between investors and first home buyers?
Senator, I think I've gone as far as I'm happy to go.
Okay. Minister, is the government going to reduce or abolish the capital gains tax discount?
The government has no plans to make the changes that I know that you have been agitating for some time.
All right. Well, let me put this to you, Minister. It is by a long, long way the most unfair in terms of its inequity and its intergenerational impact, the most unfair tax break in the country. It blows the unfairness of the stage 3 tax cuts out of the water.
Right, I have no plans to change that one.
Well, that's the point that I'm making. And thanks.
Is there a question here,
There is
Senator?
a question, and Ms Hume has anticipated it. Senator Hume has anticipated it. And the question is this, Minister: you were prepared with no mandate whatsoever from the Australian people to mitigate the unfairness of the stage 3 tax cuts. Rightly so. Rightly so. But the capital gains tax discount blows the unfairness of the original stage 3 tax cuts clear out of the water. 58% of the original stage 3 tax cuts went to the highest 10% of income earners, but 82% of the benefit of the capital gains tax discount goes to the highest 10% of income earners. It's the most unfair, inequitable tax break by a long, long way on the tax statutes in Australia. Why won't you move to reduce or abolish it in the same way you did with the stage 3 tax cuts in the last parliament? Why won't you do that?
Well, as we said over the course of the last term in terms of the stage 3 tax cuts, the government did make a decision
with no mandate.
Well, I endured your question. You're going to have to endure my answer, Senator McKim. We did make a decision to change our approach to the stage 3 tax cuts. The Prime Minister and the Treasurer didn't duck the fact that we had changed our approach.
That's right.
That was a difficult decision for the government to make, and it was made because it was the judgment of the government in that term that, particularly given the issues around cost of living and inflation that we inherited from the previous government, and were tough issues to deal with. But, you know, persistently high inflation over the course of that term, that amending those sort of stage 3 tax schedules was the right approach. We fronted up and made the argument, the National Press Club to start with, and then in the Parliament and uphill and down Dale. And I think the judgment of most reasonable commentators was that that was the right thing to do, but a difficult decision.
That's right.
That's what government's about. To take one position and then, you know, for the right policy reasons, to adopt another. And it meant that we went to the election with a lower income tax proposal than the higher income tax proposal of the alternative party of government. And I think, you know, Senate colleagues here at the table have been engaged in quite some debate about how it was that the coalition went to the election with a higher tax proposal well, the question was all about the stage 3 tax cuts and capital gains tax.
Dorothy Dix's for you to attack
and capital gains.
That's not what I'm about here.
Normally,
we've got 1 minute, so
normally the Greens Party approach is to be coordinated with the coalition on these questions. I don't want to undermine that coordination. On capital gains tax and our approach to housing more broadly, there are many levers that government has in this area. And we have no proposals in relation to capital gains tax. But I tell you what we have done.
I didn't ask.
We have introduced a 5% housing deposit.
I know, that's going to put house prices up. I know,
that is a powerful
I didn't ask you about that.
That allows young people access to
just on a point of order,
yeah.
Chair, I just wonder if you could ask the Minister to come back to the question, because I didn't ask him about any of that, or perhaps I'd prefer if we just move on.
Last question.
Thank you.
Yes.
All right. Thanks. Ms Wilkinson, given the consensus that emerged from the Economic Reform Roundtable on intergenerational inequality, what are the priority areas that Treasury is working on in order to address that issue? What's the government asked you to do specifically in regards to intergenerational inequality, considering it was a consensus view of the Economic Reform Roundtable, or at least it was reported as a consensus view that it was a big issue that needed to be addressed?
So, Senator, most of the focus of the Treasury work since the Economic Reform Roundtable has been around progressing the 10 immediate actions that were announced after the Roundtable. So those included a range of other things like abolishing the nuisance tariffs and some of the reforms to help increase housing supply, like reducing the complexity and red tape in the National Construction Code and accelerating the approvals for housing developments under the EPPC Act. There are, and I can go through all of those immediate actions, those have been the priority for government. There were, I think, as the Treasurer outlined, 10 areas of consensus that came out of the Roundtable, which are aimed to help set reform directions. That included a better tax system, and the Treasurer spoke about the principles that were agreed around the sorts of elements of a better tax system, which included providing a fair go for people, I think encouraging investment and simplifying the tax system. The work that we do with the government on tax policy is ongoing work. We have, it's core business for Treasury. I don't think, we're certainly not in the business of talking about the work that we are or are not doing, apart from anything else that can create confusion, frankly, for businesses and for others in terms of what's happening to the tax system. So we work on an ongoing basis with government and with the Treasurer, I should say, in particular around all matters of tax policy.
Thank you. I'm going to rotate now. We're going to do 10-minute blocks. So I'm going to go to Senator O'Neill.
Thank you very much, Chair.
And I'll give everyone a 2-minute warning.
Thank you, and it's a pleasure to see this historic moment. The first woman to head up Treasury. Congratulations, Ms Wilkinson, and I was able to similarly congratulate the first female Commissioner of the AFP, Ms Chrissy Barrett, yesterday. So this is indeed a good thing for 50% of the population. We don't want to underuse any of the resources we have at hand, so congratulations. My questions go to the commentary that you made about the global economy. So if I can ask you, in the first instance, Ms Wilkinson, you described the incredible level of uncertainty in the global economy. Would you say that the risks to the global economy are tilted to the upside or the downside, implications for Australia?
So it's hard to make that judgment. It does feel like there's a lot of uncertainty in the global economy at the moment, partly given the way in which the sort of global trading order is changing, but also given other events in the Middle East and, of course, the ongoing conflict between Russia and the Ukraine. That definitely increases, provides downside risks to the economy. I would say that compared with some of the very early announcements and the sort of early weeks and months after the Liberation Day tariffs were announced, it's probably the case that there's a little bit less uncertainty than there was at that time. I think I would have to say on balance there's probably more downside risks for the global economy than I can see upside at the moment. Now, having said that, for Australia, Australia has demonstrated an ability over a run of years to be quite resilient in the face of some significant shocks that we've faced. Australia is not particularly exposed to the US directly in terms of our trade flows. So the risks to Australia probably flow more from kind of what the broader impacts are on the health of the global economy than they do from specific impacts. And I might just see if Mr Marco has anything else that she'd like to add on that question.
No, I think you've covered it really, really well there, Secretary. I think the uncertainty that remains is quite significantly around policy. So it's around decisions that other countries might make in response to actions that you're seeing in the Middle East, in Russia, Ukraine, in terms of conflicts, but also in terms of the US policy outlook. And we're seeing that when we look at things globally, particularly across our region, that other countries are changing and adjusting their policy settings in relation to what they're seeing in terms of policy settings in the US.
So the unknowables remain unknowable until we have to confront them, but overall we've had a robust response to challenges to date.
We have, the Australian economy has been quite resilient and as I said in my opening statement, I mean, in many ways the Australian economy has managed the adjustment to reducing inflation back to the RBA target band better than many other economies have. We've maintained higher participation rates than many other economies, the labour and employment to population ratios than many other economies. So it does feel like there's resilience in the Australian economy, but I wouldn't want to be complacent.
So if I can be mindful of the time, sort of wrap 3 questions really about tariffs. Mm-hmm. You know, many Australians weren't really aware of it, didn't talk about it, but now tariffs are something that people do talk about and think about. So for some clarity in the public place, in ways that ordinary Australians can understand, could I just ask, what are the economic challenges that are associated with higher tariffs? How do you expect that to impact on the global economic activity and prices? What do you see of the economies, the global economy and global financial markets' response to tariffs so far? Aware that you said you can't know the unknowable yet, but where are we in terms of the response so far? And if you could expand a little more on your comment in your last answer to my question about the relative nature of Australia in relation to tariffs on that global stage.
So let me just start off with the sort of overarching comment, which is that Australia has benefited over time by having a rules-based global trading system. We're a small to medium-sized open economy. We have very clear comparative advantage in the production of some goods. There's other goods that other countries have a comparative advantage in, and we're all better off if we can produce those goods that we have a comparative advantage in order to maximise like living standards.
So keep doing the best we can with the things we're the best at.
That's right. That's right. Now, so higher tariffs, I mean, for the most part, impose a cost upon the country that's imposing the tariffs. It can vary a bit, so it can certainly mean that countries that on whom the high tariffs have been applied have to find different markets for their products. So that's a challenge, and as I said in my opening statement, that's certainly that's been managed remarkably effectively to date when I look at what's happened to Chinese exports, but there's a risk there that the trade diversion, given the scale of the trade between China and the US, that trade diversion is potentially disruptive on the sort of global scale. In terms of Australia's direct exposure, I'm sure that Ms DeMarco can give you the specific. Dr. Grant can give you the specifics on what our actual exposure is to the US. Please go ahead. Sorry.
No, thanks, Secretary. So you are right, Senator, that the direct impact of higher tariffs on Australia really hits our export sector, and we're seeing that effect to be relatively modest at the moment. Australia exports only around 5% of goods to the US, which means our direct exposure to the US tariffs is relatively small. You then made reference to other channels. So the indirect channels are really the uncertainty and volatility that the Secretary spoke about, and you will see that in financial markets. And we saw some initial financial market volatility in April when the initial tariff announcements were made. We have seen markets settle down a little since then, but volatility can always come. As Ms DeMarco said, this is really around policy uncertainty, so policy announcements can bring back some volatility in financial markets. In terms of real economy effects, uncertainty and volatility can affect investment and consumption, but that depends very much on how our businesses and our consumers are reading the information and the data. So it goes to your comment that Australia should do its very best with what we have in a more uncertain global environment.
Thank
Can
you.
I just...
Two minutes, yeah.
Do you have something to add on the early signs of the impact of higher tariffs on the US economy?
Yes, I can make some comments. It does appear, so the latest data for the US shows some softening in their labour market, and we are seeing some sense of inflation pressures come through from the tariffs. In the second quarter of this year, the US economy actually recorded very strong growth rates following a contraction in the first quarter. And this really goes to the shift in trade patterns that the Secretary referred to. So a lot of volatility in US GDP at the moment as businesses and consumers try to react themselves domestically in the US to tariff announcements.
Thank you. Thank you, Chair.
Thank you.
I'll go to the coalition. 10 minutes.
Thank you, Chair. Before I move on to another topic, I just want to briefly revisit our slightly unproductive exchange before, and perhaps the fault is mine for the way I express my questions. But let me take you to 25-26 budget paper number 1, page 1, statement 1, budget overview, 4th paragraph. There is a sentence which says, and I quote, "The government has also returned 69% of tax receipt upgrades above 69% of tax receipt upgrades to the budget since the PFO." So obviously, if you're able to calculate the proportion of the tax receipt upgrades that have been returned to the budget, you must know what the tax receipt upgrades are. So that's the figure I'm after. What are the tax receipt upgrades?
So, Senator, can you just give me the page number again? In the
BP1, page 1.
BP1, page 1, right. So I don't have that figure in front of me. Again, fiscal group should be able to provide you with estimates of what have been the tax receipts upgrades. And I can't tell you how that.
Mr. Marco, can you help?
Oh, apologies. Thank you, Senator. No, I think we'd have to. I think what you're asking for is to go back through some reconciliation tables. Unfortunately, I certainly don't have the briefing here for fiscal group, but I imagine they'll be able to answer your question and would probably be watching this exchange.
Sure, but I mean, the impression that I got from our exchange before, and again, I'm happy to accept my responsibility if I didn't express myself well or ask it accurately, was this is not a possible thing to do. This is kind of all too hard and all too complicated. But when you're able to say 69% of tax receipt upgrades to the budget since the PFO have been returned to the budget, there's a numerator and there's a denominator. The numerator is the amount that was returned to the budget, and the denominator is the tax receipt upgrades, and that's the number I want to know. If Treasury can put that on page 1 of BP1, it should be a question that's able to be answered fairly easily.
Sorry. So I think the exchange we had originally, Senator, I had interpreted slightly differently, and apologies if I did. I thought what you were asking were what was the contribution of the 24-25 FBO outcome.
That was a separate question.
Yeah. Okay, we're on the receipts question. Apologies, Senator.
Okay, so what should we do here? Should I return to this in fiscal group and they'll be able to answer?
I think that would be the best thing.
Okay, all right, thank you. We'll do that. I want to move on to the climate modelling that you addressed in your opening statement as well, Secretary. When did Treasury commence the process of developing a climate modelling capability?
So Treasury commenced that in early 2023.
And was that a request of government that you initiate this capability?
That's right. That was I think there was a measure in the budget that actually funded Treasury to build climate modelling capability.
Okay. And what's the objective of doing so?
I think the objective of doing so was to assist the government in thinking in a connected and coherent way about what the macroeconomic implications of different pathways to net zero would be.
Thank you. How many Treasury staff work on this?
Dr. Grant, do you have an estimate?
Senator, I might just ask Dr. Heath to...
26.
There were 26 staff, Senator.
Thank you. If there's an official who's more familiar with the information, it'd be probably just better for them to stay at the table. Has outside experts been engaged as part of this process?
Yes, a number of experts were engaged across all of the process, but I'm going to ask Dr. Heath to speak in more detail to that.
Thank you.
Thanks for the question. Dr. Alex Heath, First Assistant Secretary, Climate, Energy, Trade Insights Division. So we have responsibility for the climate modelling capability that we have built in Treasury. So the question about experts and who we consulted
externally,
with, external consultants, specifically in the context of building the model, a good way to get an idea of the experts that we consulted is to look at the acknowledgements in the report. So in terms of the macroeconomic modelling, we consulted with Professor Frank Iozzo, Steve Hatfield-Dodds, Professor Warwick McKibben, and a range of other experts in more specific fields.
Were they professionally engaged, like they were paid for their advice?
In some instances, yes. In other instances, it was a case of having a conversation about specific technical issues related to the development of the modelling.
Perhaps on notice, you could just provide a list of people who were professionally engaged, some sort of contract, and any other experts that were consulted otherwise.
So, Senator, can I just clarify?
Please,
Sorry, Can I just clarify? So you're looking for a list of people who were engaged under contract?
Yes.
And then you're looking for a list of everyone else who was engaged?
Who was consulted as part of building this capability.
Okay, so we consulted a lot of people across the public service. I mean, this was an exercise...
External, I've said external. So
you mean outside of the public service?
Correct, outside the public service.
Okay.
Yeah. That will also be quite an extensive list. So as you can imagine, there's a lot... Well, if you have a look at the technical appendix to the modelling report, you'll realise quite how much work went into forming views on some of the technical assumptions, and so we consulted quite widely beyond.
Okay. Well, do your best about on notice what can be provided. Do you have a cost of what this capability, building this capability, has been?
So I can speak to Senator. So in the October 2022-23 budget, the government provided $29.8 million over 4 years from 22-23, and within that $6.9 million ongoing, and that was for Treasury to restore capability to model climate risks and opportunities.
Thank you. And what can this modelling do? What is in scope?
So, Senator, there are a range of models. So within the report itself, the team has built an integrated set of models to take into account a range of factors that you would think about when it comes to considering climate change opportunities or risks. At the heart of that is a structural general equilibrium model. Its name is TIM. It's a Treasury industry model. That is the macro model in which we bring everything together. But underpinning that are a number of bottoms-up models. So we have models for the electricity market. There are models for large facilities and emissions reductions. There's a household cameo model. And in this, we've also had to look at global models and global scenarios. So maybe, Senator, I don't know if you've seen it, there's a diagram in the report where we tried to summarise just the scope of the models and how many there are. And we've had to integrate them to make sure things are consistent. So while they are separate models, the team has worked incredibly hard to integrate to ensure consistency across the entire modelling framework.
Thank you. Thanks, Chair. Does the modelling capability extend to estimating the economic cost of the 2035 targets and a net zero transition?
So in the modelling, Senator, we looked at 3 scenarios. All scenarios are grounded in net zero by 2050. There's the baseline orderly scenario, there's the renewable upside scenario, and then the disorderly. So what we can tell you is the different economic costs when it comes to disorderly versus orderly. But we don't have a baseline outside. Our baseline is an orderly transition scenario.
But why haven't you attempted to quantify what the cost is? Obviously, it's not a free exercise, so it's a useful piece of information for public policy to know what the cost of the 2035 target is and what the transition is.
Can I clarify, Senator, are you talking about the economic costs?
Yes.
Yeah. So in a sense, what we have shown is that the economic cost of a disorderly transition
I appreciate that
high.
there are carefully selected alternative scenarios, but what I'm just trying to understand is whether the base case itself, the economic cost, is being modelled.
I think the question, Senator, is what's your counterfactual? Relative to what?
Indeed, and 2 counterfactuals have been chosen, which I would argue are not plausible counterfactuals. There's no one advocating either of those counterfactuals.
Well, that's not the case. I wanted to make this observation. We had a decade of the counterfactual. You know, I mean, and it's very clear in the work that's been done that there's a effort in that work to try and be precise about the alternative costs of and the alternative opportunities in different approaches.
Okay, thanks, Minister.
You may have wanted to frame it differently, but the work they've undertaken has been done to advise the government about the different approaches.
Thank you. Not really germane to my question. Are there other climate models that attempt to do that?
So have other climate models used different?
No. Are there other models which have attempted to quantify the economic cost of either the 2035 targets, which I appreciate have only just been released, or more broadly of the net zero transition?
So there is other modelling looking at or comparing the economic consequences of different targets, if that is the question. The purpose of our modelling was very specifically to look at alternative pathways to achieve net zero and to understand the implications of those pathways. That was the task that we were given, and the way the scenarios that we have used were designed
So are you saying that, thank you, this is my last question. Thanks, Chair. So you're saying that you're instructed by government not to cost the 2035 target or the transition?
No, what I'm saying is that we were asked to model different pathways to achieve net zero as a part of the suite of advice that was provided into the process of the net zero plans and the formulation of the target. The CCA, using CSIRO modelling as a part of that process, had the task of looking at alternative targets and providing advice on what the economic implications of those different targets might be. And in addition to formal modelling, as you would appreciate, there's a whole range of other evidence that should be brought to bear in discussions about the path to net zero. So we've just had a conversation about the value of external experts who are working in very specialised fields for understanding what technologies are available to different industries and the like. So we consulted very closely with other departments within the public service, with external experts who had information on these very, very specific questions. So the point I'm making here is that when you're trying to understand these pathways, modelling is one source of evidence that's helpful, but other forms of evidence in terms of talking to scientists and what they're seeing on the ground also forms an important part of the evidence base.
Right.
Thank you.
Thanks, Chair.
Thank you. So, Senator McKim, we'll give you 10 minutes and then we'll go to the coalition up until the break at 11.
Thank you.
All right, thanks, Chair. Ms Wilkinson, I've got some questions about whether, and if so, how much work Treasury's done on to inform the economic impacts of climate change. And I'm talking specifically here about adaptation, not about mitigation. And it's based on the climate risk assessment that's been finally released by government. And what became clear through the Senate inquiry into what's a pretty chilling cast forward in terms of the economic and social impacts of climate change on Australia, is that Treasury doesn't appear to have done much, if any, work in this space. And the reason I say that is that there were a lot of economic impacts identified in the climate risk assessment, but all of those were attributed to external researchers, to third-party researchers. None was attributed to Treasury whatsoever. So I guess my first question is, what, if any, work have you done in this space? And if you have done work, why wasn't it reflected in the climate risk assessment?
So Treasury has done some work in this space, and that was reflected in the intergenerational report that was released in 2023. Yes. So Dr Heath can speak to the work that we have done in relation to that exercise.
Yeah. So thank you. I'm very well aware of the 2023 intergenerational report, but specifically in regards to the climate risk assessment, were you asked to contribute to that? Why has none of Treasury's work? Why was none of Treasury? I mean, it's an economic catastrophe coming down the line, and I mean, just to be clear, cleaning up after natural disasters is going to cost us, by 2050, $40 billion a year in real terms. I mean, that is going to be the third largest expenditure item in the budget by 2050. Why did Treasury have no work at all reflected in the climate risk assessment?
So, Senator McKim, it is correct that the public work that we have put out is in the 2023 intergenerational report. That work was actually cited as a part of the National Climate Risk Assessment evidence, and we did in fact extend the projections for the disaster recovery funding arrangements that we had done in the 2023 intergenerational report as a part of the evidence in the National Climate Risk Assessment. So some of the evidence that we have produced was in fact used and referred to in that document. In addition to the direct work that came from the modelling, we participated as a part of a reference group in the formulation of the National Climate Risk Assessment, particularly with reference to the economic impacts. So that was a process where, as they accumulated evidence, they used the reference group as a way to test the development of how they were making those assessments.
So what work have you currently got underway to model and to underpin advice to this government and to future governments about the impact of climate change on our economy? And I mean, I'm talking here about the fact that more and more properties, homes and businesses are becoming uninsurable thanks to climate change. I've already mentioned cleaning up after, disasters, the expenditure there going through the roof, supply chains disrupted, food deliveries unable to be made, stranded assets right across every sector of the economy, lost agricultural production, lost fisheries production. It's a catastrophe coming down the line. What work are you currently doing to inform this and future governments about policies they should be putting in place to respond to that catastrophe?
So we are doing some work to extend what we had done in the 2023 IGR, and I would note that the modelling capability that we have is suitable for answering some of those questions and not others. So you do need models that are well suited to the questions that are being asked. In terms of some of the other questions that you're asking in terms of properties at risk, we're aware of other work that's being done by other agencies that's relevant to that, and it would be, it's not really a sensible use of resources for us to replicate that. So, for example, APRA has a climate vulnerability assessment related to insurance, which speaks quite closely to that specific point that you're making. So really, the answer to the question is we are doing some work to extend work that we've previously done that's well suited to the models that we have, and we are staying as closely aware as we can of other modelling work or other analysis that's being done elsewhere in the system that is more suited to addressing some of the other channels that you mentioned.
All right. Thanks, Dr. Heath. I mean, I guess, Ms Wilkinson, just my last question on this issue. I mean, given the scale of the catastrophe economically for Australia's economy that was outlined very clearly and starkly in that report, do you think that the overall coherence of the work that's being done across agencies is satisfactory to respond to the scale of the catastrophe for our economy that is coming down the line? And because I would argue that given the evidence we've just heard from Dr. Heath, there's a range of things going on across various government agencies. Do you think the coherence of that work is satisfactory? And if not, isn't it Treasury's job to sort of pull that together and deliver that work in a more cohesive way?
So, Senator, I hesitate to say this, but not everything has to be coordinated by Treasury. It's not unusual for other agencies to have the lead in driving.
Has someone got the lead on this?
So, the Department of Climate Change, Energy Efficiency and Water have the lead on this work.
On the economic impacts of climate change?
So on all of the work in relation to adaptation, and as Dr. Heath says, we engage with them on it. We have our regulators, who are the large regulators who are involved, and we certainly have a role in coordinating this work together and working with other agencies across the Commonwealth to provide the best advice as possible.
Who's the lead agency in coordinating work on the economic impacts of climate change in the short, medium and long term on the Australian economy? Who's the lead on that? Does anyone have... I mean, that's a Treasury... I mean, I'm sorry, I may not understand the machinations of the Commonwealth Government as well as you do, Ms Wilkinson. In fact, I'm sure I don't. But that's the economy is Treasury's responsibility, is it not? And if it is, why isn't Treasury taking the lead on ensuring a coherent cross-agency response to an economic catastrophe that is coming down the line for this country?
Senator, 2
So,
minutes.
Senator, maybe I can help. So, in terms of thinking about the economic impacts of climate change, yes, we are heavily involved and see ourselves in a coordination role. but we also want to rely on other departments. You mentioned agriculture. There are other sectors that we would very much want to work closely with relevant departments on, and they would have views on the impacts on those sectors, but also more broadly. And it goes, I think earlier there was a question about all of the consultation we did. We did a lot of internal within government consultation throughout the entire process. That will continue. So the government has given ongoing funding for the capability in climate modelling in Treasury, and we will continue to build that, we will maintain it, and we will think about the questions that we will need to be well prepared to answer as those questions arise.
Thank you.
Last question.
Yeah, thanks. So specifically in regards to the 2035 emissions reduction targets that the government's released, I'm very well aware of your net zero work, so I just want to acknowledge that before I ask the question. And Minister Ayres, we're reprising an exchange we've already had earlier this week, but I did want to ask Ms Wilkinson, in the Climate Change Authority advice, they ran through a number of things that the authority said are required, and I use that word very carefully. That was the precise word that was used by the authority, required to be implemented in order to meet even the bottom of the target range, the 62%. One of those, at least, the government has completely ruled out doing, which is ending old growth logging. Minister Ayres ruled that out. And it's been ruled out, at least in part, by at least one other minister prior to this week. And when I asked Minister Ayres accurately, in my view, made the observation that if the government wasn't going to do some of the things that the authority said were required, they'd have to pick up, the abatement gap in other areas, and I think that's accurate. When I asked Minister Ayres where they were going to pick up the gap because they weren't going to implement the policy of ending old growth logging, he kind of blithely waved his arms around and said somewhere else in the economy. Has Treasury been asked by the government to actually develop a plan that maps out precisely how we're going to get to the 2035 target range? And by precisely, I mean which sectors of the economy are going to deliver what abatement over what period of time under what policy scenarios in order that that target can be met. Is that something that the government's asked Treasury to do?
So, what the government's asked Treasury to do is the modelling exercise, which maps out what are the plausible pathways to net zero by 2050, including a transition through 2035.
Yep, specifically the 2035 targets.
Yes, but the modelling, one of the things that's key to the modelling is that when you're thinking about 2035, you need to be thinking about the transition to the net zero commitment by 2050. And the government has released, alongside the modelling, the net zero plan, and I know that you had a long discussion with DQ officials on, I can't remember what day it was, around the net zero plan. The net zero plan is the government's announced plan for the next stage of progressing towards the 2035 and the 2050 targets. I think what DQ also emphasised is that there is an annual process of updating the emissions projections that take place at the end of each year, and this is an area of policy where I would expect that there would be an annual assessment as to whether the policies that are in place are sufficient and appropriate to deliver the outcomes, noting that these are quite lengthy time horizons and that, as we know and we absolutely highlight in our modelling report, technology and costs of technology are continually evolving over time. So it does make sense to be making this assessment on a regular basis. I think what's very clear on the basis of all of the consultation that we did, which underpinned our modelling, what's clear is that a critical part of the path towards net zero is what happens with the electricity sector.
That's right.
And then the electrification. And one of the things that our report does is it does try and sort of step out, if you like, from the earlier or the easier to harder to abate sectors. What's the sort of transition that will need to take place over time? And I can't imagine a world where government can do anything other than consider what are the right policies at a point in time and continue to assess them and modify them to meet the targets that have been announced. And that's
I only wish the government was doing that.
But that's what I would say. It feels like has happened over the last 3 years with policies like the capacity investment scheme, which have been developed and rolled out.
All right, we're getting close to time.
So I don't need anything further.
There's a range that's been adopted by the government.
Energy target.
There's a range that's been adopted by the government.
We all know that.
Minister, can you keep it very...
Yeah, I will. The efforts on modernising the grid and network get us halfway.
You're not going to meet your renewable energy target.
The efforts from industry to lower emissions get us 3/4 of the way there.
Okay,
in time. The efforts in terms of transport emissions mean that the 62% is absolutely within our grasp. The question here is how much further can we go? Now I know that you disagree with that proposition.
Okay, Minister, thank you.
About that.
Let's move on. Coalition, take us to 11 or a little after.
Morning again. When did the Treasurer's Office or Treasury first become aware that Mr Longo would not seek reappointment as Chair of ASIC?
I'll have to take that on notice. I know Mr Longo wrote to the Treasurer advising him that he didn't intend to seek reappointment, but I can take it on notice as to when that letter was sent.
What internal process has been established to replace the Chair?
We have commenced a process to establish a panel to consider potential candidates. We will be, I'm not quite sure, Senator, just where it's up to, but we either have or will be appointing an external recruitment firm to assist us with the search, and then we will be going through a standard merit-based appointment process, and I'll be chairing the panel. If you are after the sort of step-by-step details...
Who's on the panel with you?
So that's... I think that's not quite finalised, but I can... if I can check, and my colleagues from Markets Group who are managing this process should be able to give you an update when they are appearing, which is later this morning.
Later today, okay. All right. So what's the Treasurer's role in the appointment process?
So there's no particular role for the Treasurer other than, so I would have a discussion with the Treasurer about whether there's any particular candidates that he would he'd be interested in having considered through the merit-based process. I mean, that's what would normally happen, but he hasn't got any role in relation to the panel.
Okay, so just so I understand, so do you give a short list to the Treasurer, or does he suggest some people as well?
So I would expect that if there were any candidates that had independently come to the Treasurer's attention, he would bring them to my attention, and the panel and I would make a decision as to whether we would consider them through the process.
Do you have a candidate evaluation framework, or do you have some sort of a scheme that the panel will use?
So we would do a normal sort of assessment against the sorts of skills that we need for someone in that role.
Okay. Can you provide that on notice?
I'm happy to see what we can provide.
When do you think an external agency will be, a search agency will be appointed?
I think shortly. That would be my expectation.
Okay. And are you aware that ASIC currently has civil penalty proceedings in the Federal Court against United Super, which is the trustee of the CBUS Super Fund?
Am I aware? Look, maybe, Senator, it may have been brought to my attention, but it's certainly the case that Markets Group would be aware of those details.
Yeah, okay. And are you aware that the chair of CBUS is also the president of the Labor Party?
I wasn't aware of that.
Okay, well that is a matter of public record.
Yeah, sorry, Senator, in the sense that it's, I haven't particularly looked at the chairs of all of the superannuation funds, yeah.
I guess what I'm trying to get to is, what is the Treasurer's role in this selection process? He has put on the record before that the particular individual who's the chair of this super fund and the president of the Labor Party is his mentor. So I'm trying to get to the bottom of what exactly will the Treasurer's role be in this process.
What on earth have those two propositions got to do with each other?
Well, I'm asking what the Treasurer's role is.
But
selecting the chair of ASIC.
But commentary, I don't understand the proposition. What?
It's pretty straightforward. ASIC's investigating CBUS. CBUS is chaired by the Labor Party president, who is also the Treasurer's former employer and mentor. That's a conflict.
How on earth is that a conflict the way that you describe it? It's a smear. I understand the smear. I understand the smear and the sense of entitlement that drives that smear.
Well,
I understand the hostility to the superannuation sector and working people having a fair crack in retirement, but really here you've got to put up or shut up and actually
I'm happy to do
try
that.
and build the logical relationship between these
I'm happy to do that. I mean, as you would be aware,
of expert casual smear that you've taken as your general approach on these questions.
well, I mean, as you know, as you know, the Treasurer has
ASIC's
actually
got a function to play. They're playing the function.
Well, as you know, the Treasurer has used his role as Treasurer of the Commonwealth to sign false public interest immunity claims to cover up materials provided to him by CBUS in his role as a Treasurer.
You in an overreaching again.
It's true.
You in an overreaching
it's true.
Again.
The Information Commissioner found that. The Information Commissioner found
Senators,
that he was
can we
using
please just go back
commercial and confidence protections
a line of questioning?
improperly. It's a conflict of interest.
Minister, can you just...
Well, you're obviously very sensitive about it.
Senator Bragg, do you want to go back to a question?
So my question is, does the Treasurer get involved at the end of the process, i.e. do you give him a piece of paper with a short list, or is he involved now? It wasn't clear from your earlier testimony whether he's giving you names or whether you are doing the work at arm's length in the Treasury.
So I'm doing the work. I'm responsible for running a recruitment process, but this is a statutory appointment within the Treasury portfolio. So I will provide recommendations to the Treasurer, and as with all statutory appointments, the Treasurer will then take them through the standard process of the standard appointments processes.
Okay. Has there been any declarations around conflicts of interest in relation to this matter?
In relation to what matter?
The potential conflict of interest with the CBUS matter we just canvassed?
Sorry, in relation to the recruitment of the new ASIC chair? Well, so
the question is, have there been any declarations of potential conflicts of interest by the Treasurer in relation to the appointment of the ASIC chair?
These things are entirely disconnected from each other, Senator Bragg. I'm just not. It's an impossible question to.
It was not a question for you,
to.
Minister, with respect. So it sounds like the answer is no.
So the Treasurer is not on. So he's not part of the recruitment process that I'm running. He's not on the recruitment panel. Like all recruitment processes, the panel and I will assess candidates and will provide recommendations to the government.
Okay, I'll just finally then. It sounds like the answer is no. That's fine. The Code of Conduct for Ministers suggests that if a minister has a past personal association with the company and is required to make a decision that affects that enterprise alone or only a small number of enterprises of which the enterprise is one, the minister should pass responsibility for that decision to another minister, as nominated by the Prime Minister. So in this case, have there been any declarations made in relation to the appointment of the ASIC chair?
Not that I'm aware of.
There's just no relationship between these propositions, Senator
I think
Bragg.
the official
You've
was
got
about to answer the question.
You've got to be able to sort of set up a question where there's a sort of logical relationship between the sort of beginning of the question and the end of the question.
I think the official was about to answer the question.
Well, of course she's going to answer the question, but it's impossible to answer a question that is illogical and incoherent.
Thanks, Minister.
I'm just pointing out that it's not, you know, when the question is word salad, you can't really respond to it.
Okay, but okay, fine. Well, I mean, but my understanding is that the Treasurer has previously recused himself from the media bargaining code due to potential conflicts of interest. I mean, the Treasurer, there are conflicts that do arise in this country. You might be aware of that.
The Treasurer makes all of the appropriate disclosures and deals with all of the conflicts as anybody would expect a Treasurer would.
Okay,
And
so
just to be clear, Senator, I think that if we got to the point in the process where once I've run the panel, I have recommended candidates. At that point, the Treasurer may have an awareness of a conflict, and once it's clear who are the candidates who are potentially concerned, then that would be the point I would have thought that the Treasurer could potentially declare a conflict. It's not clear how you can declare a conflict if you don't know, or it's not like he's not part of the process of considering the candidates through this merit-based process that I'll be running.
But you are aware that the Treasurer in the past has recused himself from certain judgments due to conflicts of interest. It does happen. It's not a crime.
Aware.
Yeah.
Yes.
We're just on 11.
I think we're done.
You want to? Oh, we're done.
Oh, I'm done.
Sorry, can I just clarify then? It's not obvious. It's not the candidates that are the conflict.
It's the position of the chairman of ASIC itself that is the conflict, because ASIC is suing CBUS and the chair of CBUS is the Treasurer's mentor and friend. Do you think it would be appropriate then, Secretary, for the Treasurer to recuse himself from that position's appointment, because anybody he appoints may potentially be a conflict?
I've heard some tenuous assertions in estimates before, and that is the most tenuous relationship between things that I've heard asserted.
Sorry, then, Minister, do you think that there is no conflict of interest?
I get it. I get it.
Sorry, can I clarify for you, Minister?
I get it.
Do you personally think that the Treasurer has no conflict of interest when ASIC is suing the company in which his best friend and mentor is the chairman?
I don't understand the assertion that.
Do you not think that there is conflict? Yes or no?
I don't understand the assertion that you're making.
Yes or no? Do you think that there is a conflict of interest?
I absolutely don't understand the assertion that you're making.
You seem very determined not to understand it, Minister.
Okay, I think we're getting as far as we can on answers to that question. So let's suspend for a short break and resume at 11:15. Thank you.
Yep.
Okay. Let's get back into it. The committee welcomes representatives from the Department of... we will continue with representatives from the Department of Treasury Macroeconomic Group, just for some final wrap-up questions from the Coalition.
Chair, to assist you and officials, we've got a few more questions in this section.
Yep.
It's not just a short bracket, there's a few
Like
more questions.
10 minutes or so?
I think it'll be more than 10 minutes, yeah.
Okay, let's try.
We'll do our best
Yep.
endeavours, but
Great.
it's more than 10 minutes.
Okay, thanks. Well, let's kick off first 10-minute block with
Thank you, Chair.
Mr Patterson.
Appreciate that. I have further questions about climate modelling if the relevant officials would like to come forward. So, as you remember, when we were previously discussing this issue, I was exploring whether Treasury had attempted to quantify the economic cost of the 2035 targets or the net zero transition. You might be aware that the Business Council of Australia has done some economic modelling of the transition, and part of the purpose of their exercise is to estimate the economic cost of the transition. They put the cost of achieving the government's 2035 targets at $500 billion. Is that consistent with Treasury's numbers?
So, Senator, I will ask Dr Heath to contribute to this, but the two modelling exercises are quite different, and I understand that those numbers from the Business Council of Australia around the investment required for the transition. So, of course, we have aggregate numbers on investment, but have taken a different approach compared to their modelling exercise. But Dr Heath may be able to give more details about that.
Yeah, so I don't have a lot to add. I think the main point to take away is that the modelling exercises are quite different. So they use very much a bottom-up. They did quite a lot of consultation with their members to understand what investments would be required specifically for specific elements of the transition, whereas we have an economy-wide model. So we do have estimates of how investment is going to evolve over time, but we don't have the ability to extract what's related to very particular elements of the net zero transition.
Yeah, I'm less interested in, I understand that point, I'm less interested in extracting those individual elements with just costing the 2035 target. I mean, the government thinks this is a good idea. Australians want to evaluate whether they agree or not. One of the things they might like to know to evaluate that is what is the cost of doing so. If a peak body like the Business Council Australia, which is much smaller than the Department of Treasury and not as well resourced as you are, is able to do this, is it not possible for Treasury to do this, or is it just that Treasury has chosen not to undertake that exercise?
So, Senator, when we did the modelling report, so the task we were given was to model the pathways under 3 different scenarios. So we completed that task.
Yes, so really it's a decision of government. They have asked you to complete a particular task and not a different task. But if government asked you, could you please cost a 2035 target, the economic cost of the 2025 target, that's within your ability to do that, isn't it?
So I think I would refer, Dr Heath made the point earlier that when the government kind of made decisions and were thinking about all things around the net zero plan, they relied on a range of advice and a range of different modelling advice, including from the Climate Change Authority. So in a sense, what we were asked to do was a part of that, and this was our part of it. Yes, we have modelling capability that would let you ask and answer different questions. Not all of them. We had an earlier exchange around some questions we are more set up for under the modelling capability we have than other questions. But yes, if we were given different questions for the modelling, we would.
How about this specific question? If you were asked to cost the 2035 target, could you do that?
So again, Senator, in terms of the economic, let me clarify, we're talking about the economic cost.
Indeed.
But if you were interested in asking us to think about different scenarios...
Not asking about anything else, except could you, if asked, do a model on the economic cost of the 2035 target? Yes, no?
We would need the counterfactual to compare it to. That is what we are set up to do. So if you gave us imagine this versus imagine this, we would be able to tell you what the modelling results would give you under those 2 different scenarios.
And the Business Council report, which is a very useful report, goes to the kind of investments that are required principally from industry. That is a good thing, to have investment in our energy system, in the competitiveness of our manufacturing sector, in our transport capability. Mr Black said the target range that's been set is ambitious, and our analysis shows there is a pathway to achieving it that will require significant capital investment, major reform and exceptional collaboration between the public and private sectors. You pointed to that. It is not the same conceptually what is the investment that's required. It's not the same question as what is the cost, either in a broader economy-wide terms, or what is the cost to government. Those are quite different questions. But Mr Black's conclusion, or the Business Council's conclusion, is sets out, I think, in a very authoritative way, the kind of investment that Australia can expect as a result of policy certainty and target setting in this area.
Interesting framing. I don't think it's. I think their framing, in fact, was the investment that would be required to achieve those targets on those timelines.
He says that, and our analysis shows there is a pathway to achieving it that will require significant capital investment. That's private investment, right? And that's a good
Which has
thing.
To be paid for. Well,
that's a good thing. Investment in productive capability, in it, whether it's in our energy sector or manufacturing.
If it is investment in productive capability, I would agree. I'm not entirely
drives
sure
investment and productivity, future economic activity in the economy. The alternative, of course, is the sort of disinvestment and dust bowl that we had under the previous government, where you create that policy environment, disorderly policy environment, where multiple policy options are canvassed and then discarded by government. Then you do have disinvestment, which is what we saw in our generation capacity, a static sort of level, 4 gigawatts out, only 1 gigawatt in, but lost at the time when we needed to see investment in energy, in electricity, in new gas capability. What we saw was disorder and disinvestment, and that does have economy-wide impacts, and it has had economy-wide impacts. Treasury's modelling goes to comparing a series of different scenarios, and it's a useful tool for government to use.
It just can't tell the Australian people what the cost of the 2035 target will be, which is kind of an important thing to be able to tell them.
Well, what the modelling tells you that has been released is that there are alternative scenarios that have alternative costs.
Yes, fictitious alternative scenarios that no one's advocating.
Oh, it's pretty disrespectful to the Treasury team. It's just been outlined.
We just heard, hang on, sorry, Minister.
It's just been outlined.
Sorry, Minister. We just heard the evidence.
It's been outlined to you the effort that has gone in the agency and across government on these questions. Senator McKim asked a set of related questions that went to what's going on in the climate risk area, and what does that mean in terms of costs for the economy. I thought it was a pretty good discussion actually about the capability that's been brought to bear to make sure there is good information for government to make decisions.
It's a nice attempt at deflection, but we just heard evidence from the officials that they were asked by government to cost these scenarios. So it's no reflection on them that they've been asked to do that. It's a reflection on the government who nominated the scenarios which should be costed, which is very clear from the evidence.
I understand that you lot want to run away from action on climate. I understand that you want to run away from investment
this is just
in capability.
It does not engage my
I get the rationale behind the discussion,
Completely
but you
irrelevant.
don't impugn the government's motives here. Or at least getting on with it.
I am impugning the government's motives here, and by doing so, making clear I'm not impugning the motives of the officials who are properly following the instructions they've been given by government. Chair, Senator McDonald has further questions, but it'll be more than 2 minutes, so if you need to rotate the call.
Yep. No, happy for you to take your block.
Thank you, Chair. Good morning, Dr Grant. I have some questions also about the Net Zero Plan and Electricity and Energy Sector Plan 2025, released by the Department of Climate Change on the 18th of September, that referred to Treasury modelling. Did Treasury or any of its reporting agencies fund in whole or in part any form of market research, polling on community attitudes, studies, etc., relating to the final report?
So, Senator, not to my knowledge, but I might just ask Dr Heath to clarify.
Yes, so we worked quite closely with the Department of Climate Change, Energy, Environment and Water in the development of the Net Zero Plan broadly. It's noted in the paper that some of the electricity modelling is co-owned between Treasury and DQ, so we did work very closely on the electricity modelling. When it comes to the energy sector plan specifically, any questions about the stakeholder engagement or engagement with experts that they undertook as a part of that process would have to be answered by the energy team at DQ.
And I think just to assure you that they have, yes, they did answer that set of questions the other day.
Yes, yes. Which is why I've come back to Treasury. So you're not aware, are you aware of who else may have contributed or was engaged in drafting the reports and the findings, particularly around some of the language that was used to describe the modelling?
So I can speak to the description of the modelling and the language used to describe the modelling that's in the Treasury modelling report. The energy sector plan was the responsibility of Department of Climate Change, Energy, Environment and Water, and you would have to ask them that question if that's the...
No, it was particularly around the Treasury modelling that was included in that plan, and I'm just trying to ascertain the language used in that modelling, whether or not there was any consultants used, marketing, any longitudinal studies on consumer sentiment, just trying to understand how that language was constructed.
So in terms of the drafting of our report, we're economists, we're technical modellers, so we certainly started from that perspective. Obviously, we're aware of other literature, other discussions that are occurring, other evidence that's, I'm just pulling out a name here, for example, the Grattan Institute. We pay attention to the modelling that is done elsewhere, which would help to inform how we characterised the language in the report. But fundamentally, it's a description of the exercise that we undertook, paying special attention to the fact that it's a very, very technical exercise, and obviously we want the report to be accessible to a much broader group of people than just people who are deeply embedded in energy modelling.
That's a good idea. So you referred to the Grattan Institute. Was there any other research carried out, market research, that would have informed you?
So, Senator, can I just be clear, when you say market research, so Dr. Heath is talking about technical expertise and we're following very closely what others are saying. Is that the research you're referring to? Are you referring to something different?
No, that would be in part. I'm just trying to understand, as the modelling was established and then communicated for use in the analysis, in the report that was provided by the other department, what other external expertise you might have used, particularly in this idea of research around understanding of the consumer, what's happening out in the market, the language that's used, as we've already discussed, moving from a technical expertise to something that might be more digestible.
Thank you for that. And so Dr. Heath has answered that. I'm going to let her add to the list of people that we spoke to. But just to be clear, the report was drafted within Treasury. We didn't have any assistance with the drafting of the report. We worked hard to make sure it was accessible. It is a technical area. And in that, we had a number of conversations within government and across agencies and also outside government. So let me ask Dr. Heath if she wants to give a sense of some other external people we were speaking to or following their work. Some of this was just us following the work of others as well.
So in the report we go through quite extensively where the assumptions came from and where the starting points for the assumptions were. So we did use AMO publicly available AMO modelling to base our modelling. We also used information from the AMO Integrated System Plan to base our assumptions. We looked at reports by Australian Energy, AEMC, I'm now Market Committee. I'll give you the acronym, I can't quite remember what it stands for. So we definitely looked at expert modelling and expert scenario analysis from within those sorts of sources. Just to the point about how did we think about communicating some of this very, very technical information and modelling in a way that was more digestible. We do have a household cameo in the modelling, in the report. From memory, it's graph 4.12. So that is a way of translating all the technical stuff to say what could that mean for a particular household. So we compared the costs of the lifetime costs for a non-electrified household, an electrified household who's using electric appliances, and then also looking at a household that, in addition to those things, has batteries and solar capability. Obviously, that's a cameo, so a very sort of specific set of scenarios, and there's an extensive appendix or table in the appendix that details, that's Appendix D3, that details all the sources that we used to come up with the information to inform that cameo.
Terrific.
2 minutes.
Thank you. I am not going to be quite finished in 2 minutes. That took a little bit longer than I was expecting, so I might have to get you to come back to me after you share the call. I want to turn now to the document titled Australia's Net Zero Transformation, Treasury Modelling and Analysis, produced obviously by Treasury. I want to ask about any use or funding of any form of market research, polling, community attitude studies, etc., advertising or marketing advice to assist in the production of this document.
There were no expenditures in those categories in the production of this document.
Okay. On page 22 of the Treasury document titled Australia's Net Zero Transformation, Treasury Modelling and Analysis, it says, coal-fired generation is projected to mostly exit Australia's electricity system by 2035, consistent with the AEMO step change scenario of chart 3.4. Has Treasury modelled the impacts of power prices, domestic and industrial, to 2035 under the so-called step change scenario?
So what we have done in the document or in the modelling is to look at wholesale electricity prices or the long-term drivers of wholesale electricity prices from 2030 onwards. So if you look on page 37 of the document, chart 4.8, you can see the comparison of the wholesale price under the disorderly scenario relative to the baseline scenario and the renewable exports scenario relative to the baseline scenario. And then in the appendix, we have more detail on how those calculations were done. Fundamentally underlying these calculations is the fact that firmed renewables, even taking into account integration costs in Australia, is the most cost-effective way of building out new capacity. So that's new capacity that's required to meet increased demand for electricity in the Australian economy, and additional capacity that's required to replace ageing capacity, and most of that is in the form of coal-fired power stations.
Okay. So looking at page 37 that you were just referring to, it says under the section titled Economic Impacts, the total value of Australia's green exports, which includes green ammonia, green iron, alumina, aluminium and critical minerals, is projected to reach 80 to 93 billion in 2035 109 to 178 billion in 2050 under the baseline and renewable exports upside scenarios, supporting an increase in total exports at chart 4.5. Treasury's modelled...
Sorry, I think it's page 33, not 37.
Oh, I'm sorry.
That's okay.
Thank
just
you.
Give me a minute to find the reference.
Thank you. If Treasury is modelled in dollar terms, the value of green exports to both 2035 and 2050, can you provide for coal and LNG respectively what dollar figures you put on the decline in exports for each sector for the same 2 periods?
So can I clarify? So on page 33 we have a table that talks about the change in output for selected sectors, and then on page 34 we have a graph 4.5 that has the projected value of Australian exports, both fossil fuels and green. So you're asking...
It's chart 4.5 that I'm specifically referring to.
So the question is, can we decompose...
So you've modelled those green energy export figures. I'm asking you if you can provide for coal and LNG respectively what dollar figures you put on the decline in exports for each sector for the same 2 periods.
So, Senator, what you're asking us to split down chart 4.5. So we've noted in chart 4.5 what that line contains, which is both coal and LNG. We don't have that breakdown in the report, but we can take your question on notice.
Thank you. That's what I'm looking for, because you've been very specific in the growth of the green energy export dollars and what that does to the budget, and I'm looking for the same figures in reverse.
Yeah. Senator, Rebecca Castles, Assistant Secretary Climate Industry Modelling Branch within Dr Heath's division. So that chart 4.5, which shows the decline in fossil fuels, I just wanted to note that is from the IEA, so the International Energy Agency, and we've taken that 2-degree pathway to compare against trajectories of green commodities and green outlook. But
thank you for letting me know where you got it from. I'm just looking for the numbers that are going to affect the budget figures for the decline in exports.
Senator
and then
McDonald.
final question?
Final question. Okay, that's great. And then we'll rotate the call.
Thank you, Chair.
Thank you.
I'd like to turn then to chart 1.3 of Australia's Net Zero Transformation Treasury Modelling and Analysis. This chart's accompanied with a footnote that clarifies the data used for the growth in global clean energy investment includes nuclear energy. I want to ask, what percentage of that growth figure is global investments in clean nuclear energy?
Yeah, I think we would have to take that specific question on notice.
Okay, because obviously, given the presentation is on global energy trends, then I'm hoping you will have that specific data
quite
I'm not
easily
trying
to
hand.
be unhelpful. I just genuinely
not suggesting that. No, and that might even be something that could be obtained during the estimates today. Yeah.
We'll see what's
terrific.
possible.
Thank you,
Senator Chair.
McKim. We'll, if you can be as quick as you can. We're running a little behind, and then we can move to the next revenue group.
Questions about the fuel tax credits regime. And I believe they fit in macro. They're not detailed questions, but I've just got a couple of things I want to put to you. So your net zero sector plan for resources has listed in the 2030 and 2035 years electrifying energy sources instead of diesel for generators and for trucks. The fuel tax credit regime means the government pays 52 cents per litre used, and it amounts to a price signal of about $190 a tonne to keep polluting, while offsets under the safeguard mechanism come in at around $30 a tonne. That means there's an effective payment from government of about $160 per tonne of emissions. Would you agree that that distorts investment decisions in favour of the continued use of fossil fuels over electrification?
So, Senator, that is a difficult question for me to answer from the macroeconomic group perspective. So you asked an earlier question around the specific policies in the report, and we have been we hope, clear to say that our modelling exercise wasn't a bottom-up policy by policy exercise, and the sector plans were the responsibility of the relevant departments rather than us. Now, of course, we worked closely given that we did the macroeconomic modelling. So that question, in a sense, is one about the sector plan and the policies that underpin sector plans, which is not something I can comment on, I'm afraid.
Who do you not administer the fuel tax credit?
You could speak to our revenue group. So our revenue group
I should ask that in
will
revenue.
be able to speak to the fuel tax credit.
But in economic terms, I mean, is it a difficult question for you to answer whether or not the existence of that subsidy would distort investment decisions? Is that a difficult question for you to answer?
So, Senator, I think when the Secretary answered a similar question but a different policy earlier, we try to take care not to look at anything in isolation. So if we were asked to look at this, we would want to think about the whole system, we would want to think about that sector and what is happening in its transition, the timing of that. We would take a very whole of sector, whole of economy perspective on that question. And your questions around the tax settings part of it, Revenue Group will be able to answer for you.
All right. What about if I put the caveat of all other things being equal, Dr. Grant? I mean, all other things, I mean, it is, I don't, I guess, and this might be my bad, but I don't really understand how it could be argued that it doesn't distort investment decisions, all other things being equal. The fact that the government is effectively paying $160 per tonne of emissions when, at the same time, there's a reliance in the net zero plan, the net zero sector plan, for a pretty rapid electrification of the relevant sectors. I don't really understand why it's a difficult thing to for you to a difficult proposition for you to agree with, that it would distort investment decisions. The fuel tax credit would distort investment decisions.
So, Senator, you made reference to the all other things equal that economists do seem to rely on a little bit, but we tend to take care with relying on it. It would be unwise to look at things in a piecemeal fashion. So our role would be to look at things from an aggregate. So it is very difficult for me to comment on that.
And I think one of the lessons from the modelling that we did do, because it is this whole of economy perspective, looking at quite disaggregated sectors, is just how important it is to think about things as a part of a system rather than to just take slices of the problem. The answers to the question might be quite different when you look at the whole than if you look at the part.
Sure. All right then. I want to ask about the modelling that Treasury did that was released at the time that the government announced they were accepting the 62% and upward range recommended by the Climate Change Authority. It showed that, specifically, it showed that even in the absence of any government policies to phase out coal exports, there'll be a 42 to 47% decline in coal exports from Australia over the next 10 years. Now that's, a reasonably short time frame for such a significant decline as modelled by Treasury. So what are the near-term implications for that, particularly for local economies in coal regions?
So I might make a couple of comments and then ask Dr. Heath to elaborate on it. And the first comment that I want to make is, in all of this, we've had to make an assumption around the global target. So in anything that's affecting the export sectors for the Australian economy, that assumption is incredibly important. So if we assume that the world continues to act and meets the Paris Agreement, we would see...
Honestly, I don't think that's going to happen, but anyway... So
that is, yep. So
I think
modelling...
there's basically zero chance that the Paris Agreement's going to be met, unfortunately.
Yeah. So like all modelling, Senator, we have made assumptions. that assumption does then influence what you think happens to some of Australia's exports, particularly our fossil fuel exports. And then the second part of your question on the regions, we tried to be kind of honest and careful when it came to speaking about the regional outcomes. There is a very small section in the report that makes it clear that we cannot disaggregate our model by regions, but that we acknowledge that certain regions will be more affected by the transition than other regions. So trying to take care to acknowledge that, but did not have a regional modelling perspective. But let me see if Dr. Heath wants to.
So I agree with all the things that Dr. Grant has said. So this speaks to what our modelling has contributed to the exercise versus other evidence. So if you look at the net zero plan itself, which obviously takes into account the full set of evidence, they have quite a significant discussion about the fact that structural change has implications for people and for communities, and that the government recognises that's a part of the ambition is to, make sure that structural change occurs as smoothly as possible. There's a number of things referred to, but perhaps the most obvious is the creation of the Net Zero Economy Agency that has been specifically tasked to look at regions of Australia that are being affected by the specific structural change that you refer to, and how to think about making sure the transition of those regions is done effectively. And that's a combination of making sure there's a very orderly retirement of ageing coal-fired power plants, making sure there's alternative growth industries in those areas, and making sure that there's particular attention paid to labour force and the ability of that labour force to adapt to the changing employment opportunities that they have in their region. Yeah,
there's no doubt that those regions will need to be supported, as you've said, and in other ways. I guess the reason I'm asking this is the Fair Work protection provisions in the Net Zero Economy Authority Act purposefully excluded coal miners. And in fact only cover coal and gas workers that work in domestic generation. Coal and gas workers that work in export-oriented sites are not supported at all, and coal miners are not supported at all. Now, we tried to fix that, and Labor, the government, refused to fix that. So there are no Fair Work protection provisions for coal miners or for coal workers in export-oriented sites, deliberately, a deliberate policy decision by government not to include that. Now, given your modelling, I want to ask whether you've been asked to consider any amendments to that Act to expand the Fair Work protection provisions in it. Well, I'm sorry, but I'll give you a chance in a minute. So it's fine for you to. I just want to ask whether the Treasury have been asked. I just want to come on the
specific question, Senator McKim. That work, those questions, I think, should be. NZEA sits both. Essentially, it sits within industry. It has some responsibilities that are funded from the Department of Employment and Workplace Relations. So those questions about policy formulation would go to them.
I'm just asking whether you've asked the department to.
Yeah, I'm very happy for them to answer that question.
Oh, thank you.
But it's their exposure to those questions is very limited, and
it's a very high level question.
And the NZEA's responsibility, it falls into two parts. One is, of course, that work that you're referring to, which is all about there were 28 out of the 32 coal-fired power stations announced their closure under the previous government. These are functions of the age of those assets and the policy settings of the state and territory and Commonwealth governments. There's the future of the coal sector is a function of global markets.
I know what the Act does. I know what the Act does. So I don't need an explanation, thank you, from you about what the Act does. I'm simply asking a very simple question. Has the department been asked to draft amendments or provide any advice to government around potential amendments to that Act to ensure that the Fair Work protection provisions are broadened? Very simple question. You've said you're happy for the officials to answer it, so I wonder if, Dr. Grant, if you'd be able to answer that, please.
So as part of the modelling, Senator, and we tried to explain this a little bit in the appendix, that the modelling is in a broad sense consistent with government policy, but should not be seen as reflecting future government policy. So the modelling task around very bottom-up, kind of bit-by-bit policy is incredibly difficult to consider. So through this process, we looked at the entire policy set rather than, a large number of individual policies. So in terms of a specific policy that you're asking about, and I need to say I don't have a lot of understanding of this, but no, we were not asked in a piecemeal way to do a bottom-up build of government policy.
Senator McKim, we're almost at 15 minutes. Is there anything you can put on notice so we can move to revenue group?
I just asked
the
question I asked, and my last question then is this, and it's, to be fair, it's a policy question, so I'll address it to the Minister. So without any policy decision by government, Treasury modelling shows that by 2050 there will be a 72% decline in coal exports. 72%. So basically 3/4 of the volumes of coal exports of current coal exports. I'll say that again. About 3/4 of the current volume of coal exports won't be exported by 2050, according to Treasury modelling. Now, we've heard from Dr. Grant, and quite reasonably, that's based on a whole bunch of international considerations, so I accept all that, and that's entirely reasonable that Treasury would use those inputs to come to that conclusion. 42 to 47% decline over the next 10 years, 72% decline in coal exports, Minister, by 2050. Why doesn't the government simply put an end date on coal exports and put in place a structured plan, including amendments to the Net Zero Economy Authority Act Fair Work protection provisions that will actually help the communities and the people that are going to be affected by this massive and rapid decline in coal exports?
So there's sort of three questions in there, and I'll try and take them efficiently in three parts. The first goes to what the projections are for Australia's export coal and export gas. Of course, what is contained in here is a projection. And the actual outcome will be a function of what happens in terms of global efforts led by governments and firms to reduce emissions. Secondly, it will be a function of technology and the speed of capital being deployed to put that technology in place in global industry, in the steel industry, for example, in Japan and Korea and China and the United States, for example. And some of that will depend upon the opportunities that Australia grabs hold of to for example, make iron here in Australia, which will have the impact of securing jobs here in Australia and reducing emissions overseas. And thirdly, it will just be a function of the global market. So we know that there is a downward trajectory for coal. We're not... The Treasury team and other projections will differ, but they will have an approach that looks like that. The pace of change is uncertain. The
modelling that Treasury did.
But what this government won't do is sort of have a deficit story about these regions. These regions are amazing places for industrial investment. They have all sorts of energy infrastructure already. They have skilled workforces, and what this government will be doing is not treating them like a foreign country and running through every 3 or 4 years with placards.
Emphatically not what I'm suggesting.
Which is what you lot did in Queensland. Which is what you lot did in Queensland. What we are doing is we are directing investment into these regions. We are absolutely determined to secure their future competitive advantage in industrial terms with big new factories and big new investment right across the country in regional Australia. That's our focus, not a sort of cloth-eared approach to these regions where we lecture them from afar. Which has been the approach.
Not what I'm doing,
which is the approach that you're taking.
No, it's all about investment. It's not the approach.
It's all about investment. It's all about new jobs.
Okay, thank you, Minister. I think.
I've just got a follow-up question
in macroeconomics.
Yeah.
Okay.
So, could I just ask Dr. Heath? We just was talking about the modelling based on world targets, but given that the world reality is that we've just had record coal exports and coal consumption, and the IEA is predicting further coal consumption. Why would your modelling not have a greater element of reality in it rather than projected future wishes? And, where's the reality in that, given the coal export numbers?
Okay, so just to be very clear about what the global scenario is, we are behind all 3 of the scenarios that we do. We are assuming that the global economy is taking action to achieve a temperature increase of well below 2 degrees by 2100. That's based on IPCC and IEA modelling. So that is basically the foundation. We also use discussions with again, I refer you to the technical appendix. We have had extensive discussions with our colleagues in other parts of the public service in the context of things like coal, with the Department of Industry, Science and Resources about kind of near-term projections. And so that sort of factored into the way we've thought about how that global scenario relates to the Australian context. But I think there's quite a lot of evidence to suggest that there is ongoing momentum in terms of emissions reduction in the global economy, and that this is achievable. If it may yet be ambitious, but it is achievable. So in that sense, I think we feel quite comfortable with that global scenario. So to the question about why do we have a sense of confidence, so if you look at chart 1.1, for example, you can see that every 5 years, as the NDCs are updated, the emissions reductions associated with current policies have been declining over time.
But that's 2 separate issues, aren't they? Emissions can reduce using high quality, high calorific coal. The Minister's just referred to steel manufacturing. We've talked about global markets will determine what Australia supplies. So I think that you're picking and choosing data from the IEA where it suits. You're talking about emissions reductions and then extrapolating that to less coal when we know that low carbon gas, high calorific coal is part of global emissions reductions, and certainly not the Australian story, which is a high quality exporter, one that we're proud of and supports all these regional jobs.
So we do take the IEA scenario that's consistent with this well below 2 degrees. We do take into account that Australia's export markets are not representative of the globe. We do take into account that we do more of our exports go to Southeast Asia, so there is a recalibration on the basis of that. So I think, you know, we do take some care to ground the translation of those scenarios into the Australian context. Just looking at the latest IEA data that came out 2 days ago, you comment on coal, but actually, that report really makes the point that there's ongoing momentum in renewable energy. So the expectations are now that renewable energy capacity, so this is solar, wind.
Yes, I understand what renewable energy is.
Over the next 5 years will double. 80% of that will be solar. And then it looked at the trends across different countries, and just over the past year, there's been upward revisions to a number of areas of the globe in terms of the take-up of renewables, and that includes...
But I'm sorry to interrupt you, but with the massive increase in energy requirements around the world, yes, there is an increase in renewables, but there's also an increase in coal, in gas, in nuclear. And I think that this report then is not reflective of the Australian context, which includes a lot of coal, primarily used for steel making, for exports. I just would caution that your modelling is not reflecting the reality of what world markets and world demand is doing. And to say renewables is increasing is correct, but it is excluding the reality that energy fulfilment from other sectors is also increasing. Energy and electricity.
Yeah.
Sorry, I should say. Yeah.
So, Senator, you are really getting to the fundamental point that comes with all modelling, that it is underpinned by the assumptions in which we use, and we have tried to be incredibly open and transparent about those in the report. So simply to say to you, we have a section on uncertainty around some of this, to say we have tried to be incredibly open so that people can draw assessments of it and the conclusion it has made.
Thank you.
Yes.
Thank you. Senator Patterson, and just remind senators that we're running over time now, so if you can keep it as brief as possible so we can get to everyone we want to in the agenda today.
We share your desire to move on to Revenue Group very shortly.
Thank you.
I just want to ask some questions about a table in the appendices of the modelling. To help you, it's on page 17. It's table C2, and it's entitled Comparisons of Estimates Incentives, 5-year averages. Are you familiar with that table? Yep. It sets out a range of numbers, which I think in your terminology they're called Treasury marginal abatement prices. Is that right?
Marginal abatement incentives.
Incentive, sorry. What is in simple language, what is a marginal abatement incentive?
I'll take that. Okay, so a marginal abatement incentive, in the sense that it's used here, is fundamentally a technical feature of the modelling, but I can talk through in a bit more detail if that's helpful. So if you look through the rest of the appendix, we start with global assumptions. We start with a range of assumptions about what technologies are going to be available at different points in time for abatement, and then we overlay that, which is, as Dr. Grant has mentioned, consistent with existing policies and a range of other things. And then we add an emissions constraint. And so to the extent that the other assumptions that we have in the model do not meet the emissions constraint, what the model effectively does, it looks at the abatement options that are available at each point in time and chooses the least cost forms of abatement and works up the stack until you get to the emissions reduction that we've applied as a constraint in the model.
So in other words, this is the incentive that would be required to meet the pathway of emissions reduction.
To get the marginal abatement that you need to meet that pathway.
It's the final dollar that matters. So this starts at $67 a tonne from 26 to 30 period and rises to $293 a tonne under the baseline scenario.
Correct.
So that is the effective carbon price which is necessary to meet that goal.
Honestly, that's the most. Honestly,
just let the officials answer
the question. But it's the most juvenile question, really.
That's very.
It's a standard feature of climate modelling.
Yeah, and so let the officials answer then, Minister. Dr. Heath.
Well, Senator, I can answer. So it is a standard feature of climate modelling, and we do point out in a couple of paragraphs before the table that this does not imply the adoption of any pricing policy.
No, I'm not trying to suggest that, but we commonly measure the success or efficiency of abatement policies by the cost per tonne of abatement, right? So is that an analogous thing to the Treasury marginal abatement incentive?
So I'd make 2 points. So this is the marginal abatement
Indeed.
incentive. So if we're talking about what's
That
the average
tonne
cost, that will be a different number.
Okay,
It will be
do
a
you
lower
have the
number.
average costs?
We do not have that.
Okay, because you didn't model it, or it's not possible to, or
I don't have that to hand.
could you take it on notice at the average costs?
It's not something that we output in our modelling, Senator. We'd
Why
have
not?
to. The focus of the modelling, really. I think that's, the marginal cost or the marginal abatement incentive is a really standard way of.
Okay, but
So
Dr.
I
Heath
think
was
the
drawing my
answer is-
attention to this as an alternative relevant measure, and now you're telling me you don't actually have it.
So I think it would be very difficult to do that in a comprehensive way. So to
Okay.
the extent that we can talk about the technologies that are taken up to meet the difference between the other settings that are assumed and that constraint, we would be able to get information on that. But there's obviously a significant amount of even lower cost abatement already baked into
Indeed.
The other elements of the assumptions
Indeed,
that we're
but
applying.
as you're indicating, the most important one is the final marginal abatement, because that is what is going to be necessary to achieve the targets that the government has nominated, right?
Well, given these scenarios, so these are projections, not forecasts.
Yeah, so we're going to need to have a, in your words, marginal abatement incentive at that number per tonne in those time periods in order to achieve the government's objectives. Yes?
In this scenario.
In this scenario, yeah, which, I mean, the baseline scenario is the government's policy, right?
In this model.
Yeah, great, okay.
That's what models do.
So we're going to have to be paying for the marginal abatement $293 a tonne by 2046.
There's the leap just there from what is used to construct the model to this is what you have to do. That's the logical fallacy.
Well, explain it to me then, Minister. Where's the gap?
Well, the gap is that this is a model. Underneath the model are a series of assumptions.
Yeah.
The assumptions are standard tools, and they don't represent a decision by government or a policy from government that can be characterised the way that your team have been wandering around Senate estimates trying to characterise it.
No, but Minister, this is your model of your scenario on your assumptions. This is what will be required to achieve your targets.
Treasury's model, developed by them to inform the decisions of government in terms of what is our approach to policy in this area, makes a series of assumptions.
To achieve the government's stated policy objective.
It's a standard feature of the kind of advice and the kind of expert economic work that this group does to build in a set of assumptions that go to all of the questions that have just been canvassed, but it doesn't go anywhere near meeting the threshold that you and your colleagues claim it does. And it's
if this model can be relied upon,
it really
Minister,
reflects a sort of determination to run away from action on climate.
No,
a determination
it doesn't, Minister.
to indulge the internal politics of
that's wrong,
your
Minister,
show, which
and
is
irrelevant
diabolical.
and not helpful to us getting to the next part of the programme.
But that's the problem. But that's what's driving.
Is just political rhetoric.
The assumption and the logical fallacy in your question.
If you want, Minister, this is not conducive to answering questions.
It's all about an incapacity to grapple with this set of problems.
It's really not, and it's really tiresome. I'm just trying to understand the government's modelling, right? You've put out this modelling, you've defended this modelling, you've said this modelling is of the government's preferred transition. So I'm just trying to understand, we will have to be paying $293 a tonne for the marginal tonne of abatement in order to achieve the government's transition.
Senator, one of the points that we make in the report is that as you get further out to 2050, there's greater uncertainty around abatement opportunities, but also around what value of those abatement opportunities are. We have I think Dr. Grant and Dr. Heath mentioned the treatment of uncertainty, which is chapter 2.3. When we did this modelling, when Treasury did this modelling in 2011, 2009, in that modelling, we didn't even have EVs or batteries.
Sure.
So that's how technology can evolve over
Indeed.
time.
But all we have is the information we have today, all we have is the model that you've done with the assumptions that you've made. And I'm asking you questions about the numbers that you have produced. I'm not inventing these numbers; they're not mine; they're yours. And they say, based on what we know now, based on the assumptions you've made, based on the government's preferred pathway, we're going to need to be spending $293 a tonne by 2050 for that marginal final tonne of abatement.
These are projections.
No,
This is your
the
projections,
same methodology,
which I'm asking you about.
This is the same methodology that was used by your team.
I'm not disputing that, Minister. I'm happy to accept that. Let's take that as read.
It's never been regarded, an assumption in the modelling has never been regarded in the way that
I don't understand why you're so reluctant to confirm your own numbers. This is not some third-party group. This is not my numbers. These are your numbers.
They've just gone through the assumption.
Yeah.
My objection is the political claim that you make.
I'm yet to make a political claim.
but
I may well, Minister.
See it coming
but I'm
like
yet
Christmas.
to.
You'll be more artful than your colleagues. You'll go round and around the mulberry bush for a while.
Your praise means a lot to me, I'd be more interested in an answer to my question.
But some of the sort of lower brow attempts at this argument have made the same sloganeering approach.
I've already been re-elected for 6 years. That would be very damaging to me internally, Minister. But let's just stick to the actual questions and the actual numbers here.
Okay. Senator Patterson, have you got any more questions?
I'd like an answer to my question, then I'd be very happy to move on.
Great.
So is it true that under this model, under the assumptions that are made, under the government's preferred pathway, that we will have to be paying $293 a tonne for that final marginal tonne of abatement? Yes or no?
So the model does have a marginal cost of abatement based on how it operates to find that marginal abatement technology based on all those assumptions. That is $293 per tonne.
Thank you.
That is policy.
I'm done, Chair. Thank you.
Thank you. Senator McKenzie, we're trying to keep it to 10-minute blocks or even shorter if you can.
I will be out of your hair in under 10 minutes.
Thank you.
Thank you, and thanks for having me. I was in the infrastructure estimates earlier this week looking about the modelling that was underpinning the sector plan, which says by 2035 fossil fuels will only be used in very specific circumstances when it comes to light vehicles, passenger vehicles. And I guess I'm marrying that with the Climate Change Authority's requirement, and I see this as not a nice to have, like to have, but a requirement to reach the 2035 target, that half of light vehicles sold between now and 2035 will be electric vehicles. Have you built that requirement by CCA into the modelling that you've done?
So what we have done in terms of assumptions around EVs and embedded them in the model, as we've discussed. So just for the first point, we did consult quite extensively with Department of Transport.
Yes, they acknowledged that.
Yep. So just to make the point that, we haven't just done it in isolation. We've talked to people who've have expertise in the area. What we have is, and it's in the appendix, is we have an assumption that there'll be price parity between internal combustion engines and EVs in 2030 for light vehicles. And that is the underlying assumption, and the rest of so the specific question that you asked was, are we requiring there to be 50%?
No, that's the assumption as I understand it from the CCA around getting to the 2035 target. So in the executive summary, there's a whole list. Senator McKim was prosecuting it earlier about when he's concerned about ending native logging. Mine is that half of light vehicles sold between now and 2035 will be electric vehicles.
So we have not imposed that as an assumption in our modelling.
Right, thank you, thank you. Is the assumption you imposed, because the evidence from the Transport Department was that the assumptions they gave you were not the assumptions that are in your modelling, and I would like to understand the difference between those.
So I think the difference between their assumptions and so we have used their assumptions.
Yes,
so
that
starting point is the same. And then as we described, or as I described in terms of how the modelling works, we start with a set of projections, we start with a set of...
then you go out to consultation?
I was actually going to go to the technicalities of how the model works. So what the model does is it says this is the starting point. Is there an emissions gap? And if there is a gap between... So then we impose the emissions constraint. And so the model actually does some extra work, particularly as you get further into the future, to find additional abatement than what is available from the current policies and the current projections and assumptions. So in that sense, our model is doing some extra work that can mean that, again, particularly as you get further into the future, what our modelling produces as an output could be deviate from the assumptions that have been given to us, in this instance by the Department of Transport as an input.
Thank you. So was that modelling provided to the Climate Change Authority to support the conclusion around half of all new car sales would need battery EVs to get to zero emissions?
I don't think we did not.
No, you didn't feed into that?
No.
Okay. Industry has said the government's existing aspiration underpinned by the new vehicle efficiency standards legislation will be impossible. Have you seen those reports?
I have not personally read those reports.
No. Well, maybe on notice. Industry says that that will require in excess of 6 million new cars sold by 2035 to be electric, and that is an impossible target for industry to set. And so going to, I think, my colleagues have prosecuted the lack of credibility around these targets and our ability to get to them within the transport sector. There is no evidence to suggest, and so I'm interested in the numbers you used that would suggest in your model for the transport sector. I know it's an economy-wide model, but there's lots of bits of the economy, how you got there, because industry's saying it's impossible. And the Climate Change Authority chair has gone on about Norway being the example, but Norway imposed a tax of 25% on regular cars in order to drive the uptake of EVs. And I want to understand what your plans are. Or your projections are.
So just to the point about the international evidence, I mean, I think there are other countries in addition to Norway that have achieved penetration rates of sort of 50 to 60% and done that within a kind of 3 to 5 year time frame from a penetration rate that's similar to what Australia currently has in terms of new vehicle sales. So just in terms of evidence that those sorts of changes are feasible, at least in those circumstances. I might pass to my colleague, Ms Castles, in a second, but our model doesn't, it looks at the transport sector, so it doesn't translate the changes in output and the emissions to the number of vehicles, which I think was the point of your question. So we don't have a number of vehicles that sits beneath.
So there is no number of vehicles. So your model doesn't marry with half of light vehicles sold. Okay. So you haven't gone to the number of vehicles that need to be sold. Sorry, and I was looking at my phone. I apologise.
That's okay.
What did you say before you said that?
No, that's correct. There is a chart in the report, chart 3.5, which does show the emissions trajectory of commercial transport, but also passenger vehicles. We see both coming down, but commercial transport not as rapidly. Senator, over the last 5 years, we've seen small-scale light vehicle EVs, new vehicle sales of those increased around tenfold. It's still
yes, so the early adopters are in the market.
Sure.
I'm not arguing with that. But the industry who don't care if they're selling an EV or a Hilux are saying the demand isn't there, and that is also demonstrated from overseas.
We are seeing rapid demand.
Okay,
Our
I can see we're on a road to nowhere here. That's okay.
They are quite conservative.
And in the interest of time, can I just ask one last question then? Who did you consult in industry about these figures or these aspects of your model?
So we didn't do any direct.
You relied on.
But we did consult extensively with Department of Transport, and they obviously have the.
No, they didn't talk to industry either, so that's okay. That answers my actual question. Thank you. Thank you, Chair.
Thank you. Okay, I think we can say goodbye to the Macroeconomic and International and Foreign Investment Group now. Thank you. And the committee now welcomes officials from Department of Treasury Revenue Group, please.
You can do yours first and then if you do payday super, have you got the payday super one? But I don't know how we're going to fit it in, like just really short, sharp.
So I'm just going to try and do one on tax cards, one on...
Where are our revenue people?
Yes, I thought that.
We'll go to you guys. We'll go to you guys first.
You're up first, Kato.
Yep.
Okay, are we ready to go?
Possibly waiting on one more person, but we shouldn't delay for that.
All right, I'll kick off. Welcome to representatives from the Department of Treasury Revenue Group. I'm going to Senator Patterson for your first 10-minute block. Thank you.
Thank you, Chair. Has Treasury done an analysis of the contribution of bracket creep to the budget?
We have looked at the effect of bracket creep. It was probably something we looked at quite intensely when we gave advice in relation to the Stage 3 redesign to make it the cost of living tax cuts. That advice is public and on the Treasury website, where we compared the impact of the bracket creep under the two scenarios. But it's probably something we just keep aware of. So in that sense, an analysis, but if you had a more particular thing you were interested in.
So you can't tell me how much additional revenue has been collected as a result of bracket creep?
We look at average tax rates on a regular basis, and we can talk about, probably Dr. Rawlings can talk about that. But whether we've calculated the amount of bracket creep generally, I don't think so, but I'll just see whether Dr. Rawlings does know.
Louise Rawlings, First Assistant Secretary, Tax Analysis Division. We do routinely look at bracket creep, and as Ms Brown says, there are a range of ways to define bracket creep. So I don't have the number to hand on sort of the volume in the budget, but we do, as I say, look at average tax rates for average workers and various definitions.
What's your preferred definition? What's the most accepted definition of bracket creep?
There's actually not agreement in the literature around the exact way to define bracket creep, but we do it, as I said, in a range of ways. A way we really like looking at it is in terms of the average tax rate for the average worker, and we have done a lot of that analysis on that over time. There is also sort of just a broader definition of bracket creep around all the tax paid divided by, all the income, all the income divided by all the tax. So there's various ways to define it.
What would best illustrate whether or not it had contributed to higher federal government revenues? What's the best measure to draw that out?
As I said, there's a range of ways to do it. We do, we update our forecasts twice yearly, and in that we look at, we take the parameters from our macroeconomic colleagues, we look at collections, we look at policy and so forth, and there's different ways to disaggregate it, but it's quite difficult to disentangle.
I mean, routinely newspapers publish figures saying bracket creep has contributed X billion dollars to the federal budget bottom line. Surely you have a way of quantifying it that is generally agreed.
As I said, we do take, wage growth figures, we look at inflation, we look at income growth, but it depends on, the rate of inflation you choose, the rate of wages growth and so forth. So there are ways to do it, but I don't have the number to hand.
Isn't the challenge here, when you say extra, right, is the question really, has Treasury costed Mr Taylor's proposal this morning?
No.
Is that really the question?
That's not the question, Minister, as you well know. Continuing with the questions, perhaps you can take it on notice and come back to me on notice with your best estimate of the contribution of bracket creep since May 2022 to the federal budget bottom line. Going to the budget papers, BP1, page 73, it's within Statement 3, Fiscal Strategy and Outlook, it's got a range of charts. I'm particularly interested in chart 3.5, payments and receipts, and the forecast going forward. Particularly, you've obviously got the first 4 years of the forward estimates and then the medium term. I'm particularly interested in that upward slope of the revenue curve in the medium term. What causes that upward sloping revenue in the medium term?
So as you indicated, Senator, we do break out in the budget the forward estimates period, and then we don't disaggregate the medium term. And there are a range of factors that will contribute to increased receipts over time, and as you say, bracket creep is one feature of the tax system, and from time to time we know that governments return bracket creep, so it is part of that in the medium term.
Would it be fair to say that a substantial contribution to the estimated revenue increases is from higher income tax receipts?
I'd have to take that on notice, but it is a feature of our system that we don't index rates and thresholds. So Indeed.
So I'm not talking. This is not crazy talk, right?
No.
This is a reasonable assumption that a fair proportion of that increased revenue is from unindexed income tax rates as people are pushed into higher brackets over time, otherwise known as bracket creep.
It's a feature of the tax system.
Indeed, yes.
Yeah, as real incomes increase, I mean that is a good thing. It's a good thing for people who get real income increases. And
well, it's certainly good if
there's assumptions built in about the future. I mean, we that's one of the reasons that the government's focus, of course, is all about improving people's incomes.
Thanks, Minister. It would certainly be good if it was a result of real income increases. But the point about bracket creep is it's not due to real income increases, it's due to inflation.
Earn more and keep more of what they earn.
Yes, we all agreed on that. Thanks, Minister. So these forecasts, they reflect current government policy, do they not?
That's correct.
Thank you. So is it right to infer from this graph then that the current government's policy is to close the deficit over the medium term of about 1.5% of GDP through personal income tax collection?
That's a matter for government about what future intentions are around policy.
Okay, but there are forecasts which you've published in the budget papers based on current government policy, which shows that the deficit will only close over the decade through higher receipts, and we have agreed that that is substantially due to higher income tax receipts. So is my assumption not correct?
Our fiscal colleagues will be on later on. They look at the budget as a whole. We obviously look at the receipts and revenue side of things.
Maybe you can help me with this then. What does, let's for argument's sake, say that is largely bracket creep of 1.5% of GDP. What would that mean for a taxpayer?
I don't have those numbers to hand, but I do have the average tax rates, as I said, for the average worker, and I can give you those figures out to 2035.
That'll be helpful, thank you.
As at the 2025-2026 budget, the average tax rate for a worker on average earnings was not expected to exceed 23-24 levels until 2031-32, so 2 years later than under the cost of living tax cuts. So the figure at the moment, yes, so basically you see growth under the combined tax cuts in 36, you would see the average tax cut for the average worker hit 23.6%.
Right, so the first number was, say it again for me, 23 point...
it'll be 23.6 in 2035-36.
Yep, and the second number was? So I want to make a comparison from what they're paying today to what they would pay in 2035.
In 25-26, it'll be 20.6.
20.6.
I'll resist the urge, of course, to point out, Senator,
3% increase.
You went to the election with higher personal income tax requirement. That was your policy, and the outcome, had you been elected, would have been a higher proportion than whatever the official is about to respond to.
Thanks, Minister. But as you know, we weren't elected. Elected.
The modern Liberal Party went to the election arguing for higher personal income tax. That is going to be hard to defend, and it's going to get harder every day. I wouldn't be drawing attention to it if I were you.
Can I raise a point of order?
I wouldn't be drawing attention if I were you.
Can I raise a point of order? I wonder whether these political speeches are really necessary, Chair.
It's not a point of order.
I'll keep an eye on things. Thank you, Senator Bragg.
Thanks, Chair.
Keep
I appreciate
going,
that.
Senator Patterson.
As you know, Minister, you won the last election. We lost the last election. That's why you're on that side of the table and I'm on this side of the table. And in budget estimates,
income tax
we ask questions about the government's budget, not about
without any
hypothetical
sense of shame.
alternative
Without any
budget
sense of
which will
shame or
never be implemented.
self-awareness. Yes.
So, just coming back to the questions. So, as I understood it, but there was a bit of crosstalk, the average taxpayer's average rate of income tax now in this financial year is 20.6%, but it is expected to rise by 2035 to 23.6%. In other words, a 3% increase.
But as I said, so the tax cuts that were given reduced that time period that it would grow.
I know, but I'm not asking about those. I'm asking about what the projections are in the budget.
That's assuming that there is no further bracket creep returned.
Indeed, and all I can do is take the government at the policies that they have at the moment. Maybe they will enact further tax cuts. We will see. But I'm just asking about what the budget papers say.
Senator, the budget papers in page 12, box 1.2, has quite a long discussion of the benefit of the tax cuts for the Australian taxpayer. In there is an average tax rate chart that shows the fall from average tax rates as a result of the government's tax rates. It does show it over 22, 23 out to 35, 36, and it shows it increases as you would expect with a progressive tax system.
Yeah, indeed. But we've taken that as read. They've been legislated. What I'm asking about is moving forward from here. Maybe there will be future tax cuts. Let's see. But as we currently stand, there will be an increase from 20.6% average tax paid for an average taxpayer now up to 23.6 by 2035. That is right, is it not?
That's what the budget papers say, Senator.
Thank you. Thank you. That was what I was seeking.
Thank you.
I'm happy to share the call.
That'd be great, thank you. Senator McKim, 10 minutes.
Oh, thanks. Earlier this year, post the election in June, Dr Chalmers indicated publicly that he intends to legislate the better targeted superannuation concessions legislation. He specifically said his preference is to legislate the plan that was announced 2.5 years ago. It's been in a couple of budgets now. The legislation obviously hasn't passed through the Parliament. Have you received any direction from the Treasurer in regards to that bill?
It continues to be government policy to target the better superannuation tax concessions.
Yep. Specifically in the way that the previous bill did?
The bill isn't yet legislated.
No, I know.
But yes.
It's not yet been tabled post the election, which is why I'm asking. So does it remain government's policy to legislate in the same way as the previous bill did?
It remains government policy to target better targeted superannuation concessions. They are still committed to.
Yeah, it's more of a political answer, Senator, and the answer is yes.
It is. It is the government's. It remains the government's policy to legislate in the same way.
Yes.
So where's the bill?
Well, Senator, there's a very busy legislative schedule. It's a government that wants to. It's a government that wants to get things done, but is aware that what reform requires is prioritising legislation in a way that's designed to achieve maximum effect and maximum momentum through what is a challenging Senate chamber that requires a plurality of votes in the Senate. We'll continue to work with you and to argue the case, and continue to work with our friends in the coalition and everybody else who wants to engage with us about this. I'm very confident that reform in the way that's been described will make its way through the Parliament.
All right, thanks, Minister. So, but just to be clear, though, you've just confirmed that it remains government policy to legislate better targeted superannuation tax concessions in the way that the previous legislation did. Correct?
Yes.
Yes. Thank you. Has the Prime Minister's office been in touch with Treasury in regards to this legislation? Ms Brown?
There have been some conversations with the Prime Minister's office. It's probably not unusual for that to occur from time to time. It remains unlegislated, and so stakeholders continue to raise questions about the bill, and that has, I believe, led to a conversation with the Prime Minister's office.
Mr McKenna, I'm only looking at you because Ms Brown sort of maybe just did a little sneaky hand pass there, but I mean, if you've got anything to add, feel free.
Brendan McKenna, Acting First Assistant Secretary, Retirement Income and Superannuation Division. I don't really have much to add. No, sorry.
All right, no worries. Thanks very much. Well then, Ms Brown, perhaps I could ask you, I mean, what was the nature of the PMO's engagement with Treasury in regards to this legislation?
I don't think it's appropriate to go into the conversations. It was about the better targeted super concessions and the concerns that stakeholders have raised, or issues that stakeholders have raised about the bill. Not uncommon with unlegislated measures.
All right, thank you. So I'll move on from asking about the PMO's engagement, but I do want to ask you, I mean, it's been public that some stakeholders have raised concerns with this legislation, so I don't think it's unreasonable to ask you about that. So what are the concerns that have been raised, and by whom?
Well, I think the concerns are probably reflected in the submissions that were received on the exposure draft legislation.
Okay, all right. Is Treasury working on any amendments to that legislation?
That's a decision of government whether there's amendments, but we will. So the answer is not an amendment.
You're not.
We will continue to talk with stakeholders as we do. That's quite common that we have those conversations until the bill is legislated, and even during the passage of the bill, talk to stakeholders.
But your evidence is at this stage, Treasury is not working on any amendments to the previous legislation.
There's been no decision to amend the bill.
By government. No, I understand that. So just to be clear then, there's obviously a fairly significant degree of public interest in this legislation, but your evidence is that, well, perhaps I should ask you, has government asked you to make any amendments to that legislation?
So, Senator, we don't normally indicate what government's asked us to do. It would frustrate our ability to advise government if we have to indicate anything.
No, hang on, I'll come to you in a minute, Minister.
I'll just make the point, though. I've sort of been a bit generous at not intervening here. You've gone to questions about engagement between the Prime Minister's office around stakeholder questions. Fair enough. But Treasury has to be in a position of being able to provide advice to government. They're doing that work in the context of what's been described to you very clearly. The government's policy position is as described.
Sure, I appreciate that, thank you. But just to be clear, Ms Brown, you have given evidence that that Treasury is not currently drafting any amendments to that legislation.
Drafting? No.
You're not? No.
You have 2 minutes, Senator McKim.
All right. Thank you. Minister, when are we going to see... well, perhaps I could ask, finally, Ms Brown, has Treasury provided, I'm not asking what the advice is, but has Treasury provided any formal advice to the Treasurer in regards to that legislation in this term?
Treasury has provided a lot of advice on that legislation. As I say,
you have.
It remains outstanding, and the office, not surprisingly, wants to understand stakeholders' concerns. So
you have provided advice to the Treasurer?
Around the bill, yes.
Yeah. Could I just ask you to take a notice? I know you won't provide the details of that advice, that's fine, I'm not asking for that. If I could just ask you to take on notice the dates on which you provided advice to the Treasurer in regards to the legislation.
It's been fairly... you've got a time period that you're interested in?
Post the election.
Post the election,
Yep.
all right. Sorry,
Yep.
I think by the sounds of it, Senator McKim, there's been lots of engagement about a prospective legislation. That's what you'd expect.
Oh.
So I only say that to say it might not be possible.
I appreciate it. I've just asked if you've taken on
in the
notice.
form that you've asked.
Just asked if you've taken this. All right, thanks. So just on one other matter, and then I'll be done for revenue. Thanks, folks.
I think you're about to say forever.
Oh, no, for revenue. No, I'm not announcing my retirement, Minister Esmus, though you might be eagerly awaiting it. I don't know. I wanted to ask about the performance test. In the last term, there was a sort of a lengthy engagement with stakeholders run out of Treasury in regards to the superannuation performance test. Could you just give us an update on where that's at and whether there's any timelines that Treasury is working to provide some advice to government?
So the Treasurer made comments in the Economic Roundtable to look at the performance test, but I might ask Mr McKenna to go into a bit more length for you on that.
Thanks, Mr McKenna.
Yeah, that's right. Senator, stakeholders raised concerns in the context of the Economic Reform Roundtable and in the lead up to that, that the annual super performance test discourages super fund investment in certain areas, including housing. The Treasurer announced that the government would have another look at that on the 21st of August. And we're in discussions at the moment with the government about the kind of timing and the nature of that process, but we haven't commenced the process yet.
This has been underway for years now, Mr McKenna, the consideration of the performance test. Are there any time frames or timelines that the Treasury is working to?
Well, as I mentioned, we're in discussions with the Treasurer, with the government at the moment to exactly kind of settle the kind of process and the timelines. There was a previous consultation process.
I know.
And that raised, I guess, a variety of views from stakeholders about the way forward. Those submissions are public, so you can kind of see those.
I'm aware of
that
those.
process has happened. I guess we're now talking about a new process.
A new process.
We're discussing with the government what that will look like.
So a new consultation?
Well, a new... until we know what the government, how the government wants us to take it forward, I can't tell you what it is.
All right. Okay, thanks. Have you provided any advice to the Treasurer about what the process might look like?
We have, yes.
You have?
Yep.
And could I ask when that was?
It was very recently.
Post
this week.
This week.
Yep.
All right, thank you.
Senator McKim, are you...
Yeah, I'm very nearly done, Chair. And
thank you. Just try and get out...
No, I appreciate that. Thank you. I'll be very brief. So, I mean, it's my view that the current performance test does hinder investment into some really important productive sectors of the economy, including housing, but also into clean energy infrastructure. Could I also put to you that the current test causes herding, particularly into the ASX 200, which is a very emissions-intensive index. I mean, it's got BHP, it's got Whitehaven, Glencore, Santos, Woodside. Like, it is an extremely emissions-intensive index. The RBA has indicated concerns about herding as a risk to financial stability. Has that come up at all for Treasury in the consultations? Have you provided any advice to the Treasurer in regards to the potential for the current performance test to encourage herding, and does Treasury share the RBA's concerns that herding is a risk to financial stability in Australia?
So we haven't started this process.
But you've already done one that's gone for years, Mr McKenna.
We've done
so
one
you're going again
previously,
now,
but we're having a fresh look. We have heard, I guess in the context of the roundtable, we have heard other stakeholders raise similar concerns. Some other stakeholders have raised similar concerns. So they are things that we've heard.
Mm-hmm.
I guess pending the discussions on the way forward with the Treasurer, they would be things that we would kind of take into account through that process.
Thanks, Senator McKim.
Thank you.
Just before we move on to Senator Patterson, can I just ask which stakeholders were the ones that raised the performance test?
I would have to take that on notice, sorry, Senator.
Would it be the super funds?
I think super funds have, Senator, that's right, but I think the Property Council also has.
Yeah.
Okay, but we can take that on notice.
Chair, for your time management, I have only one issue to pursue with revenue, and it'd be probably better to release them rather than bring them back after lunch. So if I can quickly get through that.
Yes, and then I think, pending anyone else, we can do that.
Great, thank you.
Great.
My questions are following up Senator McKim's questions about the unrealised capital gains tax. Has the government asked Treasury to model how much revenue would be collected under alternative designs to the current design?
Again, I think that goes to Treasury needs to be able to do its business without, so it can advise government. So I'd prefer not to indicate. I don't think it's appropriate to go through what work we are and aren't doing.
I understand why you prefer not to, but Senate Estimates has well established processes for what questions can and can't be answered, and advice to government is not an accepted ground to refuse to answer a question. So I will ask again, have you modelled alternative revenue under different versions of the bill?
So I think it's reasonable and wouldn't be surprising for us to want to understand concerns that people have raised, and as part of that, we may have looked at what might be the impact on revenue as a result of a suggestion or a comment.
You may have, or you have?
I'd have to take that on notice. I suspect we have in some cases, just in order to understand the issues better.
Sure. Is there anyone else at the table or in the room who was involved in the modelling who could answer that question? No one else who knows? No one else has been involved in modelling? You do have to answer the question if you were involved.
I think the official has taken it on notice, and she's entitled to do that. And I think she was in her evidence, Senator. She of course indicated that in doing their work and understanding, all sorts of permutations of all sorts of interactions between the tax system and incomes and asset prices and all of the things that it's Treasury's job to do to understand how that world of the interaction between the tax system and the economy works. Then multitudes of work is done. She also indicated that she's reluctant, for all of the right policy reasons, to engage in speculation about what advice is provided to government.
I haven't asked for the content of the advice, Minister.
And so she's taken it on notice, and that's entirely appropriate for her to do.
Thanks, Minister. I'm asking about the process. I'm actually not asking about the content, right? We can have a separate conversation if we get to that, but at the moment I'm just asking about process. And what I would like to know, to clarify my intentions, Minister, so it's clear for you as well.
And she's taken it on notice, yeah.
Thank you, but I have a follow-up question, which is, in your answer, Ms Brown, you indicated that as part of your consultation, you've modelled alternative revenue. And I would understand why you might do that in your interactions with stakeholders or as a result of your interactions with stakeholders. What I would like to know is whether the government has asked you to model alternative revenue under different designs of this policy.
Sorry, just to correct, I don't think we've done it. Stakeholders have raised concerns with us. In order for us to understand it better, we might have done some modelling, and that is for us to provide good advice to government. In terms of government requests to us, again, I think that kind of goes to it would affect our ability to provide advice to government if we're always indicating what government has asked us to do.
I've not yet asked you what they might have asked you to model, what the specifics or the particulars are, but just whether or not you've been asked to model alternatives, and that's an entirely reasonable question that is routinely answered by departments in these forums.
Yeah, look, I can think of one instance, yes, where we have modelled in order for the government to understand better.
Exactly, and I'm not suggesting there's anything
improper about that. Whether that was at the
that.
government's request or whether we did that, I'm not sure.
Right. So Treasury has provided options to government, alternative options. If you design the tax in this way, these would be the implications for revenue.
I think you're putting words in my mouth.
Well,
Bill.
please correct me.
I haven't talked about options. I talked about trying to understand stakeholders' comments.
Right. So help me understand what you mean by that. When you say you want to understand stakeholders' comments, are you costing stakeholder proposals so the government understands the implications of following stakeholder recommendations?
So we're just trying to understand the implication more fully of stakeholders' comments.
Yeah, exactly. So stakeholder Y says we would prefer the policy be redefined in this way. Government, this is what the implications of that would be for revenue, for example.
So I don't believe we've done a modelling of what someone has proposed in that way. I was thinking more of a case where a stakeholder has indicated that maybe they shouldn't be subject to it.
Of course.
What would be the impact of that?
Yep.
That enables us to provide advice to government.
Right.
I think the government has always indicated that what was proposed is the simplest and easiest way, and that's based on our advice. But yes, we have looked at stakeholders' comments to try and make sure we do understand it properly.
Okay. All right. And just back to Senator McKim's line of questioning about amendments, has the government asked you to draft alternative versions of this policy?
Drafting? We haven't been asked to draft anything. Okay. Obviously, there's, as you should not be surprised, conversations all the time around, again, stakeholders' comments and what that may or may not mean. I don't know whether we're talking at cross purposes, is that alternatives or not, but drafting of legislative amendments have not occurred.
Yeah, I appreciate that's kind of a final point, so I'm not too concerned on the technical drafting. Has the government asked you to come up with alternative models for this policy?
Again, it goes to asking me to indicate what government is thinking, which is making it very difficult for me
the government hasn't, as the Minister said, the government hasn't made any decisions, right? And I'm not asking you to tell me what the government's decisions are, other than they stand by the policy that they have. What I am asking you to tell me is, has government asked you to look at alternative versions of this? That's just what I'm seeking to understand. Not trying to imply anything improper about that. That would be routine. But I just want to understand, has that happened in this instance?
But Senator, I'm not sure whether we've moved from one set of policy area to another, because Senator Kim was has traversed a couple.
It's unrealised capital gains for the avoidance of any doubt.
In relation to that, I mean, the answer's sort of the same, right? The answer is officials indicated that she'll take that question on notice because it goes to advice to government and for the reasons that she set out. As you said, there are occasions where questions about, when has advice been provided, or what kind of advice can fall within the province of this discussion. Mostly it doesn't, and she's taken on notice to make sure that she can provide you, be as helpful as she can possibly be.
In the interest of time, we'll accept that it's been taken on notice, and I look forward to what you can provide on notice. I wonder whether, as part of the government's consideration of this policy, has Treasury considered or modelled in any way the second round effects of this policy? So you're talking about stakeholder feedback. For example, people have said this will have implications for start-up ability to raise capital. Have you tried to quantify any of those effects?
So yes, Senator, that's some of the modelling. I don't know if we'd use it modelling, but we have tried to understand to what extent do self-managed super funds invest in venture capital? Given that stakeholders have raised comments about that, we have tried to understand the quantity and try and quantify that. So yes, that is part of our usual process. Mr. McKenna might have the exact. It's usually quite a small proportion.
It is quite small. I'm not sure I have the exact numbers with me, but the amount of investment through superannuation in venture capital is a very small share of superannuation, like the total pool of super assets.
Yeah, is that including startups broadly, or is it there a specific definition of what constitutes venture capital?
I think it's very hard to identify venture capital within kind of the set of information we see.
Yeah.
But even within like a broader pool of like the kinds of unlisted investments that that venture capital would fall within, it's still kind of...
It's
if you could provide that on notice, that'd be helpful.
It's not, I mean, they'll endeavour to support... It's not unusual for a department or a treasury to, a stakeholder makes a claim, it's hard to verify what is real about that claim, whether they make it sincerely or apprehend the impact of...
I wouldn't suggest otherwise. I wouldn't suggest otherwise. Just trying to understand the process, and I'm trying to be as efficient as possible given time, so we can let people go have lunch. What about for the property market? There have been claims made by stakeholders about the implications for the property market, given some people might have to divest property from their SMSFs. Have you considered that?
I don't know whether we've looked in the broad. I mean, we probably have looked in the broad property market, but I think most of the stakeholder concerns that have been raised are around kind of significant holdings of real property in super funds, and we have looked at that, and it's again very small kind of number of superannuation accounts would have a very high concentration of real property as their kind of investment mix.
Thank you. If you could provide that on notice too. And then thirdly, what about agriculture? There's been claims have been made. So NFF, for example, has said about 3,500 family farms will be hit by this tax. Has Treasury attempted to verify that figure?
I'm not sure whether we have. I better take that one on notice. I'm just not sure whether we can...
We have given thought to the holdings of super funds, and we do have information on what super funds invest in. Obviously, we do take sincerely the comments people raise, and we do try and understand them. There's going to be a limit to the data that we have, but we have tried to understand and analyse that.
Well, if you could take that on notice as well, Mr. McKenna, that'd be helpful. And then just finally, has Treasury considered the implications of this policy for productivity?
I suppose we looked at it from directed at the sustainability of the super system, and that goes to the sustainability of the budget, and that would feed through into productivity.
Well, in a very kind of indirect way, have you looked more directly on the implications of this policy for productivity? It's an animating focus of this government. We had a roundtable about it. What are the implications of this policy for productivity? Have you considered that?
Senator, I'm inclined to take the view that you've asked, and I've allowed a series of questions that go to how does Treasury respond to stakeholder advice, put the Treasurer and others in government in the best position to be able to understand what that advice or the views that are put to government mean. Now your question really is what is advice about the impact of a policy upon that to government, about decisions of government. That's really outside the scope of...
It's absolutely not. That's a nice try, Minister. That is a nice try. But asking officials about the consequences of policies is one of the most routinely examined topics in Senate estimates. It is routinely answered.
Advice to government.
No. Even if I was, Minister,
it's not.
Minister, even if I was, the Senate has repeatedly said that is not grounds for refusing to answer. Advice to government is not a legitimate reason not to answer. But in any case, what I am asking, Minister, to be clear, so that there's no misunderstanding, is has Treasury considered the implications for productivity of this policy? Yes or no?
I think the focus of the bill is on sustainability of the superannuation.
The answer can be no. I will not hold it against you. It may be no.
No, but I'm going to say when we look at the impacts as we have been talking about, across sectors. So, the analysis of would it impact the venture capital sector? You would say that would go to productivity.
Yes,
if it did.
one
and our
input,
answer
yes.
was that was their holdings are actually quite small.
Yep. So do you have a number of the impact on productivity?
No.
No. So you haven't attempted to model a economy-wide productivity
I don't know if you
impact.
could model an economy-wide impact. This
Why
only
not?
affects, 0.05% of super holdings.
Yep.
We're talking about, I think the Treasury described it as a modest tax measure.
If not a number, do you think the net effect of this policy will be positive or negative for productivity?
Positive.
Okay. What's the basis that you formed that view? How productivity?
Budget sustainability.
So how will raising more revenue for the Commonwealth improve the productivity of the economy?
If it makes the budget more sustainable, that supports credit rating, and supporting the government's credit rating supports the credit rating for a whole lot of other companies that operate in the country.
Okay. So I just want to understand the relationship there. So if the government raises more revenue through tax and the budget becomes more sustainable, that will allow us to keep our credit rating. Are we otherwise at risk of losing it?
No, we're not.
Okay. Well, then it shouldn't have any bearing on our credit rating.
Well,
I'm just trying to understand the logic, the flow of logic here.
It's at best a stretch. The official has.
I'm just following the official
has
logic.
described to you the very small scale in terms of the superannuation system of the account holders who are affected. She's described for you the economy-wide impact. We are in territory of advice to government and advice to the government's deliberations about this question that are not a legitimate area for.
You are doing your job by trying. The Minister's office will be very pleased you put in a sterling effort, but and we all know, these are not grounds to refuse to answer questions. These are legitimate questions about work that Treasury has done on the implications of policy.
It is advice to government that is not within the scope of these kinds of
if it's
proceedings.
really necessary, Minister, we can get the advice of the clerk, which has been provided in this forum 1,000 times, that says advice to government is not a reason not to answer a question. This is not contentious. I could find 100 quotes from Senator Wong or Senator Gallagher saying advice to government is not a reason not to answer a question. Let's not divert ourselves with attempts like that.
The official has done her best, the point I'm trying to make, the official has done her best within the scope of responding to advice to to government that, of course, much of that occurs within the context of a cabinet deliberations about a piece of reform. That's the truth.
Points for effort, Minister. In the interest of time, Minister, let me save you the breath. In the interest of time, if the official could just take on notice any work that Treasury's done on the productivity implications and provide that on notice, I'd appreciate it. Thank you, Chair.
Thank you, Senator Patterson. And I think with that we can release the revenue group, and we will have a break now and come back at 1:05. Sorry, no, it's 1:05 now. 1:55? Yep, 1:55.
And lest senators think that we haven't got questions, we just didn't ask ours to give you as much time as possible.
Thank you, Senator.
Because we want the program to proceed.
I'm grateful for that, Senator. Thank you.
1:55 or 1:50.
Oh. broadcasting. So if we just suspend until the Minister arrives, that would be good, please. Thank you. Committee welcomes representatives from the Department of Treasury, market groups, and I'm going to hand the first 10-minute block to Senator Sharma.
Thank you, Chair, and good afternoon, everyone. I had some questions about the First Guardian and Shield collapses. Could I just ask, when did Treasury first become aware of the First Guardian and the Shield collapse?
So, Lynn Kelly, First Assistant Secretary, Financial System Division. I just start by saying, because these are complex investigations, there are strict limitations around what are in place in terms of what ASIC are allowed to share with us and when, so as to not prejudice their investigations.
Yes, understood.
We first became aware of Shield in February 2024 when ASIC publicly announced the action to halt offers in the fund. We became aware of First Guardian in February 2025 when ASIC took court action against the responsible entity.
So you first became aware when ASIC publicly announced both of those steps, okay. And when did you brief the Treasurer or the Assistant Treasurer?
So after becoming aware, we've had a number of conversations with the Assistant Treasurer in relation to the matters, and we've done that progressively. As ASIC have had over 45 court actions, there's a lot of different enforcement actions in place, so we periodically briefed the Assistant Treasurer between February 2024 and up to date.
Okay. James Kelly, Deputy Secretary Markets Group. I just add to Ms Kelly's answer. When actions are taken, ASIC and other regulators will be the primary first briefer of a minister. So as an ordinary matter of course, when they take an action, they provide a brief just ahead of, sometimes almost just ahead of, and sometimes a little bit earlier, but in some ways the briefing side actually on the actual action and the issues involved is done by the regulator.
Okay, thank you. And as I understand it, Shield and First Guardian are both managed investment schemes, that's correct? Okay. From what I understand, Treasury received $2.7 million in the 2022-23 budget to conduct reviews into the RBA and the regulation of managed investment schemes. From my read of the Treasury website, it stated, I think, that the managed investment scheme review was due by early 2024. Has that review been concluded?
Andre Moore, Assistant Secretary, Advice Insurance and Capital Markets Branch, is that review was concluded in 2024.
When was it concluded, Dr Moore?
Towards the end of May 2024.
May 2024. Will it be released publicly?
That's a matter for government consideration. That review is still under consideration.
It's still under consideration for May 2024. Okay. Are there findings from the review that you can share?
The content of the review is advice from Treasury to the government. That was the form that the outcomes of the review are taken, so that I can't go into the specifics of what the review recommended. The other point to note about the review is that in the context of Shield and First Guardian, the review was a review of the regulatory framework for managed investment schemes. It did not look at the full business model that was involved in both the Shield and First Guardian cases, which took into account a number of other actors that were outside of that framework.
Has any action been taken in response to the review that you can share publicly?
So the review was provided to government as advice. It's still under consideration. Around the time that while the review was still in course, the Parliamentary Joint Committee initiated a review into the wholesale investor test, which was also part of the terms of reference for that review. And so the government paused its consideration of the MIS review outcomes pending the outcome of that PJC review. That didn't report until February 2025.
I see, okay. Because I understand the Assistant Treasurer has said he's considering further policy changes in response to the collapses of First Guardian and Shield. And it seems he's had a report, presumably with advice on policy changes since May 2024. Is that?
That is one input into the government's consideration. As I say, that review had quite specific terms of reference relating just to the regulation of managed investment schemes, but the matters concerning Shield and First Guardian also take into account lead generation, financial advisors, superannuation platforms, research houses, and managed investment schemes. So there's a much broader range of actors involved that the government needs to work through in landing.
Okay. And I understand ASIC has expressed the view that there are regulatory gaps, including the need for their own enhanced powers and funding and the need for further regulation of managed investment schemes. Has ASIC raised these concerns with Treasury since 2022?
Yes, it has.
How many times has ASIC or the ACCC sought, or I guess raised these concerns with Treasury?
So in terms of its concerns about the regulatory settings for MIS or areas where regulatory settings for MIS could be improved, it made a submission to the MIS review. That submission ASIC also made public at the time.
Senator, just to add to we've appreciated the importance of Shield and First Guardian from pretty early on. So ASIC has shared its views with us, as it does ordinarily across a range of issues, and some of those views are on issues that are already public. But in this case, we actually went to ASIC and solicited their views on issues that we should be thinking about. So it wasn't they just sent us something. We're actually talking to them, and we're interested in their views and advice, and as is the Minister.
Okay. And did some of those concerns that ASIC expressed, did they include issues around or businesses skirting or getting around anti-hawking rules to engage in sort of aggressive cold calling tactics that were seen in First Guardian and Shield? So
ASIC has raised, I'd have to take on notice how far back that would be, but ASIC has raised concerns about cold calling, lead generation and pressure sales tactics with Treasury over the time. But I have to say that going back prior to Shield First Guardian, that was not in relation to particular investment losses. That was a general concern about that practice.
So they've raised those concerns since at least 2023, could I say, which is when they...
I'd have to take that on notice.
I would add that they actually went out publicly it was May 2024 to warn customers, consumers around high pressure sales tactics and super switching. So they've had an active public campaign since May 2024.
Yes, no, I'm aware of that, but I'm just keen to understand when they first alerted Treasury to those concerns.
So we have... As Mr Kelly and Ms Kelly have said, we have a lot of interaction with ASIC over what they're seeing in the regulatory landscape, risk to the system. Those concerns were raised in the context of that broader liaison that we have with them around the regulatory settings for areas that ASIC administers. As I say, they're concerns that they had about those types of tactics. They weren't raised initially, at least, in the context of particular managed investment schemes.
But they did raise the concerns in the broad about that sort of
behaviour. They are a feature that was growing in the marketplace, yes.
Okay. When did you, if you can recall, first advise the government about these concerns of ASIC about this sorts of behaviour getting around the anti-hawking rules, but also the regulatory gaps that ASIC had identified to you?
So I'd have to take on notice when we first advised around their concerns about avoiding the anti-hawking provisions. I am aware that ASIC has raised those concerns directly, but specifically in correspondence with Treasury, so I'd have to take that on notice exactly when that
Okay, I'm just trying to understand.
Sharma, we're at 10 minutes.
Okay, I'll just finish up here. I'm just trying to understand, because I think there's 12,000 Australians affected, $1.2 billion in losses, and it seems that these issues were raised to the government, at least going back 2 years, and the government's been sitting on a review into managed investment schemes since May 2024.
So the managed investment scheme review did not look at those lead generation tactics. That was not the terms of reference for that review.
But that review that you completed was provided to government in May 2024, so over a year ago.
That's correct.
All right, thank you. Thank you, Chair.
Thank you. Senator Whitten.
Thank you, Chair. I've got some questions on rural and regional banking closures. But to start with, it's been more than 16 months since the RAC committee released this report on bank closures in regional Australia. Has the government given a response yet?
So, Lynn Kelly, sorry, I've already done that. The government hasn't formally responded to the recommendations of the task force.
Sorry, I'm quite deaf, so you might have to yell a little bit.
So I'm too. No, the government hasn't formally responded to the recommendations of the task force. However, the government has taken the recommendations in consideration in a number of the initiatives that have been announced subsequently. For instance, there was an announcement in February the government made around a moratorium on major bank branch closures in regional and remote Australia. Likewise, the government announced in February commitments from the majors to renew their contracts with Bank at Post.
Yep.
Likewise,
I'll come to that if that's okay. Yep.
The RAC report recommended an expert panel be commissioned to investigate the feasibility of establishing a government bank. Has Treasury considered the recommendation?
We have provided a summary of the recommendations to the government.
Considering a government bank,
so
specifically?
We have, as often is the case after a report is handed down, we provide a summary of those to the government. We haven't provided advice in relation to that recommendation.
Okay. On July 24 this year, Assistant Treasurer David Molino stated in Parliament that government has secured access to banking services in regional Australia, and I quote, "Banks have a responsibility to regional communities and we're holding them to it." That was 3 weeks after Bendigo Bank announced the closure of 10 branches, including 5 that are the last banks in town. One of these was Queenstown in Tasmania, where the branch was the last branch on the entire west coast. The closest bank is now 150 kilometres away, but it's a 4-hour round trip to get to a bank. On the same day, the Assistant Treasurer's speech, Bendigo Bank further announced the closure of 28 branches, 17 of which are the last genuine banking services in their towns, including Cunderdin in my home state of WA, with a 120-kilometre trip to their closest branch. What has the government said or done about Bendigo Bank's closure spree? Did the government talk to Bendigo Bank about it?
I think it sounds like more of a question for me, Senator Whitten, than the officials. We'll come back to you about... I don't know what the engagement between the government and Bendigo Bank post their decision was. I'm very happy to provide that on notice. But of course, the government's approach here, as I think you indicated in your question, has been about securing that moratorium on bank closures until I think the middle of 2027, strengthening the Bank at Post capacity. But we're absolutely aware that not only is there a question in regional communities where people have to travel for banking services, particularly people who require cash,
For our
or to make
branches along the-
deposits, or to do all of the things that people have a legitimate expectation that they are able to do. But of course, the decades of bank closures that happened prior to that meant that not only are people apprehensive in communities about what a closure might mean for them, but there are people who are experiencing challenges in this area and have been for quite some time. So the bank at post reforms are designed to strengthen, doesn't completely resolve all of those questions. And then the moratorium is an important step too, and government will continue to examine the approach here.
Okay. Given the taxpayer-funded privileges banks enjoy, including the financial claims scheme guarantee of their liabilities, which materially boosts their bottom line, should they be expected to provide a service to rural and remote communities in exchange?
Senator, that's asking for an opinion. I would just note we do have major bank levy that applies to the 5 biggest banks in Australia, and partly reflects, some ways that you can think about it as relates to the market perception that they'll be seen as too big to fail. So there is a mechanism in the system that actually levies the major banks.
Yeah, I think the question is taxpayers fund something for banks, and they'd like to see something in return, particularly in rural and regional communities. In the Assistant Treasurer's 24 July speech this year, he stated, and we've helped secure a number of new agreements to shore up the vital services provided by Bank at Post. This was a reference to the deal announced in February that ANZ would sign up to Bank at Post and be accessible by October 1. That hasn't happened. Why?
So we're not party to the commercial negotiations between Australia Post and ANZ, but what I do understand is that ANZ have agreed arrangements with Bank at Post in terms of the key terms of their joining Bank at Post, and now they're working through the logistics of systems talking to each other.
So you may not be party to one side being a commercial transaction, but you would be party to the taxpayer-owned Post side, perhaps?
So, through talking to our counterparts at Australia Post, we understand that they've reached agreement with ANZ around the key terms, and they're now in that process piece of the ANZ systems have to talk to the Australia Post systems. And I'm not an IT person, but I understand there needs to be some bridging of systems to actually get it functional, and that's the stage they're in.
Is there a time frame for people that have to drive 4 hours to do banking?
So I understand that it's occurring now across December.
December?
Yes, again, but I'm not party to the commercial arrangements, so it's my understanding of timeframes.
The official can only do her best. Obviously the government's watching it closely, but she's trying to relay what is the agreement between those two parties. It's not something that the government is a party to, but it'll be better if it was October. December is better than January. We want to see progress on that agreement being delivered upon, as we do with the range of other agreements that are out there at the moment to try and make sure people get decent services in these towns.
Okay. Hundreds of residents of Queenstown called and messaged the Prime Minister and the Treasurer in August, asking them to intervene to save the bank branch. The PM's office referred the messages to the Tasmanian Premier to answer. Who has constitutional responsibility over banking, the PM or the Premier?
Sounds like a good question for the Attorney General's Department. We've all got responsibilities, Senator Whitten, and the Government of Tasmania will have an active interest in regional development and economic infrastructure in right across northern Tasmania. We're in live discussions with them all of the time about these kind of questions, and I reckon that the Premier would have been delighted to receive that correspondence, and we'll look forward to hearing about his response.
Look, lastly,
It's more of a statement than a question. The people on the west coast of Tasmania are driving 4 hours for banking. The Shire of Ashburton has no banking. There's so many small towns around the country that are looking for some assistance. I'd suggest that if we could put the pedal to the metal on this bank at post issue, it would be appreciated by many, many Australians. Thank you, Chair.
If there's anything additional that we can provide in terms of where bank at post is up to, we'll do that. Thank you.
Thank you.
Thank you. Senator Pocock.
Thanks, Chair. Thanks all for being here. I have some questions about non-compete clauses. I want to ask about the proposed reforms of the government to non-compete clauses. Yeah, that's you, I assume, Mr. Freestone. My understanding is the Competition Division into Treasury is leading these reforms and that consultation closed on the 5th of September this year. Is that right?
That sounds right, Senator. So, Dr. Owen Freestone, Assistant Secretary of the Competition Law Reform Branch. That's correct, and just let me get to my notes. So that was the consultation process that was held in order to essentially finalise the government's reform announcement in the budget.
Yep.
So we, as is usually the case, put out a public document to consult on those aspects. We had good engagement. We spoke to a range of business groups as well as employee representatives and the usual, I guess, areas that have an interest in this reform. And so just to, again, highlight the process, the plan, I think, as the government's announced, is to look to put in place these reforms to take effect from 2027. So we're working towards that date. In terms of the specifics of the consultation and submissions we received 47 submissions as part of that process. So as I say, very good engagement and are looking to, I guess, move it to the next stage, which essentially is to take into account all that information we receive from stakeholders and to provide our advice to government on how to take that forward.
And can you clarify some main headings for the feedback that you received?
Of course, yeah. So I think one of the key areas we really focused on, I guess firstly on the employee side, was around hearing how these existing non-compete clauses are affecting workers. So we found that many workers across the economy, and I think the numbers, in the realm of, potentially 2 million or more workers affected by these clauses, are affected often by what's called cascading clauses. So these are clauses that essentially say to employees in their contracts that you can't work for a rival company in the future, and that may be quite broad. It can cover the whole of the state, for example, and these clauses, again, are quite common. So we heard quite strong, I guess, submissions around that point, the fact that workers in those areas are being prevented from moving to jobs, often higher paying jobs, and jobs where they might otherwise have a desire to move to. So these clauses are really, again, quite having quite a lot of effect on workers in a range of industries, and that's quite broad. That's everything from healthcare workers to childcare workers. It's not just confined to one part of the economy. It's very, very much a broad-reaching thing. So I guess that was certainly a focus of the submissions we received, was around those effects. We also spoke, obviously, and heard from, I guess, the business side of things, and I think businesses have a range of views around this reform direction. I think from their point of view, obviously getting certainty about the direction and understanding the scope of the reforms. As the government announced in March, the ban on non-competes is very much focused at workers at low and middle income levels. And I think we received views from the business side that they would, I guess, like to think carefully about any further reforms above that level of $180,000 roughly per year. So I guess that was the main focus on the business side.
Did you have anyone specifically oppose this measure? potential legislation?
I think certainly if you go back to the original March budget reform, I think people, generally accepted that there is an issue with non-competes across the economy, and I think there is a level of acceptance by businesses that is the case. I think, again, it's more around the margins of how that's implemented. I think businesses are very keen to make sure it's implemented in a way that's firstly gives a lot of notice to businesses. So I think the fact that the government's flagged that the laws wouldn't come into effect till 2027 is important, because it does provide that lead-in. On the small and medium business side, I think, again, that's a concern, is that there is that certainty and a reasonable chance to come into compliance with any changes in the future. So within that general reform direction, I think there is a level of acceptance that there are issues that need to be solved.
What proportion of workers earning under that high income threshold of $180,000 per year currently have non-compete clauses in their contracts? Use the figure of up to 2 million workers. Is that based on some science or some real analysis, or is this a guess? Do we know how many workers are caught?
Senator, I think I can probably give you exact numbers. I think that the number is around 80%. So of workers that will be, I guess, benefit from these changes.
80% of workers on less than $180,000 a year face a non-compete clause? Is that what you're saying?
No. So let me clarify. So 80% of workers will be caught by the changes. So they'll be within the Fair Work Act remit. As I said at the beginning, we think around 1 in 5 workers currently have a non-compete. So
20% of those on less than 180,000.
Correct. Yeah.
Okay. And you mentioned childcare, healthcare. Are they outliers? Where are the main industry spots where this is happening?
So I think some of the sectors that have the biggest incidents are around, I think you mentioned childcare workers. I think even above that is financial services, but we also have other service-orientated areas such as you mentioned, healthcare, but also in the personal service area. And so I think actually the prevalence is actually quite broad, though. While there are a few industries that are at the top there, I guess my higher level point is that these things are quite common across all industries.
On very modest incomes?
Yes, indeed. Yep.
Have you got a gender breakdown on how those numbers look?
I don't have that to hand, Senator, but I can certainly provide that question on notice. I think, again, my overall response would be that these things are quite prevalent across both genders. So certainly in industries where you have higher gender incidence to begin with, for example, females tend to dominate in the childcare sectors. Sure. Non-competes are going to be more common amongst women in those types of industries. But as a general proposition, Senator, they're pretty much used quite commonly across the board.
And do you expect a change to impact all kinds of employers by size, by industry, by revenue? There's no limitation you're expecting to make?
No, Senator, the major limitation would be the fact that if the government was minded to proceed with its currently announced reforms as they apply to low and middle income earners, it would be really, that would be the key dimension upon which we would distinguish. So people on low and middle income wages would benefit, and people above that threshold would not be caught by the changes.
Okay.
But it would certainly capture all parts of the economy.
Great. Okay, thank you. And given that the government's keen to see this in place by 2027, when do you think we can expect to see legislation?
Senator, I think, as I said, we're in the process of considering the consultation feedback, which closed relatively recently. We're providing advice to government on those final policy specifications. We think we'd be pretty well positioned in the early next year, potentially the first half of next year, to get exposure draft legislation out.
Great. Yeah. Thanks, Mr. Freestone.
You're almost at time.
Okay, I might just try and sneak a couple in and see where we get. I have some questions about the PwC reviews that Treasury has underway. I know there are a wide number of attempts to deal with the PwC scandal that have been announced over the last couple of years. Last time, Mr. Tom Dixon in Market Conduct Division answered my questions. No longer here. Perhaps we have a new person stepping up to the table who can help me. Who in Treasury now is responsible for leading these reviews?
So Senator, yes, Mr Dixon has moved to another group in Treasury. So at the moment, the responsibility of that sits in the Digital Policy and Corporations Division with Ms McDonald as the head, and Ms Deepti Patton is the relevant branch head.
Great, thank you. Ms Patton, in February, Mr Dixon advised me the Treasury was looking at recommendations from the PJC report into the consulting, accounting and auditing sectors, and he said the next step would be, quote, a consultation paper on specific options to address these issues. When do you expect that paper to be released?
So we have looked at the PJC report, of course,
That's
carefully
good.
in the context of the work that we're doing. We've provided advice to support further consultation on this work.
Sorry, you've provided advice to who?
To the Minister.
To the Minister, but Mr Dixon said that there would be a consultation paper. That was the next step. Is there a consultation paper?
That is our anticipation, but the release, the timing of the release of that paper would be a matter for government.
You can't give me any indication?
Unfortunately not.
That was in February that we heard it was coming, and now you can't tell me whether it's coming or when. It is coming, but you can't tell me when. Is that correct?
In the context of the broader project plan that Mr Dixon referred to in February, the natural next step for this work would be to canvass options. Our first consultation paper, as you're aware, went to the sort of problem areas that existed in the industry, and we did hear in that context that there were concerns about the fact that the regulation was levied at the practitioner level rather than at the firm level, that some standards weren't set by government and so forth. So we have since been considering what those options could look like, and that consultation is envisaged as the next stage in the process.
A few people around this table have put a few years of their life into this issue, so and our newspapers are full of stories today about issues not disconnected from the behaviour of firms like this, not just in the audit business but more broadly. Can you advise when the PJC committee might receive a government response to its final report?
We have also considered the PJC report in the context, again, of the work that we've been doing. As you'll appreciate, because both processes were running side by side, rather than considering the PJC report as sort of the end of the story, what we've done is think about the work and the submissions that were made to the PJC as being relevant to the work that we're doing. We've folded those recommendations that came out of the PJC, thought about them against the other submissions that we've received, and thought about them in the context of the options paper that we've been drafting.
Senator Pocock, I'm going to have to rotate the call. Are you wrapping up? Or?
Okay, well, last question.
Yep.
So is there going to be a response to the PJC committee report or not?
So, Senator, whether responses to parliamentary committee reports is a matter for ministers and government.
I'm just asking. Minister, do you have any light you can shed here, given the amount of attention and effort in the Senate and in this Parliament to these issues? A timely response is, I think, expected by the Australian public.
Well, it's
3 months understanding orders. Thank you, Senator Colbeck.
Well, as you know, we seek to respond to these inquiries as rapidly as we can. This is obviously an important piece of work, and a number of senators, including some in this room, have been very active around these questions, and that work has been a valuable addition to the government's consideration of our approach to these issues. It's been very helpful.
Minister, we're just chopping down trees if we are not actually working in a timely way on such a very sizable effort on issues that go to the core, the health of our audit and accounting systems, not to mention the broader consulting sector itself. I think it's worth a stronger indication that, you know, important work's been done?
Well, the government's approach to these questions hasn't just been about responding to reports, it's been about action in some of these areas. If there's anything more I can add to you about the timetable on the report, I'll come back to you. I'm just not in a position to be able to tell you right now.
Thanks, Chair.
Thank you, Senator. Senator Sharma, 10 minutes.
Thank you, Chair. Is there still a competition task force within Treasury?
Yes, Senator. Jason McDonald, I head that task force up. So, yep, if you've got any questions.
Sorry, there is still a competition task force?
Yes.
Okay, because I previously saw it on your org chart, but it no longer appears to be there. Is it now the National Competition Policy Branch?
That's one of the branches, and Dr Freestone, who was just here, is also in the task force, and he's another branch head, and then I head up the task force as well. But I've got wider responsibilities than just the task force.
Okay. Would you be able, either on notice or here, just to tell me what the average staff level is assigned to the task force currently?
I'll take that on notice, Senator, but it's roughly around 20, 24 people.
Right, okay, and all within your division?
That's right.
Mr McDonald. Okay. The National Productivity Fund, if I could just turn to that. Has any money, that's a $900 million fund, correct?
That's right, Senator.
Yeah. Has any of that money been dispersed yet?
No, Senator.
Okay. I understand that each jurisdiction's reform plans under the federal funding agreement, they were due by the 30th of June, is that right?
That's right, Senator.
Were they all received?
No, Senator. A couple of states asked for deferrals, and so we're still waiting on a few jurisdictions to finalise their plans.
Okay. Has the Commonwealth agreed to any of those that have been received yet?
Well, we're in the process of working through that, Senator.
But I can take it none have been agreed yet?
No, Senator.
Okay. When would you expect to reach an agreement?
I actually don't know, Senator. I'll work through. I'll come back to that. I'll take that on notice.
Okay. Once an agreement is reached, or if an agreement is reached, will those plans, the jurisdictions reform plans, will they be made public?
Yes, Senator.
Okay. And then, do you have a sense of when funds might be dispersed, or when from, under the $900 million fund?
Well, that will depend on the evaluation of the plans by the National Competition Council, Senator, and then the states actually taking actions to deliver on those plans. So the funding will be provided subject to those plans being agreed and implemented by the state. So the payments under the National Productivity Fund are only made when a jurisdiction has actually done the reform.
Okay, so the step is that the state submits, or the jurisdiction submits their plans, the Commonwealth agrees to the plans. Did you say there was another step here, the National Competition Council has to endorse them or something?
Before the payments are made, in terms of what the jurisdiction is actually putting forward that they're intending to do, that'll be evaluated by the National Competition Council, and then, subject to the Treasurer's approval, well, the payments will be made under the National Productivity Fund.
Okay. Is there does this money expire at any time, the $900 million fund? Is the fund on a permanent footing, or?
So the fund is there for agreed areas of policy reform with the jurisdictions, and then paid out when, under those plans, according to those policy parameters, jurisdictions choose to do it. If jurisdictions are not inclined to do all of the reforms under that, for the money allocated under the fund, and that money will sit there and potentially be available for other reforms.
Have you got forward projections in estimates or in the budget on the disbursement of that fund?
There are estimates about when we think the different disbursements will be made, but we haven't published those, Senator.
They're not in the budget papers or in the portfolio budget statements?
They're in the contingency reserve, Senator.
So the $900 million sits in the contingency reserve?
The amount of money that we think at various times will be dispersed under that fund is in the contingency reserve, Senator.
Okay, all right, thank you. I just wanted to turn now to the digital competition regime, or the so-called ex-ante competition regime. So from what I understand, Treasury's consultation on its paper closed in February. Is that you, Mr Tony McDonald?
It is Senator Tony McDonald, Acting First Assistant Secretary, Executive Policy and Corporations Division. Yes, the submissions closed in February. There was quite a lot of engagement. So we've collated that material and provided advice to government post the election.
And will those submissions be made public or published by Treasury on its?
In due course. I mean, it's a matter for government, of course, but in the normal course of events, submissions like that would be made public, typically aligned with a statement of when the next steps of the government in response to the submissions.
Okay. And you said that Treasury has provided a report to the government on the basis of the consultation and the submissions received?
Yes.
Okay. When was that report provided?
I think we've provided advice. I don't have the exact dates in front of me, but it would have been post the election. And I think there would have been more than one piece of advice as well. Sort of partly would be covering what the submission said, and then I think from memory there were separate pieces of advice that suggested a way forward, and that is often the case. It's iterative as you sort of take that forward through the stages of government.
Okay. But as I understand, draft or legislation would be required to enact this
Yes, it would,
regime?
yes.
Okay. Has any draft legislation been prepared or commissioned?
No, not as yet. So the paper that was released in December last year set out proposals. The process that we would follow is, following consultation, the policy details of that of the digital competition regime would be settled by government, and at that point it would then go into the prioritisation process for the preparation of legislation, and in the normal course of events then we would be exposing that legislation for comment.
So you'd put out an exposure draft for consultation?
That would be the normal course of events, and I think in an area that is as technical as this, that is critical to do. Noting that the proposal, in addition to what would be in the legislation, the framework also envisages sector-specific codes.
Mm-hmm. And I noticed in Treasury's consultation paper the examples of, from recollection, Brazil, India, the United Kingdom and EU legislation, ex-ante competition frameworks are cited. Is Treasury monitoring the implementation of those examples in Brazil and India?
And those and others, both at times directly along with our colleagues in the ACCC, both directly with relevant agencies, particularly in the UK or the EU and others, but also part of the ongoing engagement that we have with many stakeholders, both digital platforms and others that would benefit from the competition reforms, is to talk through the lived experience that there has been in other jurisdictions, and seeking to ensure that our advice to government and the proposal that is brought forward learns the lessons from those regimes. So it's something we're looking at very closely.
Okay, good. Now that was my next question, because I understand, I've read analysis that suggests that particularly the EU model is perhaps not one for Australia to seek to follow in this regard.
Senator Sharma, just 2 more minutes.
Yep, okay. I'll go to my last question then. I'll move on from this topic. I believe it's called the Regulatory Initiatives Grid, which is an initiative designed to provide the financial sector with greater transparency of the regulatory landscape by listing reform priorities and initiatives over the next 2 years, part of the contributing to productivity and competition. I believe that was due for an update in September last month.
That's correct. It's due to be released very, very shortly.
Okay, is that with Treasurer or is it with the Treasurer, or why has the timeline not been that?
This is the second iteration.
Yep, the first one was December last year.
So we've met with a whole range of stakeholders around how to improve the second iteration. And so trying to build those improvements into the second iteration takes a bit of time.
So you expect it, what, this month?
Very, very shortly.
Okay. Does the Treasurer need to approve this?
Yes, normally it would require the Treasurer to approve its release.
Okay. And have you provided an updated or a second iteration of the regulatory impact grid to the Treasurer's office or the Treasurer?
So we have engaged with the Treasurer's office a number of times in terms of the direction of the second iteration, yes.
So it's with them?
Drafts are with them, yes.
Thank you. All right. Thank you, Chair.
Senator Payman.
Thank you so much, Chair. Good afternoon. In December last year, the Treasury consultation on unfair trading practices, including subscription traps, concluded. Between December 24 and July 25, what work was done in this area?
Thanks very much, Senator. We've been working on the regulatory impact statements to look at the various options for addressing that issue, and the government has made some announcements that they are interested in taking this forward, particularly around unfair subscriptions, chip pricing practices, and the use of dark patterns which manipulate or undermine consumer decision making in digital interfaces. And we're in the process of working with the jurisdictions. We need the jurisdictions to recommend any changes to the consumer law before we can take that forward.
Thank you. And what meetings did the Treasury have with stakeholders on this topic between December 24 and July 25? I would love to, you can take this on notice, but if we could have the dates and participants in meetings that you've had.
We can take that on notice, Senator.
Okay, cool. But could you say generally what meetings the Treasury has had, aside from obviously with various states that you mentioned in your previous
I can just take that on notice.
Okay, no dramas. What meetings did the Treasury or Assistant Treasurer have with state and territory consumer affairs ministers on this topic between December 24 and July 25?
I'll take that on notice as well, the same notice.
Okay, could you also please provide on notice the dates and participants of the meetings while you're at it? What is the status of the regulatory impact analysis that Senator Gallagher referred to in an answer to a question without notice that I asked, I think in July, inside the chamber?
I'll have to get that question on notice and look at what you're referring to, Senator.
Okay, so has there been any regulatory impact analysis that's been made so far?
Around the unfair...
Yes. Unfair trading practices.
Trading practices. Yeah, no, we're in the process of working that through, Senator, but I'll have a look at the response and come back to you.
Okay.
Just to add to Mr McDonald's answer, it's certainly very close to being finalised. I can remember myself reading the near final thing and in my role signing off on a letter communicating it to the Office of Impact Analysis.
Thank you. So can you give us the date of when the analysis began? If it's close to being finalised?
So I think, yeah, those dates we'll have to take on notice.
Okay, no worries. When does the government expect to legislate on this issue? Do we have a timeline?
We don't have a timeline, Senator, but we are working with the jurisdictions because, as I said, we need to get their approval before we can. You'd be hoping early next year, maybe, if we can progress that through the jurisdictions.
Okay, it's just from memory, the government said that they're working on it in July, so it's been a few months now, so just would love an update, and obviously you've taken that on notice, so thank you. How did the retirement of the former Assistant Treasurer and the May 2025 election impact work in this area?
Senator, I think the normal business of government's gone ahead. I wasn't around at the time on this issue, so I can't really answer that question.
Mr. Kelly, would you be able to give an indication? No?
Senator, it's hard to say what the counterfactual is. Obviously, there's a caretaker period in which we're not talking to ministers or providing advice to them, so that's always a kind of break in the air, and we've had a new assistant, some new ministers and a rearrangement of responsibilities, but overall I would say it's not significantly affected the delivery of this work. It is progressing it's quite advanced, would be my take on it at this stage. It's just you haven't seen some of that publicly.
Yeah, just hoping it's not put on the back burner with all those changes happening. Just on price gouging, in March the government committed to introducing legislation to outlaw price gouging at supermarkets. What work's been done in this area since March?
Thank you, Senator. So the government made its announcement made the decision shortly before the election. It was an election commitment of the government. We've been, alongside that announcement was the establishment of a task force within Treasury to progress those issues. And we have been, we've been working through the issues since then, and we expect draft provisions to be released shortly.
Do we have a timeline for shortly?
Well, these things are always a matter for government, but I would expect it to be this month.
Okay. Just on the task force, prior to legislation being introduced, a task force was set to be established and advise on the excessive pricing regime. Has the task force been formed?
Yes, that's what I was referring to, Senator. That funding for that task force started in July, so formally it commenced then. But we were obviously working on the government's election commitments prior to then, and particularly sort of following the election.
Okay. Do we have a status of this legislation and whether it's still on track to be introduced this year, or is that for the government?
Well, it's a matter for the government, but we believe that we're on track for the introduction of provisions this year.
Minister, do you have a timeline?
The official is correct.
Would this legislation only apply to supermarkets?
That's what the government's announcement refers to, yes.
So why are other sectors being let off the hook if supermarkets are the only ones being targeted?
Well, ultimately that's a matter of the government's policy, but the government's policy announcement was in response to the ACCC inquiry on the supermarket sector.
Minister, I mean, don't you think that the insurance sector should be looked at as well as part of this legislation? Why just supermarkets?
Well, Senator, the government's commitment in response to substantial community concern was to develop legislation by the end of this year, and the officials have set out for you the processes that the government's gone through to deliver that outcome. That's an outcome that we're very committed to delivering. The idea of incorporating other parts of the economy, including parts that have extensive prudential regulation, structures around their operation, would seem to me, on the face of it, to introduce considerable additional complexity to that work. If the government's commitment here is a simple, straightforward proposition that is on the fast track, and we are very keen to honour our commitment to Australians about reform in supermarkets, and we're not going to complicate it and delay. We're going to get on with it, and that's the timetable that the officials have outlined.
So essentially we're letting off price gouging in other sectors like insurance, but that's okay. The Prime Minister, when asked to define price gouging in March, said...
No.
Minister, I've got very limited time and I've got another committee to go to. I've got one last question.
You've chosen to make an assertion about letting...
We're all entitled to our own opinions. Thank you, Minister.
Well, what that does is invite, of course, a response from me. And that is not the approach. What I indicated to you in a
Minister,
careful
I've got one last question, and I've heard your answer. I do not need to hear your government talking points.
Well,
thank you.
Thank you. If you refrain from making the kind of editorial and just ask questions, you'll find that it works a lot more smoothly.
Well, it would have if you'd let me ask my question. Thank you. The Prime Minister, when asked to define price gouging in March, said, and I quote, "Price gouging is when supermarkets are taking the piss," end quote. Has the department developed a definition of the piss and a metric to determine when supermarkets are taking it?
I expect that that you know that the answer to that question is no, and I would just say that it might be. It is one thing to use a phrase outside of the Parliament. I'd be a bit reluctant to use that kind of phraseology in here, and it's one that that the officials can't respond to.
Well, it's what the Prime Minister said, and I'm just quoting him. But
Well,
thank you, Minister. Thank you,
as I
Chair.
indicated.
Thank you, Senator Payman. We will go to, I think, Senator Pocock had... Senator McKim,
I've just got a few minutes and then we'll go to...
All right, so we try and keep it to a 10-minute block, and then we can... a couple questions here, and then we can release the market group, I think. So we're running over time and we want to get through all of today's program, so thank you.
So I'm just looking for updates in relation to 3 reviews arising out of the PwC and consulting and PJC reports. The review of the use of confidentiality and conflict of interest arrangements across government agencies. As of February, Mr Dixon advised that that review had been finalised, but with policy development continuing to progress. What were the findings from that finalised review? Is it with the Minister, and when do you expect the review to be published?
This is in relation to the conflict of interest review.
Conflict of interest across government agencies, the use and manipulation of, yeah.
That's being managed by the Department of Finance. So I'd recommend diverting the question.
I did not understand that. Okay, thank you. So you have you can't give me any information on it?
No. I suggest posing that question to the Department of Finance.
Yeah, they're gone, of course. I'm interested in the joint review with the Attorney-General's Department into the use of privilege in Commonwealth investigations. That was announced in 2023. Consultation closed in February. Is that also in Department of Finance, or is that in your purview?
No, that is with the Department of Treasury. It is a question on which the Law Division, who are coming up later on today, will be able to provide a lot more detail.
Okay. What about your consultation to review of tax regulator secrecy exemptions, concluded in February this year and held many roundtables? What were the findings? What are next steps? And when do you expect that review to be published?
Likewise, Law Division, who are coming up next, will be able to provide more information.
Over to you, Nick.
Oh, thank you. Just a few follow-up questions. I listened to Senator Payman's questions and your responses in regards to the progress on drafting excessive pricing provisions. When the Prime Minister announced that during the election campaign, I'm pleased to see Minister Labor finally taking a small step towards Greens policy in this area, but he referenced excessive pricing laws in place in the EU, in the UK and over 30 states in the US, but none of those are scoped so narrowly as to only catch supermarkets, are they?
I think that's correct, Senator. I think the provisions in the US are narrower than those in the EU and the UK, but I think they do apply more broadly, yes.
The former chair of the ACCC, Professor Fells, has recommended making it an offence for a corporation in any sector of the economy to abuse its to charge excessive prices by abusing its market power. It was also a recommendation of the Senate inquiry into supermarket pricing that I chaired on behalf of the Australian Greens. Is Treasury aware of any competition experts who've advocated for excessive pricing regimes to only apply to the supermarket sector?
I'm not sure about that, Senator. I think there are competition experts who would be on either side of the question on whether or not it is worthwhile to have an excessive pricing regime and think through all of the implications of that. The approach and one of the points that comes up in that context is how an excessive pricing regime links in with the rest of the structure that you have within the law. But I think the approach we have been adopting, given that the context came up in relation to supermarkets, is to focus on that particular sector.
I'm sorry, I don't mean to interrupt, but as you responded to Senator Payman, that was the announcement made by the Prime Minister in the early days of the election campaign, and I assume that's the basis that you're going forward with those sort of narrowly scoped laws rather than an economy-wide excessive pricing regime.
Well, it's I guess the approach we've adopted, Senator, is it's an election commitment of the government, and our role as officials is to implement that announcement as best we can.
Absolutely, yep. When I asked Ms Bullock, the RBA Governor, whether she agreed with the proposition that some corporations are using the cover of a then significant rise in inflation and a lack of competition to boost their profits over and above what would be required to meet increases in their input costs. In other words, a sector agnostic question. She responded that she did think that was the case. I can assure you I'm not verbally Ms Bullock. She'll be in here tomorrow, and I'll probably raise the issue with her again. But again, I guess, Minister, for you, because it's entirely reasonable, as we've just heard, that the agency is seeking to implement government policy, but why is it that you are going to so narrowly scope these laws such that they only apply to the supermarket sector when sectors like insurance, airlines, just to name a couple, are clearly using a lack of competition in the sector to increase their prices and therefore their profits over and above what they would be required to do to cover increased costs of doing business? Why is the government letting a whole bunch of other greedy profiteering corporations off the hook by scoping your anti-price gouging laws to only apply to supermarkets?
Well, Senator McKim, if I ignore the pejorative in that and just go to the heart of the question, there was a supermarket inquiry report.
Which didn't recommend excessive price gouging laws, by the way. But it didn't. Which was conducted by the ACCC. I'm well aware of that. But it didn't recommend anti-price gouging laws or excessive price gouging prescriptions. It just didn't.
We are following that advice. We've made
an
election commitment in relation to supermarket reform. We are determined to follow through on that commitment. As I indicated to Senator Payman before, it seems to me that at the very least, aside from all of the other policy reasons that you might engage, it's one thing to say, hurry up and deliver the election commitment on time. It's another thing to also say, and also incorporate all those other areas of the economy into the, with all the additional complexity that engages. We are a government that does what it says it's going to do. We said we were going to do that. It will bring significant public benefit.
It's too complex.
It will bring significant public benefit. We want to work at speed to implement the commitment at the timetable that we said that we would implement it in, and that's what we're going to do.
Senator McKim, You're at just over 8 minutes.
Thanks, Chair. Well, I think we'll have to come back for me to ask a couple of other areas, but just to conclude this particular area, Minister, thank you, but you didn't actually answer the question. I know what was announced during the election campaign. I am well aware that it was narrowly scoped at the time to cover only the supermarket sector. It's entirely reasonable that the Treasury is proceeding on that basis, so I make no adverse reflection on that at all. I know you want to do this quickly. It should have been done a long time ago, and as I said earlier, we welcome the fact you've taken a small hesitant step towards Greens policy in this area, but the specific question is, why was the decision made to proceed with such a narrowly scoped excessive pricing regime when, as we've heard from the officials here, places like the EU, the UK and the US have far broader scopes for their excessive pricing regime, and particularly given people like airlines and insurance companies, where the lack of competition in those sectors is broadly quite similar to the lack of competition in the supermarket sector in Australia. Why are you letting those corporations off the hook?
Well, Senator, a couple of observations, I suppose. Firstly, I'm interested in your assertion that it's approaching Greens policy. My experience is that when something's Greens policy, it becomes anathema to our show. We're not very interested in approaching your policy framework.
You steal bits and pieces from it all the time, Minister.
The broader view is there are a specific set of issues in the supermarket sector. We've followed the advice of experts. We've made an election commitment. We're going to deliver on it. We don't apologise for delivering on an election commitment.
What experts advise the government to so narrowly scope these laws as to only include the supermarket sector? Give me one expert, just one. You've said experts, you followed their advice. Give me one expert, because I don't think you'll be able to, that advised the government to narrowly scope an excessive pricing regime so that it only applied to the supermarket sector. Just give me one expert.
The Minister has answered this question. If you want to finish off here, Minister, and then we need to rotate the call.
Yeah, take it on notice if you like. You won't be able to find one.
I think I've answered the question.
No, you have not.
Senator Hume.
Thank you. I want to ask some questions about the Quality of Advice Review and the government's responses to that. That review was delivered to government on the 16th of December 2022. The government responded on the 8th of February 2023, saying that it was going to develop over the second half of 23 and early 2024 3 tranches of responses. The 27th of March 2024, the Delivering Better Financial Outcomes legislation was tabled. That dealt with what I understand was tranche 1, or at least some of tranche 1. It took another year and a bit to pass that. So that was passed in July 2024, even though the vast majority of it, from recollection, was non-controversial. But the government stuck a schedule in there that included the petroleum rent resource tax. So it's languished for some time. The 21st of March 2025, the draft legislation with the first components of Tranche 2, my understanding, have come out now. That includes statements of advice reform and some benefits for some super funds. Is there anything more in Tranche 2 that is being consulted on now?
Yeah, so that tranche that was released just prior to the election included the super aspects of Tranche 2 and reforms to statement of advice. The 2 bits that weren't included in that were reforms to the best interest duty and introduction of a new class of advisor. Those reforms that were consulted on, they are currently, we're considering the outcomes of that consultation process.
Right.
And the remaining elements are under active drafting at the moment.
Right, so modernising the best interest duty, is that included in the consultation?
That hasn't been consulted on yet.
What about removal of the best interest duty safe harbour provisions?
That's part of that
Tranche 2?
Tranche that's still to be exposed.
Tranche 3 that hasn't
Yes, that's
come
correct.
yet?
Yep.
And the new class of advisor, you said that's Tranche 2?
That's in that Tranche 3 as well. The government's also indicated...
Tranche 3?
Yes, but the government's also indicated, and the former Assistant Treasurer, when he released Tranche 2 just prior to the election, indicated that the remaining elements of those reforms, so Tranche 2 and Tranche 3, would proceed into the Parliament together. That's
Right.
still the position.
So does that include the changes for advisor education compliance, the extending the advisor education compliance deadline, and the new qualification pathways for new entrants?
Yeah, so the new education pathway is a separate measure.
Right.
The concrete next step for that is to consult on the policy detail.
Getting a bit tight, aren't we, if the deadline is the 1st of January 2026?
The new education pathway is not connected to the
That's
end
not
of that
included in that.
transition.
Now, that was a commitment that was given in July 2022, so that's a long time ago now. In fact, I can remember standing with Stephen Jones when he announced that prior to the election in 2022. So, just a little concerned here, Minister, for a government that says what did you say? Government does what it says it's going to do. It's been a long time coming for the financial advice industry that have been expecting responses to the Quality of Advice Review now for more than 3 years. We, in the meantime, have a real problem with this industry as we're seeing financial advisors exit in droves and the cost of advice increasing dramatically. Now, the point of the Quality of Advice Review was to look at not just the quality of advice, but also the accessibility and affordability of advice. There were genuine solutions that were given in there, 21 recommendations by Michelle Levy, only 14, for some reason, were adopted. They were a package of recommendations. I'm not entirely sure what the hold-up is here because the industry is telling us that this is urgent, and they have been telling us it's urgent for 3 years.
Well, a little bit longer than that, Senator. I think 12,000 financial advisors left the sector when your team occupied the Treasury benches.
What are you doing about it,
There is
Minister?
the first tranche of legislation has passed, and the officials detailed the what sounded to me like a pretty extensive and steady set of progress in terms of advancing these propositions. We're going to keep on working our way through these questions in an orderly kind of way.
I thought that the safe harbour provision, removing that safe harbour provision was a kind of, everybody agreed that that one was kind of a no-brainer, and reducing the statements of advice down from 80 pages to something that was far more manageable. Again, there didn't seem to be any pushback on this.
So the removal of the safe harbour provision is connected with the reform that will modernise the best interest duty to make it a more outcomes-focused duty. So those two elements actually fit together. They are. You can't remove the safe harbour steps without doing the corresponding reform to make the duty a more outcomes-focused duty.
How many FTE are working on this?
I had to take that on notice. Currently around. This is not the only thing that they're doing. But there will be around 4 or 5 people that will be working on this.
Consistently over the last sort of 3 years?
It has varied. It has been more. It has been upwards of 8 to 10 at different stages. It varies depending on the point in the cycle that we're in.
When are we expecting the consultation on that tranche 2 changes to be completed and legislation to be
So the
taken to
government
Parliament?
hasn't indicated a time frame for legislating the remaining elements of DBFO.
Minister, do you think this is urgent?
Well, I think it's important, Senator.
Is that the message that you would like to have delivered to the financial advice community?
Well, it's important, important reforms, important legislation. We're working through a careful process to make sure that they are delivered properly.
Should advisors expect that the new education pathway will be legislated in time for that 1 January 2026 deadline?
So the 1 January 2026 deadline is the deadline for existing providers to meet the new professional standards.
Mm-hmm.
That deadline was extended 3 times to get to that point. The new education pathway is not connected to the end of that transition, and so it's a reform that will not be in place by 1 January and was never intended to be in place by 1 January.
Okay. Thank you. Thanks, Chair. Senator Bragg has a question.
Yep.
Look, just a couple of quick things before we move on from markets or whatever the Chair needs to do. Can I just ask you, following Senator Sharma's questions about the recent spate of financial collapses, I'm talking about the Lion, First Guardian and the Shield matters. I mean, is it right to say that Treasury is considering potential law reforms in relation to those matters?
So as an initial step, the Assistant Treasurer announced this earlier this week, indicated...
Sorry, can you speak into the microphone?
Sorry, you can't hear me.
Sorry.
As an initial step, the Assistant Treasurer announced this week that he had written to the regulators, to APRA and ASIC, to ask them what more could be done to increase standards in the industry, particularly for superannuation platforms and in relation to managed investment schemes in relation to their financial capital.
Thanks, Dr. Moore. So there's a potential for more laws. Now,
so I haven't finished my answer.
My apologies.
Can I finish my answer?
Yes.
And then the Minister also indicated that the government was examining what more needed to be done to protect consumers from bad practices, and the Treasury and ASIC, or Treasury is working with the regulators on examining options. And
okay, thank you, Dr. Moore. Can I just say to you that I think, informing my next question, that it's a bit of an irritating answer, because we have the world's longest corporations law, or certainly a very long one, and we already have very strong provisions on conflicted remuneration, where financial advisors are not supposed to take secret commissions or commissions at all. We also have rules which require people who are running these schemes to invest in accordance with the PDS or the disclosure statements. But these things didn't happen in relation to Lion, First Guardian and Shield. So I have to say to you that, sure, there may be proposals for more laws to make an even longer corporations law, but I mean, isn't this a major concern that in a country like Australia we have all these laws and they're not properly enforced on a systemic basis?
so ASIC will appear later today.
Sure, but I'm asking you as a Treasury's position.
Yeah, so ASIC is taking broad enforcement action under existing laws in relation to these matters. As Ms Kelly indicated earlier, they've been before the court more than 45 times in relation to Shield and First Guardian. It's as part of, I suppose, it's incumbent on us. We've been asked to do the work by the Minister. We are working with the regulators, looking at where there are weaknesses or shortcomings in the law that they might be addressed.
Okay. Well, look, just on this issue, I mean, clearly, we're a country where people would expect, if they do all the right things and they invest in a licensed, regulated system, that they're going to have some level of protection. I think a lot of people are quite shocked that the First Guardian, Shield and Lion things have happened, right? And their money's been stolen, okay? And you're considering law reforms. You've been asked to do that by the Minister, fair enough. But I don't agree necessarily there has been much law enforcement. I mean, you say ASIC's in the court, but what about these people who've been done over here? Is there a prospect that there could be a claim for defective administration? Is that something that you've considered?
Senator, I don't think we can prejudge applications under that process. So
okay. But can I ask you then, if you have a very clear system of regulation and that regulation is not enforced, those laws are not enforced at all, would it be reasonable for people to argue that there was, in fact, defective administration?
I think that's getting into prejudging any application in that process, Senator. And yeah, as Dr. Moore said, you know, and you can talk to ASIC more. ASIC is taking action across a range of, has taken a number of matters forward in this space. It has active matters before the court. So I wouldn't agree with the characterisation the laws aren't being enforced.
Okay, just finally, can I just ask about one other quick thing? You don't do the design of the tax bill, do you, on unrealised gains? That was all done by revenue
groups,
the whole thing?
Yes.
Thanks.
Thank you, Senator Bragg. So, Senator McKim, you had some final, and I just draw the committee's attention to we're just running more than an hour over time now, so if you can be brief, and anything that could be put on notice would be also welcomed, and then we'll go to a break after that.
All right, thank you. I'll try to be brief. I just want to turn to the insurance market in Australia. So I spoke about the lack of competition and how it was broadly similar to the supermarket sector. We've got a situation where Australia's 4 largest insurers hold about 3/4 of the general insurance market. The largest, IAG, reported $1.3 billion in net profit after tax for the 25 financial year. That was up over 50% on their 24 financial year profit. The next largest, Suncorp, reported $1.8 billion in net profit, again over 50% increase on their net profit from the 2024 financial year. So you've got an extremely concentrated sector with, frankly, eye-watering profit increases just over the previous 12 months. Car insurance, home and car insurance is up 35% between June 22 and June 25. It's more than double headline inflation for that period. 8 out of 10 people in this country in high flood rate risk areas are simply not insuring their homes because they can't afford to do so. Insurance companies are reasonably pointing out that increased climate risk, increased reinsurance costs and increased building costs caused in part by supply chain issues are impacting on premiums. So I understand that. But these are eye-watering increases in profits from the insurance sector. Can someone please explain what is going on here? Is a lack of competition in the sector allowing for price gouging, just as the government has accepted that it is in the supermarket sector, because the government has announced they're going to bring in an excessive pricing regime in the supermarket sector? Are companies using cover of things like climate change to put their premiums up over and above what they actually have to do to cover their increases in their input costs? What is going on here?
Senator, probably the best thing I can do, given time, is just refer you to the answer Mr Preston gave to similar questions in the February estimates hearing. So he got asked similar sorts of questions. He spoke about...
Is this Mr Kennedy?
No, Dr Preston.
Oh, Dr Preston.
Sorry, Robert Preston, who's also around today, but he's moved on from insurance. So Mr Preston spoke about how you think about competition and measures relating to insurance and kind of some of the ratios you can look at. They don't show over time that profits in the insurance industry look excessive.
They're up 50% in the last financial year.
As Mr Preston explained back in February, there had been a number of lean years. There had been a number of kind of years of very low profitability in the sector. And in more recent times, as kind of actually been a kind of falling away and natural disaster sort of claims, profitability has gone up. The way the insurance companies in Australia, and now they've changed the way their approach to reinsurance, which makes that cycle a bit more volatile. So when there's a lot, they take more risks themselves. So when there's kind of large set of natural disaster claims come through, profitability is depressed. When they fall away, profitability will jump back up, so you get the volatility that you're referring to. The only other thing I would note, I think in the last quarterly CPI numbers that came out, insurance subtracted from headline inflation.
Oh, you pardon?
Insurance is subtracted from headline inflation in the last set of insurance numbers.
No, thank you, I understand that. Are you suggesting that a lack of competition in the supermarket sector is playing no role at all in this eye-watering increase in profits in the last financial year for some of our biggest insurers?
Senator, I mean, the insurance industry has got many aspects to it, and whether there are kind of areas where lack of competition is driving issues is like open to question. I'm not giving evidence on that, but as Mr. Preston explained in February, it's the cycle of natural disasters, it's construction costs, it's those things that have tended to drive the price increases we've seen, and the kind of what are still heightened levels of general insurance.
Yeah, leaving aside Labor's penchant for approving new coal and gas projects, which is of course contributing massively to an increase in things like flooding and bushfires. I'll just leave that as an observation. Did Treasury support Minister Molino's trip? Did Treasury support Minister Molino's trip to Europe recently to meet with international reinsurers?
Yes.
Yes.
We provided briefing to the Minister to support that.
Okay. Did you underwrite any of the costs for that trip? Did that come out of the department's budget? No. No? Okay. Do you know who funded that trip?
I think these are questions for the Minister, Senator.
Oh, well, Minister, would you take on notice, please, what the funding was for Minister Molino's trip to Europe last month?
If we can provide any information, Senator, we will. I don't know anything about the trip.
I beg your pardon?
I don't know anything about the trip.
I've asked you to take on notice. I think you've agreed to do that. Thank you. Is Treasury aware of who went on that trip?
In broad terms, there were a number of insurers and the Insurance Council of Australia representatives were also on that trip.
Yeah. Would Treasury have a list of participants in that trip, or should I ask the Minister for that?
I think you should refer that question to the Minister.
Okay, thanks. Minister, could you take on notice, please, to provide a copy of a list of the participants for that trip?
As I indicated before, Senator, if we can help you in relation to this trip, then we will.
Then you will. Okay, thank you. Treasurer, there's a legislation before the Senate, the Strengthening Financial Systems and Other Measures Bill. Is there someone here who could speak to that? Is that in this output?
Is there a particular measure in that?
Well, I would like to explore why the legislation doesn't implement a 3-year-long commitment of Labor to implement a public beneficial ownership register.
I think we can give you an update on the status of...
What's that?
You're at 8 minutes.
Yeah, all right, thank you. Thank you. So could I just be clear, the legislation currently before the Parliament does not deliver a public beneficial ownership register, does it?
What the legislation before Parliament seeks to do is reinforce ASIC's capacity to leverage the existing ASX infrastructure to have disclosures of substantial holdings and tracing notice issues by ASIC in relation to the beneficial owners of listed companies. That's right.
Yeah, but it doesn't actually... The provisions of the legislation do not require the creation of a public beneficial ownership register, do they?
That's right. It leverages existing ASIC infrastructure.
Yeah, that's right. So, yeah, of course.
Senator, ASIC is in the process of stabilising and uplifting its business registers across the board through its registry.
Did you say standardising?
No, stabilising.
Stabilising,
and uplifting its business registers. program following the government's decision in August 2023 to not continue with the modernising business registers program. Following
whose decision was that, sorry?
That was the government's decision in August 2023, following the release of the report by Damon Rees that said that continuing that program would have required an extra $2 billion worth of investment. Instead, so that the government has returned the business registers to ASIC. It's in the process of updating and modernising its business register systems that are on legacy systems with significant risks that have been identified. Once that is done, then we will be in a much better position to be able to put in place a register for beneficial ownership. Effectively requiring that to be done in the interim would be risk duplicating that expense.
All right, thank you. So, thanks, Chair. Last question. Look, I guess as a preamble, one of the reasons that I'm asking this is a report recently by the Global Energy Monitor, which found that in Australia, nominee companies where the beneficial ownership is hidden from public view are responsible for about 23 million tonnes of fossil fuel emissions every year. So there are people who are profiting massively from cooking the planet. We don't get to know who they are. They are secretly profiting because they're using the structure of nominee companies, which would actually not be beneficial to them in terms of hiding who they are if there was a public register of beneficial ownership. So that's the sort of context I'm asking about this, and that's an observation, but I'm not asking you to respond to that, Mr McDonald. That wouldn't be fair. But what I would like to know is, should I infer from the answer you've just given, and thank you, I wasn't aware that ASIC were doing that, so thank you, and I am aware ASIC probably even, I don't know, they're in the room or in the building. So I look forward to them coming in. Am I to imply from your answer that at the moment Treasury is not progressing work on a public beneficial ownership register, and that work has been put on hold pending the work that ASIC is doing?
I think what we're doing, this is a very complex area, as you'd be aware, Senator, and we're progressing the matters where we can, which is the provisions that are set out in the bill that you referred to.
We've just heard that bill does not create a public
but it's only
beneficial.
a part of the picture.
I understand
right?
that.
So there's multiple parts of the picture for beneficial ownership. Some are easier than others.
Well, public register's not that hard, is it?
You'd be surprised.
Would I probably would.
Have a read of the report, Senator.
Okay, thank you.
It's very...
But we've been waiting 3 years since... Labor committed to it before the 2022 election, by the way. So we're 3.5 years down the track, Mr McDonald.
Yes.
And now I think what I'm hearing is ASIC are doing a bunch of work and there's nothing meaningful going on in Treasury because you're waiting for ASIC to complete what you've said is a complicated piece of work. So is that a fair summary, or am I being unfair?
I think it is a fair summary.
You
what
don't
I was
think?
referring to, and there's a very detailed piece of work, I don't have it in front of me here, but a very detailed piece of work that was done in 2023 by Damon Rees, the former head of Service New South Wales, that really examined where the modernising business register program was going, and also gave a lot of the background. It goes back over a decade of the technical and other issues that are facing our business registers.
So are you working on a public beneficial ownership register or not?
Well, I would say yes, because I would say that a condition precedent to having one is having an effective business register system within ASIC. Without that, you need to work and duplicate and work in parallel. And given the expense, that wouldn't make sense. So it's not a question of whether or not we're doing it, it's a question of what the appropriate sequence of that work is.
Thank you.
Thank you, Senator. Senator Bragg, quick question and then we're going to go.
One quick question. Did you advise on the Reserve Bank payments bill? Was that your bill? Markets?
This is the bill that recently passed.
PSRA, yeah.
Yes, that's right.
That was your bill?
Yes, Senator.
Okay. My very simple question is why did you draft the bill in a way that meant that the RBA, when it exercised its powers, very significant, very broad powers, will not be subject to disallowance?
Do you want me to take that?
Well, I suppose just as a general, generally we draft the bill according to the policy.
Pardon? I can't-
Generally, we draft a bill according to the policy guidance provided or decisions of government.
I understand that, but this is Senate estimates. We're trying to uncover things.
Perhaps just to add, sort of the, and I don't want to get your hopes up, Senator, of uncovering things, but the nature of that bill reflected the structure of the Act to which it was amended.
Right.
So it wasn't new. It was following the long-standing pattern that was in
Okay,
in
so
the
the
payments
Reserve Bank
legislation.
didn't ask for it. You were just following convention.
I think that's a fair summary.
Is that right?
A fair summary, I think. Yeah.
Okay, thank you.
Thank you. Okay, so that concludes questions for the markets group. So we'll now suspend for 10 minutes and come back at 3:40. Yeah, good to resume. Before I welcome the next lot of witnesses, I'd just like to note that the committee has agreed to release the Australian Bureau of Statistics from the agenda. So now I would like to welcome representatives from the Department of Treasury Fiscal Group, is where we're up to. Thank you. So I'm going to Senator O'Sullivan.
Thank you very much, Chair. Thank you. I shouldn't need the full 10 minutes, so just warning whoever else wants it after that. I want to go to, my questions go to the payment for specific purposes listed on page 5 of the budget paper, paper number 3.
Sorry, Senator, what was it going to?
The specific purpose payments.
States.
Okay. Payments to states. So if we look at the 2024 for New South Wales, they received 26.5 billion, Queensland nearly 20 billion, Western Australia 12.3 billion. And then if we move forward to 28-29, payments in New South Wales is projected to be nearly 29 billion, an increase of 8.6% is my calculation over 2024-25, and Queensland share goes to nearly 23 billion, which is an uplift of 15%. But then Western Australia, my home state, is projected to receive about 9.7 billion. So this equates to a 21% decrease on the 24-25 contribution. Firstly, can you just confirm that for the sake of Hansard?
Damien White, Deputy Secretary, Fiscal Group. Senator, can you repeat which page you were on there? In which budget paper?
Just page 5.
Of what, Senator?
On budget paper 3.
Of budget paper 3? 8.
So 24, WA starts with 12.
So I don't have, so... Whoop.
Payments for specific purposes.
Yeah, wrong year. Okay. I have the wrong year, Senator. This will help. Okay, so we're back to there. And so your question was WA's numbers go or do not increase as much as New South Wales or other states you mentioned. Was that just the question?
So New South Wales is up by 8.6, Queensland's up by 15%, and WA goes back 21% over the forwards.
So, Senator, I might get some help in a second, but in general, specific purpose payments are made under federal financial agreements with those states for various things, hospitals, schools, etc., lots and lots of other little things. And they will set out the sorts of things that states get money for. Now, I don't have the specifics about this, and I don't know if Ms Thomas will help me in a second, but it looks as though WA in 24-5 has gotten a significant more amount of money than in other years. There's a chance that there were some special payments made in that year that are one-off or ending, but I don't know unless Ms Thomas has
historically,
better...
then what was it then in the previous?
Yeah, so we might see if we've got it. Otherwise, we might have to take it on notice about what we've got there.
Hello, Margaret Thomas, First Assistant Secretary, First Nations and Commonwealth State Division. Mr White is correct, but I would also add that because we have expiring and renewed agreements at various times across negotiations with states and territories, when we're forecasting ahead, we're really sort of making assumptions about, well, not even assumptions, we're waiting actually for these funding agreements to be renegotiated with individual states on these specific purposes. And so really they're probably not a great litmus in terms of looking to what beyond the out years you're referring to, what it will actually reflect. I don't actually have the specific breakdown of what constitutes the total payment, so I'm happy to take...
That was going to be my next question. So what are the... Because I see that it goes to National Skills Agreement, partnership agreements, the education, infrastructure and the like. So is there a particular area of agreement that is actually going down?
I can't comment specifically for Western Australia, but certainly where we're seeing movement is with things like the Disaster Recovery Funding Agreement, and also we're awaiting forthcoming negotiations on things like the Preschool Reform Agreement, and in addition to the National Partnership Agreement agreements that you pointed to, Senator, we also have a range of specific sectors and category payments that are outlined in Part 3, including the latest results from the financial budget outcome.
So if I look at the table there on page 5, it's not really lumpy. Like it's not, so it's 12 billion in this year, and then it sort of sits around that 9.8, 9.6. Like it's not actually that lumpy for the remaining years. So to that point earlier, where there could be an outlier year, like it's not really jumping around.
Senator, if you look at page 15, it has a more detailed breakdown. In the year 24/5, in the last line of 24/5, there's a category called National Partnership Payments, which picks up a number of things, where WA gets $4.9 billion. You can see in future years that goes down to 3.3 and then 1.9, and it stays and then at 1.3 and 1.1. So something's obviously happening in that category. In the first year, it's very large, and if for some reason it falls, that is the main thing that is driving the fall. I think we'd have to take on notice what's in that if you want a more detailed answer about what's going on.
Okay. Is that the category that covers off on infrastructure, or is that a separate area?
The footnote says it covers off on financial assistance grants for and/or payments direct to local governments, payments funded through appropriations in addition to Section 16 of the Financial Relations Act. So I don't quite know what is in that category, to be honest. I think it's everything that's not in the above categories.
Okay.
Which does not. I don't think that includes. I don't think infrastructure is included in the above category, so it may well include infrastructure.
All right. So on notice then, could I have you come back to me with the breakdown and where the changes within the specific purpose payments are, where that's changing over the forwards?
Yeah, we can do that, Senator.
Terrific. Thank you. Thanks for that. Thanks, Chair.
Thank you. Any other comments? Yes, Senator Patterson.
Thank you, Chair. I want to follow up a series of questions I was asked to the Secretary this morning. I'm not sure if relevant officials are watching, but she indicated that you'd be the best people to help me. So, as I said in one of our exchanges, page 1 of Budget Paper 1 contains the claim the government has returned 69% of tax receipt upgrades to the budget since the PFO. What is the quantum of the tax receipt upgrades?
Thank you, Senator. Given the discussion this morning, can I just give a bit of a context and how we got to this and how it all works?
That would be helpful.
And I will give the number and stuff as well. So,
thank you.
So in budgets and my EFOs and those fiscal updates, we have a reconciliation table in Budget Statement 3, which provides basically how the underlying cash balance has changed between the previous update and the next update. It goes over the forward estimates years, so it's 5 years in budgets normally and 4 years in my EFOs. And as the Secretary said this morning, if you add all those up over the course of the last 3 years, in the last term of government, was $209 billion improvement in the underlying cash balance over those 3 years.
Mm-hmm.
But the reco table then splits those changes into categories. So as you were talking about this morning with the Secretary, part of that is parameter and other variations, which is the things that just change because the numbers of people or the value of things change. It's not an active decision of government, so maybe more people get pensions or those sorts of things.
Exactly.
The other part is...
And sorry, what was the value of that? Can you tell me what the value of
I'll get to the value of that, it'll be fine.
Okay, yep.
The other part is, as we talked about, is government decisions, so they make changes to things.
Yep.
And that table, and there's a similar table in the revenue part of the budget statement as well that splits to tax and non-tax revenues. So that's sort of the source of the numbers we were using in this. And then we talked a little bit this morning about a bit of a caution on some of those things. So when measures go into those things, they're costed at the time they're costed. It might not be the case that they're worth exactly the same amount over time, right? So if you have a 4-year costing of a measure, by the time you get to year 4, lots of things might have changed in the economy that mean it's a bit different. So it's just that that measure number might not be precisely what it is in actuality, but we don't change them. Effectively, they go into the estimates variations part.
Mm-hmm.
So since the 22 PFO, the economy's performed better than anybody expected at that time when the estimates were there. A lot of resilience in the labour market, low unemployment, lots of employment growth, some profits. That's led to substantial upward revisions to taxes in the period. And the number you are asking about that forms the base of that calculation in the 69% is $371 billion.
Okay.
Now, that's over the period from 22.3 to 28.9, so it's a 6-year period. So some of that's actuals and some of it's forecasts, which may or may not come to fruition.
Okay.
And so 69% of that number, Senator, has been returned to the budget, as stated in that
Right, so
example.
just to help me, just before we go any further, because this is very useful. When the claim is 69% has been returned to the budget, but it includes a period of forecasts, it hasn't yet been returned to the budget.
No, in the forecast it's been returned
planned
to the budget.
to be returned, but it hasn't actually been returned. Right, so if we just restrict ourselves to the actual budget numbers, so let's say 22-23 to 25-26 or 24-25 would be better perhaps, you tell me, what would the number look like?
So unless Ms Brown's going to help me, we don't have a number for that. So for the 24-5 year itself, so 1 year, it's 72%.
Yep.
But I don't know if Ms Brown has a number for effectively for the last 3 years.
Yep.
Philippa Brown, First Assistant Secretary, Budget Policy Division. We might just see if we can calculate that number, but I'm not sure if we can in real time.
That'd be helpful. Because I've got to say, I think if you told most Australians when the government says we have returned 69% of tax receipt upgrades to the budget since PFO, they would think that does not include forecasts going forward. They would think that's just actual things that have happened. So I think that is important to establish what that number is.
Just on that. So the reason that has happened is it's basically calculated in the 4-year period of the forward estimates. And of course, as we've gone through time, years have dropped off at the beginning and we've added years at the end, and it's just the forward estimates. The one other thing that I would mention is that at the same time, over that same time period, the estimates variations on the payment side of the budget have cost the budget a little over $100 billion. So they've partly offset that 371.
So just explain that to me. $100 billion cost to the budget.
So in the same way that the economy has given us lots extra tax in that period, changes on the payment side, not due to measures, measures are costing us $100 billion more than we thought.
Right. So
at the 22 PFO.
Yes. So government decisions have deteriorated the budget by about $100 billion.
No, that's not government. That's on. So this is the equivalent to the 371. This is not government decisions. This is just things that happened in programs. So nobody changed tax to get that extra 371. Right. It just was the system working and got extra money, and the economy was better. The same way, on the payment side, all the government payments that were already in place just cost $100 billion more than was estimated.
Yep, understood.
So for example, Senator, veterans payments
grew
by 31% between 24 and 25 and 25-26, which was just a function of clearing the claims backlog. That was a result of the previous government's maladministration of Veterans Affairs.
Okay, thank you, Minister. So the net effect of factors outside the government's control, in simple terms, would be about $270 billion.
Approximately, yeah.
Okay, all right. So it's a $270 billion kind of windfall, I guess.
Yeah. The budget is better by $270 billion from the economy and other things. Yes.
Yeah, factors outside the government's control rather than the government's decisions. So maybe it's me. Maybe I was not describing what I was looking for very accurately. But the impression I took from the Secretary, and I really don't want to verbal her because that would be unfair and she's not here to defend herself, but you can maybe do it on her behalf. The impression that I got from her was that this is not possible. In fact, I think she did use the word impossible at one stage. So how did we... seems like, in fact, it's quite straightforward and, in fact, done in the budget papers.
So I suspect, Senator, and I will try not to verbal my Secretary because that's probably not a good thing to do for longevity and being in the job. I think she was trying to talk about some of those cautions about the way you use these numbers, Senator, this morning. So the fact that measures numbers over time are probably not the right number, but we don't go back and cost them. And that point that it's not the same 4-year period we're measuring every estimates update, right? So we're not necessarily doing apples with apples,
I get
but
that.
we can add some of them up just knowing that those caveats exist.
And, as the government does. But I think there's a big difference between not possible and here's some cautions around these numbers. But I won't ask you to comment on that. I'm glad we were able to establish those facts. Thank you. I might come back to some further similar matters later if I can. But I just want to move on to the Charter of Budget Honesty. I have a copy here which I'm happy to table, and I'm going to quote from it, so that might be
Of just the charter, Senator, that's what you have?
You've got it?
I'm going to check that I have it. I think I have it.
It's just, there's just one particular page which I can share with the Secretariat, maybe, just in case you need to reference it.
Maybe I don't have the charter budget honesty with me.
Thank you. So, obviously, this is legislation introduced by the former Treasurer, Peter Costello.
Yep.
And one of its requirements is that there be a fiscal strategy in each budget. If you don't have it, I'll get the Secretariat to bring a copy around for you, but I can also just quote from it in the meantime. Part 4, Section 7 refers to the purpose of fiscal strategy statements. And it says, and I quote, "The purpose of fiscal strategy statements is to increase public awareness of the government's fiscal strategy and to establish a benchmark for evaluating the government's conduct of fiscal policy." On page 58 of the 25-26 budget has the current government's fiscal strategy, which I also have a copy of and can table, but you would have budget papers, I'm sure. And I want to refer to that. So page 58 of the budget. And one thing I would like you to help me with is going through that box 3.1, the government's economic and fiscal strategy on statement 3. Is there any numbers in the government's fiscal strategy?
There are no numbers in the box, Senator, that I can find at a quick look.
I couldn't find any either. Is that box the totality of the government's fiscal strategy, or is there some other appendices or...?
No, that is the fiscal strategy.
That's the fiscal strategy.
But I would say that there are some things that are quantitative in here without numbers.
Yeah, I'll come to those.
Yep,
I want to talk about those in a minute. But is it unusual on the face of it to have a fiscal strategy without any numbers?
Since the Charter of Budget Honesty was introduced, Senator, governments have had different strategies over time. I think mostly it would be fair to say they've had numbers, but I don't know that they've always had numbers.
Like in the Rudd-Gillard government, when under Treasurer Swan, there were lots of numbers in the government's fiscal strategy.
Yeah. So I think it's fair to say that mostly there have been some quantitative measures maybe all, there might be some exceptions, fiscal strategies.
Slightly hard to achieve the Charter of Budget Honesty objective of establishing a benchmark for evaluating the government's conduct of fiscal policy if there aren't any numbers, objective numbers to measure it against. But let's persist anyway and see if we can. So that first bullet point of the fiscal strategy on page 58 says that the government will be directing the majority of improvements in tax receipts to budget repair. Is that right?
Yes, Senator. Can I make a separate point first?
You may.
The overarching goal of the fiscal strategy is in the third para of that box, which talks about reducing gross debt as a share of the economy over time. I would also argue that
I'm keen to talk about that as well.
Yeah, that's fine.
Before you do, how do you identify that as the overarching strategy? Where does it say that's the overarching strategy?
It says it in the second line of that paragraph, Senator.
Yep, so quote it for me.
It says it's the overarching goal.
The whole thing?
So the government will improve the budget position in a measured way, consistent with the overarching goal of reducing gross debt as a share of the economy over time.
I don't interpret that to mean that's the overarching goal of the fiscal strategy. You may differ in your interpretation, but I interpret that to mean that the government will seek to improve its budget position in a measured way, consistent with the overarching goal of reducing gross debt as a share of the economy over time. Is you saying that's the overarching strategy of the overarching approach of the fiscal strategy or objective?
I would have. So that was how I took it, Senator. Yes.
Okay. All right. Well, that's not how I read it, but good, sincere minds can disagree. On your budget papers, can you go to page 63, table 3.2 of statement 3?
Yep, Senator.
Explain to me what the purpose of this table is.
This is the reconciliation table that I was referencing before, Senator.
Great, okay.
It tells you how the underlying cash balance changes from one estimates update to the next.
Great. As we were discussing, things within the government's control or outside the government's control. What were the revenue upgrades for the government in the 25-26 year?
In that table, Senator.
Yep, and can you read it out to me? What's the number?
Is that the 7036 billion? Well, 7.036 billion.
7 billion, okay. And what were the government's spending decisions in the same budget for that financial year?
In the line above, Senator. So for both revenues and payments, it is 7244.
724 billion. So in the 25-26 budget, the government spent all of the revenue upgrades, in fact, slightly more than the revenue upgrades. Is that right?
In that 1 year, Senator, yes.
Yep.
But in looking at that 69% of revenue returned over time, that's an over time measure.
Yes, which gives them credit for budgets they haven't actually delivered yet, as we discussed before.
Or years that have been in the past.
For years that are in the future.
And for years that have been in the past. It's a bit like.
Hang on.
I'm astonished at this line of questioning. Really,
you shouldn't really be.
For a show that wanted surpluses for 9 years but delivered zero of them. Got the mugs printed. I was here when all the mugs came out.
Yep. Well, that's very interesting, but not at all relevant to my question. Thank you, Minister. I'd like to stick to the questions about the budget papers.
What's the point of having a focus on numbers if you can't achieve them?
Thanks, Minister. So, just to come back to the witness, who is the expert on the budget rather than you, Minister, the government did not achieve its fiscal strategy in that financial year, did it?
Senator, as I said, the fiscal strategy, if you look back on page 59 of the budget, it talks about returning the majority of tax receipts there. It talks about the 69%. We've got the number for the last 3 years, which is 83%. Pardon? 85%, sorry.
Thank you.
So if you're looking at it over a period rather than one individual year and one update, then we get those numbers.
Sure. But I mean, do we get a leave pass from our fiscal strategy in 1 year? Is it like a hall pass kind of arrangement? We adhere to it some years but not others?
I think fiscal policy matters over time, Senator, when we're thinking about this. You couldn't have every single year doing what you're saying, but the numbers show that's not what's happened.
Okay. You said to me before that it was your interpretation that the overarching goal of the strategy was reducing debt as a share of economy over time.
Mm-hmm.
Is that right?
Yes, Senator.
It also, and in support of that objective, dot point 2 is limiting growth in spending until gross debt as a share of GDP is on a downward trajectory.
Yes, Senator.
So how would you define limiting growth on spending? Is there a kind of a numerical number we can put on that?
I don't think we have a numerical number on that, Senator, but...
Is there an objective measure or an agreed measure, like faster than the economy grows or slower than the economy grows or something like that?
Less than the previous government, for example, could do that.
If you look at the dot point...
Could do that.
If you look at the point on page 59 towards the bottom, Senator, it says real payments growth over the 7 years to 28.9 is 1.7% on average.
Yep.
And it's 2.7 over the 5 years to 28.9.
Yep.
And that compares to the 3.2 over the last 30 years.
Yep. And what was it in the last financial year?
I think I've heard this question before with finance, and it's 5.5%, Senator.
Yeah, it was 5.5%. Is 5.5% limited? Does that meet the definition of limited?
Again, Senator, I think the idea of all these measures is looking at them over a period rather than an individual year.
Okay. Again, coming back to this gross debt trajectory, which in your words is the main purpose of the fiscal strategy, or the main highest objective of the fiscal strategy. Australian government securities on issue before and after 24-25. Can you describe the trajectory for me as a share of the economy?
Sorry, which time frame were you asking about there, Senator?
I'm asking for prior to and after 24-25.
So
what's the trajectory?
Prior to and after 24-25.
Correct.
So in the FBO, the gross debt on issue is 33.5% of GDP, and that's come down, Senator.
Mm-hmm. So what is the trajectory for the next couple of years?
Yep, if you bear with me. So what is it? It's table 10.5. So table 10.5 in the budget paper 1, Senator, has the data. So if we go back, so net gross debt peaked at 39.2% of GDP in 2021 in the COVID period. It's down to 33.5% in 24/5.
And then what's the forecast?
It's forecast to go up to about 35 and 36% over the next few years before it comes down again in the medium term.
Yes.
One of the things we'll have to look at, because we've had a slightly better budget outcome and a slightly lower number for debt.
Yep.
That will obviously get updated in my EFO. The lower debt in the current year possibly might bring those down a bit. I don't want to overstate that, but the comparison's not quite apples for apples right at the moment.
Understood. But just to summarise, taking our previous financial year, which we just had the final budget outcome for, you're right, debt was trending down, and now it is trending up. It is forecast to trend up. Is that accurate?
It is, Senator, yes.
So if debt is rising and spending last year grew at 5.5%, which is 4 times the rate of the economy, how is the government adhering to its overarching fiscal strategy of limiting growth in spending until gross debt as a share of the GDP is on a downward trajectory? It's on an upward trajectory.
It is in the future years, Senator, yes. And as I said, if we look at growth in spending over time rather than an individual year, into the out years of the forward estimates, growth is pretty low. It's well below 5.5%.
Yeah, if you believe the forecast. But the government has set itself a pretty rubbery test of limiting growth in spending until gross debt as a share of GDP is on a downwards trajectory. But just at the very moment that gross debt as a share of GDP is on an upward trajectory, spending growth is also on an upward trajectory. So they're not meeting that, are they?
Well, Senator, you're right. These figures, not in all respects, Senator Patterson. You're right about this element of your questions. These are, of course, forecasts that rely upon assessments about the fiscal strategy. And on the gross debt peak, it's expected to get to around 37% of the economy. Just contrast that to the 2022 PFO, when Mr Morrison was the Prime Minister and Minister for a series of other things that were a secret. It had it somewhere between 44 and 45% at the same point in time. There is, of course, an environment that's been described by the officials, and the Secretary traversed it earlier today, where there is, in areas of spending pressure on because of the exigencies that have been referred to. But that is a substantial difference in outcome.
Thank you, Minister.
Driven by an approach that's been about fixing the fundamentals.
Thanks, Minister. We have limited time, and I share the Chair's objective of working through the program, so I appreciate that you have to make interventions
we agree
from time
about
to
that
time,
too.
but let's leave it at that. I think you've made your point. Mr White, you are right in saying that in the medium term that those gross debt figures start to come down. The reason for that, as we discussed with your colleagues in Revenue Group, is that bracket creep increases the tax to GDP ratio and closes roughly 1.5% of GDP of deficit, which of course the government was keen to assure me will not happen. They will not allow those taxes to rise. They won't allow that bracket creep to happen. So if that bracket creep doesn't happen, because the government cuts taxes, as your colleagues told me they may do, gross debt won't fall as a percentage of GDP, will it?
Senator, we clearly have charts in the budget that show how the gap in the underlying cash balance closes, and as you said, it's because the receipts line moves up a fraction.
I'm not sure I agree it's a fraction. 1.5% of GDP is pretty big.
What about I just go, it moves up? Fine. Questions like, in the future, if the government's cut taxes, If that's all they do, sure, mathematically that will make the budget deficit worse, but in the future they could do other things as well.
Indeed, but I was assured by your colleagues and by the Minister at the previous session that of course they wouldn't allow that bracket creep to take place, and that there may be tax cuts coming in the future to prevent that from happening.
Senator Patterson,
you can't on the one hand
only
claim...
hours ago.
Minister, let me
your
finish
memory
and then I'll let you have a go.
can't be that bad. Your memory can't
Let
be
me
that
finish
bad.
my point, Minister, and then you can have your go. It's not reasonable for the government to both claim credit for improving budget bottom line and also ensure Australians that the means by which we deliver that better budget bottom line, namely higher taxes on people's personal incomes, won't ever happen. Pick one, Minister. Which one is it going to
be? You started out so well.
Thank you.
You started out so well, and then it's got very confusing.
Maybe only two.
There is, as I think the official has pointed out, it's a bit unfair, really, to ask a question about a proposal that isn't government policy and what impact that might have. The truth is,
which one's not government policy? Just for clarity, what's not government policy?
Well, I've listened with interest to Mr. Taylor venture the view this morning that coalition policy ought to be to abolish.
That's not government policy. That's for sure.
There hasn't been any attempt at costing what the implications of that might be. Should the coalition ever form? This is
a hearing about your policies, Minister, not ours.
And so I understand test running some of these propositions to see how they land in estimates. But it would be good if there was a coordinated approach across the coalition.
Thank you for that.
On your approach to these questions.
I will dutifully.
Our job.
Convey your political advice, Minister, which is gratefully appreciated.
Apologise to Ted for boosting.
I'm happy to share the call.
For boosting Mr. Taylor's
and thank you, Senator Patterson.
Policy bubble.
I don't. Senator Bragg, did you have some questions here? You
just quickly. So, impact of productivity on the bottom line, is that something I can ask you about?
You can, Senator.
Okay. So what is the productivity assumption in the budget? Is it 1.2% growth?
So that is the long-term assumption, Senator, yes.
Yes. What's the short or medium-term assumption?
So I'm going to do a very short answer for this because this was our macro group colleague's spot. But in the shorter term, they actually forecast productivity like they forecast all other. In the first year or two of the forward estimates, there's actually a proper forecast process that forecasts everything. Later on in the estimates, for a number of things, they go to a long-term assumption.
Okay, so productivity growth last year was 0.2%. Is that right?
I don't know, Senator, but,
okay,
but I can take your word for it.
Okay, but clearly, like, the long-term assumption of 1.2% growth does not appear to be matching the current market expectation.
So we have long-term assumptions for lots of things in the budget paper, Senator, which are normally based on a long-term view of history, which may or may not accord closely with what's happening right now. Things could be high, things could be low. Examples of those could be things like the commodity price assumption, Senator, where we have them going down. So there are a range of assumptions that we have in the long term because going out more than a few years, we are not confident that we have a better answer than a long-term average.
Fair enough. So, I mean, how long is a piece of string, I guess, but how material would you say are the productivity forecasts to the budget bottom line? I mean, are they material factor or immaterial? I mean,
so
do you have a judgment on that?
What about I answer it like this, Senator? Just as we've talked about with Senator Patterson, economic growth is important to how the budget position looks.
Yeah.
Productivity is a part of economic growth.
Yep.
Lots of other things are also parts of economic growth, right?
Sure.
Normally, stronger economic growth leads to a stronger budget position, and weaker economic growth leads to a weaker budget position. So to the extent that productivity is a mix of those factors, it will be one of the things that determines how fast the economy is growing and what the budget looks like, you know, in terms of, you know, how much tax we get from how many people we've got employed, what profits look like, how many people we have in jobs that aren't getting unemployment. It's all those sorts of things. It's one of the things that matters. I mean, the other thing, like, you know, participation, population, unemployment, all those things matter. So it is one of the things that matters, Senator.
Okay. So just so I can kind of nail this down and move on.
Yep.
So the long-term assumption in the budget for fiscal purposes is growth of 1.2%.
Yes, Senator.
Okay. And do you use the same model or the same methodology as the PBO?
I don't know, Senator. So normally with things we use similar models to the PBO for things, but I don't know on this particular case about that or how they would determine economic. I mean, normally they would use our economic growth numbers as the basis of their estimates. I think that was in the Charter of Budget Honesty. They should do that. I might be wrong, but I think that is the case. But if they're doing scenario analysis, whether they do it the same way we would do it, I don't know. But as I said, if you have slower economic growth, your budget probably looks worse.
Okay. Have you seen their analysis they've done where they've looked at a 0.5% growth scenario?
I've only read media reports, Senator.
Okay. What do you make of that, given that I think you do have generally the same modelling capacity or the same methodology?
So it's a bit hard to comment given I haven't seen it, Senator.
Right.
But as I said, if all they've done is reduced productivity and that reduces growth, it's a pretty unsurprising outcome that they would get a worse budget position.
Okay, so you don't think that...
But I don't know whether... I can't comment on what they've done or the reasonableness of it because I haven't seen it.
Okay, so effectively your answer is if you reduce these things, you're going to get a worse number.
Yes, Senator. And the other thing I would say is that when things change in the economy, normally one doesn't change at a time, a whole bunch of things changes, and it's the sum of all those.
Okay, so are you, I mean, okay, finally then, what process do you have to risk manage the budget bottom line, given that I would say that there is not a huge degree of confidence across the market that 1.2% is going to be met? How do you risk manage the risk that the budget is massively out of whack?
So I'll mention a few things, Senator. So in the short term, it's the economic forecast process that looks at what the economy looks like now, what we think it's going to do over the next couple of years. And the people who do that make their best professional judgment at that, and it informs the budget. In the longer term, we have, as I said, a number of things where we put them back to about like basically historical averages, for want of a better term, on the assumption that we have no better judgment than that. Then it's a balance of how they play out. Like some will end up being stronger, some will be weaker. We put some things in the budget and the intergeneration reports in it that do scenario analysis. So the intergeneration report from a couple of years ago in 2023 had a scenario with weaker and stronger productivity, and it showed, unsurprisingly, that stronger productivity put you in a better budget position and weaker productivity put you in a lesser budget position. So we think about the balance of risks on those things, and the government thinks about that when it's thinking about its policy decisions.
Thanks, Mr. White. Thanks, Chair.
Thank you. If there's no further questions. Okay.
Just to go to gross government debt, if I could again, please, Mr. White. So it's table 10.5 in the budget papers. It's the right reference for that. I think that's the one you referred to.
You're in budget paper 1.
In budget paper 1, yeah. Is that? Yeah.
Yep.
So when does... I just want to check I've got this right. When does gross government debt exceed $1 trillion? Or when is it expected to exceed $1 trillion?
On the numbers in that table, Senator, in this financial year.
In this financial year?
In 25-26.
25-26.
The only thing I would just say about that quickly, as I said before, we had a better outcome in the FBO just gone, so we will update that and we'll have to see if that's still the case.
Okay, okay. And I understand that there's a limit on the amount of Australian government securities that can be issued at any one time under law, is that right?
Ms. Brown.
Yes, there is a limit.
And what's that limit currently?
$1.2 trillion.
So when would we hit, on the current estimates, when would we hit 1.2?
Well, again, reading from table 10.5, that would occur sometime in the 28-29 financial year.
Okay. So are there plans afoot to adjust that limit? How's that limit adjusted?
That's a legislative instrument, and so that's a matter for the government to determine.
Okay. So there hasn't... When was the last... Is the Treasurer's direction, is that what it's called? It sets the...
I think that's the case. I think that's right. And I don't... I'm sorry, I don't recall when it was last adjusted, but we could certainly take that.
Yeah, would you mind taking that on? My understanding is it was 2020 in the midst of the COVID pandemic, but if you could take that on.
It's been at least a couple of years, Senator. It hasn't been really recent, yes.
Hasn't,
but we will take it on notice.
But it's correct to say that if gross debt tracks as forecast here in before 28-29, the Treasurer would need to issue a new direction to increase our debt ceiling effectively.
If it tracks on the current forecast, there's a lot of water under the bridge between now and then.
True, but
yes,
it could arrive sooner as well. Yeah. Okay. Thank you.
When
Chair.
we came to government, gross debt was projected to exceed $1 trillion, I think, in 23-24. Our more responsible budget approach has meant that hasn't.
I think it's actually
occurred for
revenue upgrades
for two more years, and I think
Minister, I think it's revenue upgrades as Mr. White was outlining.
When there's an improvement in the position, according to the Liberals, for a Labor government, it's anybody's responsibility but the government's. When there's a deterioration of the position under the Liberals and you declare that you're about to achieve a surplus, it's nothing to do with us. Nothing to do with us.
I think Mr. White
we have managed the budget carefully and effectively, and that is producing results. In terms of the fiscal sustainability of the budget, and we are attending to that very carefully.
I think, as Mr. White outlined, you've been the beneficiary of a number of factors outside the government's control as the budget papers break down.
Well, good economic conditions is often a result of good economic management.
Yes, we can conclude this session. Everyone's finished with their questions here. Okay. Thank you to the fiscal group officials. I'd now like to welcome representatives from the Department of Treasury, Small Business, Corporate and Law Group to come forward, please.
I might die of hypoglycemia.
Okay. Are we just about ready? Yep. We'll kick off, and with any luck, we might be able to make up some time here. I will throw to my colleagues from the Coalition. Senator Patterson? Oh, no. Senator Bragg.
Thanks very much. Good afternoon.
Hello.
I wanted to ask you about the matters that we initially canvassed with the Secretary this morning. I think you were here for that.
I was, yeah.
Ms Anderson. So the inquiry into the governance issues at Housing Australia. So when did the inquiry take place?
Senator, sorry, I should introduce myself. Victoria Anderson, Deputy Secretary, Small Business, Corporate and Law Group. So as noted by the Secretary this morning, there were concerns raised in relation to Housing Australia in late 2023. Treasury commissioned an independent review at the request of the former Minister, and the review found no breach of the Housing Australia Board of Conduct had occurred. that investigation occurred in the early parts of 2024.
Okay. And what form was the report in?
The review report was
done internally?
No, we contracted an independent company to do that review on our behalf.
Okay, who did the report?
A company called Intersection.
What do they do?
They do these sorts of workplace investigations.
Was it an HR style?
Yes, largely. I would characterise it as that, yeah.
Okay, and how much did that inquiry cost?
That inquiry cost $24,640.
$24,000?
Just over that, yes.
And what's the name of the company?
Intersection.
Intersection. Okay, and so they did their job in early 2024?
That's right.
And they provided you with a report?
They provided it to Treasury, yes.
And who did you provide the report to?
We provided that report to the Minister at the time after it was received.
What was the Minister's role in this process?
Well, the complaint was against the statutory appointee from the Minister, so the Minister was interested in understanding the issues to ensure that it was appropriate, that the appropriate action was taken in relation to the concerns.
And was it a report under the PGPA Act?
No, Senator.
It wasn't?
No.
Okay. So it was a report, it was a review done on the basis that there'd been complaints?
That's right. There were concerns raised, yes.
But not under the PGPA Act?
No.
And why is that?
Well, there is no referral power under the PGPA Act. It was the accountable authority for Housing Australia, which is a corporate entity, is the board itself. And the reference to the Minister came from the management of Housing Australia at the time.
Okay. And how many complaints were there made?
Senator, I'm not going to go into the detail of the report. It's quite unusual to be talking about an investigation report in an open hearing because there are many different equities involved from both complainants and respondents. So I'm in this forum, I don't think it's appropriate that I go through the detail of the review report.
But the issue is not to do with the disclosing of personal information. It's to do with the functioning of the board. So I guess the question is then, what are the recommendations of the report?
So again, it's not something I'm willing to go into at this point. I know you have an active FOI for that report, Senator, that's before the Information Commissioner. So at this point in time, we would prefer to wait until the outcome of that.
But as you know, Ms Anderson, the way that the FOI law works, well, the way that they work at the moment, unless the government is successful in gutting them, is that the FOI has no relevance to Senate estimates or the processes of Senate discovery.
Yes, and I think what I'm saying to you is there are, while we have an FOI on foot, we would prefer not to talk about it. There are other reasons like personal privacy, the sanctity of sort of the investigations process. If I talk about one report, there could be any number of things that would require me to talk about people's personal information. So again, I don't think it's appropriate that I talk about the detail of the report.
Okay. So I'm not asking you to provide personal information. I'm asking you what were the recommendations of a governance report which cost taxpayers $24,000.
So I've indicated to you, Senator, the investigation was into certain concerns raised and that whether or not there were issues relating to the conduct of someone at Housing Australia, and as a result of that, the investigator found there was no breach. So I'm happy to talk about that. I think the other matters would be something I would need to take on notice.
So when you say there's no breach of what?
Of the Housing Australia Board Code of Conduct.
Okay, but are there improvements that are going to be made as a result of this report?
I would probably leave to Housing Australia exactly the nature of the improvements that they have made. I mean, it's important to note this was 2 years ago, so obviously quite a bit has occurred since these issues were raised. So yes, there have been significant, I think, changes in both management and in senior management roles and various other things that Housing Australia would be able to talk to more directly.
So the Secretary said this morning that there was a view that the government needed to have a stronger linkage, I think was her wording, into Housing Australia to ensure that it could achieve the government's aims, which is a reasonable proposition. And I mean, what is the driver there? Is it a governance concern? Is there a performance concern? I'm interested in why your agency has decided to appoint an observer.
Oh, the observer role. Again, I would defer to my colleagues this evening, but I would say that has always been a provision in the legislation. Even the earlier organisation, which was NIFIC, or National Housing Infrastructure Financing Corporation, I may have got that wrong, sorry Hansard. So NIFIC, the legislation had provision for an observer, and I think there has been an observer in the past. The housing, in the conversion to Housing Australia, was obviously a big step up in the responsibilities that organisation had, and the provision has always been there to have an observer, and recently the Minister decided to enact that, as far as I understand. But again, that would be something that Housing Group would be more familiar with than me.
And who is the delegate?
I believe it's the Deputy Secretary responsible for housing, which would now be Mr Ben Rimmer, who only commenced last week.
Okay, he is the person.
I believe he is the observer. You would need to confirm that with him later today, but I believe that position is designated as the observer position.
Okay, so I guess my question here, though, is are you raising a public interest immunity claim in relation to the recommendations of the governance report?
So, Senator, I would like to take on notice to determine if that is the case, if that needs to be the case. I've talked a little bit about the issues that that arose. There are other issues intertwined with that, and I would need to take on notice as to whether or not we're in a position to be able to provide that to you. And so the government, the Minister may wish to make a public interest immunity claim. I don't know.
So I guess I need to seek...
You're at 8 minutes.
I guess I need to seek guidance here as to whether or not you are able to file that PII claim, or whether the Minister needs to do that. So I'm just seeking advice from...
So the officials taking it on notice and will...
I'm not sure that's right, though.
We'll consider our approach to that question. What she said, of course, is there's a series of questions, of course, that you're entitled to get responses to, and you have. But that the principle here, beyond the PII question, is that there's an investigation that's been commissioned. There's findings. I'm sympathetic about an approach that says there should be some caution about revealing the outcomes of investigation that may in fact reveal the details of the investigation. Sure. With that caution, we'll take it on notice and we'll work out the officials will work out the best response.
Thanks, Minister. So I guess for the record, for clarity, the information that I'm seeking from the official are the recommendations of the $24,000 report, not seeking the internal human relations matters. I'm wanting to know what are the recommendations out of that report. My understanding is that the standing orders require the information to be provided, or for the Minister to file a public interest immunity claim.
And it might turn out, Senator, that that's entirely appropriate for that to be provided to you. But the officials take it on notice, and she's entitled to do that.
So I'm just seeking advice here from Secretary.
Yeah. Yes, that's right.
Is that right?
Yes.
So you can take it on notice?
Yes.
Even though they've got the information?
The official didn't indicate that, and the official, as I understood
I'm seeking the recommendations of the report.
I don't have the recommendations of the report with me, but I would maintain I would need to take this on notice in order to determine whether or not there is a grounds for a public interest immunity claim.
Okay. Well, do you know what the recommendations are?
I do, yes.
You do? So
yes.
That's what I'm asking you for.
Yes, I understand what you're asking for, Senator.
So they have the information. I'm now asking whether or not they are filing a PII claim or not.
Senator, the official said that she knows what the recommendations are. It doesn't mean she has the recommendations in front of her. I'm not sure whether they're half a page or 1 page or 20 pages. I have no idea. But she's indicated that she's proposing to take that question on notice, and she's entitled to do that.
Well, I'm not sure that is right. So I guess, I mean, this is a matter of great public interest given there's billions of dollars in this scheme. It hasn't been very successful. It's got a major governance issue. They're sitting on a report. They know what the recommendations are. I'm trying to get to the bottom of this. So I guess I'm seeking advice as to whether or not they are going to file a PII claim, which I think they have to do.
I think, sorry, Senator, perhaps I can help as well. Erin Wells, I'm the Chief Legal Counsel for the Treasury. So I believe that under Senate Order Standing Order number 10, that the PII claim can only be made by ministers or in limited cases by statutory office holders. So we're not able to, as officers, to make the PII claim. So we will need to take that on notice and consult.
Are you making a PII claim? Minister?
I agree that the assertion that the officials just made is correct, and we'll take our approach. She's entitled to take it on notice. She's taking it on notice, and I think earlier today the schedule for providing answers to questions that have been taken on notice has been provided to you.
So where does that leave us? I think they need to provide that in. I think you need to provide the PII in writing, though.
Well, the minister
that will be in the response to the questions when it's provided. It'll indicate whether or not there's an answer, a partial answer with a PII or no answer with a PII.
That's right.
All right. Well, let's go. I mean, given that you've raised this FOI in this forum, which is not directly relevant, given that we're in Senate estimates and we have our own rules of discovery. I mean, we're trying to get to the bottom of things here. That's the whole point of the inquiry function of the Senate, as difficult as it may be. Now, the FOI that you refer to, which was from, I think, 10 January 2025, sought access to this information. Now, the Treasury denied that information and set out reasons for the decision. Was that something that you dealt with directly, Ms Anderson, or was that someone else?
I was not the decision maker for that.
Okay, I think decision. It was Mr Axelby?
Yeah, that would be right, Heath Axelby.
Is he here?
No, he no longer works with Treasury.
Okay, my apologies. Can someone speak to the FOI?
Well, we can speak in general terms to the FOI, not the specifics of the decision, Senator, between Ms Wells and myself.
Very transparent. So you asserted that, well, not you personally, but the Treasury said that you could neither confirm nor deny.
That's right.
Right. Now, are you aware that this assertion can only be applied in situations where the documents are exempt under Section 33, which is national security, or Section 45A 2 and 3, which is the Parliamentary Budget Office documents?
I'm not personally aware of that, Senator, but well, as I said, I wasn't the decision maker in this case.
I understand that, but I mean, this is the Treasury of Australia, and you're filing incorrect FOI exemptions to people who are seeking information. I mean, this is not very transparent information. We can't get to the bottom of the information through Senate estimates. We can't get to the bottom of the information through FOI using the wrong exemptions. So,
that's absurd.
well, I mean, it is true. You cannot use that exemption for that purpose. So, who can speak to why this exemption has been used incorrectly?
Senator, I heard from either you or the official, I can't remember which, that this matter between you and Treasury is with the Information Commissioner at the moment.
That's right.
And no doubt you'll litigate those issues with them. It's hard for, if there are proceedings on foot, it's hard for, you have the advantage here of privilege and a range of things.
It's not working very well, is it? We can't get any information.
It's hard for, I maintain you have the advantage, Senator. It's hard for the officials to respond, given the matters being dealt with, and no doubt the subject of backwards and forwards between the department and the Information Commissioner, and you and the Information Commissioner, and I think
okay. Well,
I'm reluctant to let the details of that.
Detail matters.
Yes, but it's a matter for the Information Commissioner. It's on foot. It might be better for...
It's not. It's Treasury. They filed the letter.
It might be better for you to agitate that issue following the Information Commissioner's determination.
Thank you.
I just don't know what the status of that is. Somebody's asserted that it's there. I'm reluctant to let the discussion proceed too much further.
Thank you, Minister. So
we can go much further.
Well, I have a question for the Treasury official. So, who is responsible for FOI now at the table? Who can I talk to about that?
Thank you, Senator. Yes. So,
can I ask you?
Yes, you can ask me.
So, as you know, in relation to the blockage of this particular report or this matter, not you personally, but the Treasury said they could neither confirm nor deny that these documents existed. Now, as you know, under the FOI provisions, while they exist, long may they exist, I should say, the only way that particular exemption can be used is in relation to national security or PBO documents. So why did Treasury use that particular exemption in relation to this Housing Australia matter?
Well, I think actually, Senator, that under Section 26 there is a very standard way of being able to utilise that, and I think the decision letter that referred to, as from my former colleague, Mr Axelby, actually referred to, he was invoking those exemptions under Sections 47E, C and 47F of the FOI Act, but my colleague David Hertzberg can also elaborate on the standard exemption of Section 26, if that's helpful for you.
So, Senator David Hertzberg, Acting General Counsel at Treasury. So, Section 26, subsection 2 essentially says that a decision letter doesn't need to reveal exempt material. And that's not limited to national security grounds. That could relate to any exemption. And so the essence of Mr Axelby's decision was that in revealing whether or not Treasury held documents, that revelation would be exempt in itself. And that's what 26.2 allows.
Can I tell you what's wrong with this?
You're probably better off without
it. Can I tell you what's wrong with this as I segue to a question? That the documents actually do exist. The documents actually do exist. So you've used an exemption saying that we neither confirm nor deny, and we've just heard evidence this morning the documents do exist. So, I mean, what sort of a show are you running down there at the Treasury where you're signing these documents? It looks very dodgy, I have to say. So I'd like to know what you're going to do in future to be more upfront about FOI requests when you know the documents exist. It's not a very good look.
Senator, there were reasons in this instance. We would normally disclose the existence of documents, but as Mr Hertzberger said, there was a reasonable case here, and we are talking about the reputation of individuals, the nature of your question under FOI related to an individual, and had we confirmed, at that point in time it was not known in the public domain that this review occurred. It is quite important that people are able to go through these processes in some degree of confidence. I understand you're interested in this, and I understand that we do have an obligation to be as transparent as we can, but we are balancing the personal privacy of individuals, the reputation of individuals, and we also take that seriously. We do not want to compromise the ability for complainants and respondents to have some privacy over these matters while they're being considered.
I understand that the governance of an agency which is expending billions and billions of dollars of taxpayer funds is of great public interest. So I respect your view that you want to protect people's personal privacy, and we all agree with that. But the recommendations of the report that you said you weren't sure whether it even existed when you knew it existed, which I think
we didn't say we weren't sure if it existed. We said we cannot. Well, exactly. That's not saying we don't know that it existed.
Well,
we were not intending to, and did not mislead you.
It's not very transparent.
Well,
it's not the answer that you want to hear.
Senator,
it's not transparent.
Is within the bounds of.
It is not transparent. It's not a good look.
It's just
Senator
not what you want to hear, Senator
We're
Bragg.
at 20 minutes. Would you like to pass the call?
So I guess in closing, I think my point has been made that we have sought to get to the bottom of this through FOI and through the Senate processes. I have to say to you that I still don't think we're actually at the bottom of it, so we look forward to your PII claim, if you are going to make one over the recommendations of the report, which I think you are supposed to make in writing in your question on notice. Is that right?
Yes, we will consider that straight after this, Senator, and if the Minister wishes to make a PAI claim, I'm sure we'll do it in the usual way and within the deadlines that have been set.
Thank you.
Thank you. Senator Patterson?
So I think we are at this section. So we can release the Department of Treasury Small Business, Corporate and Law Group. Thank you very much.
Thank you.
We have ASIC up next, so we'll just allow a minute for there to be a changeover. Hopefully we can make up a bit of time here too. Because they don't forgot what question it is. We've made up a little bit and what he thinks it means. Oh, fantastic. Thank you. Here's the opening statement. Great. My colleague is just making some comments. Great. So you could potentially table that? Yes. Yeah.
See you.
Okay, we will kick off, I think. The committee welcomes representatives from the Australian Securities and Investment Commission. Would you like to make an opening statement or, in the interest of time, table that statement? Whatever you prefer.
It's customary for me to read it out. It won't be very long,
okay.
Chair, if that's
Please.
okay with everyone.
Yep.
It will give me an opportunity also to introduce who's at the table.
Yep.
Good afternoon. I'm here pleased to be here for the ASIC's first public hearing with this committee since the election. I'm joined today by Deputy Chair Sarah Court on my right, Commissioner Kate O'Rourke, Chris Savundra, Executive Director for Enforcement, on my left Simone Constant, Commissioner Alan Kirkland, and ASIC CEO Scott Gregson. I want to take this opportunity to congratulate you, Senator, and Senator Jane Hume for your new roles as Chair and Deputy Chair. When I accepted the position, I was clear ASIC needed to become a modern, confident, ambitious regulator. With the most significant organisational restructure in 15 years, new commissioners, a new CEO and refreshed senior executive team, I see that transformation is well on its way, and we have the numbers to show it. In the past year, there's been a 50% increase in investigations and a nearly 20% increase in new civil proceedings. In the first 6 months of 2025, we commenced 132 new investigations compared to 63 investigations in the same period in 2024 and 23 new court actions compared to 12 new actions in the same period last year. In the last 6 months, we've also secured 6 criminal convictions and $57.5 million in civil penalties imposed by the courts. ASIC has exceptionally dedicated, skilled and experienced staff, and I cannot praise them highly enough. And now I want to turn to some of the vital work we've been doing, particularly in the enforcement space. High-risk super switching is a great concern to ASIC, and this is a key area of focus for the agency at the moment. The First Guardian and Shield Master Fund matters have received significant media coverage in recent months. We have 24 ongoing investigations into these matters with more than 40 staff dedicated to them. We've appeared in court more than 45 times in relation to First Guardian and Shield matters. These are some of ASIC's most complex and resource-intensive investigations in our history. But but I'm pleased to say that our efforts are already yielding dividends. On 25 September, following ASIC's investigation, it was announced that Macquarie Investment Management Limited had committed to paying the thousands of Australians who invested hundreds of millions in their retirement savings in the Shield Master Fund. This means Macquarie will pay the approximately 3,000 affected members 100% of the amounts they invested in Shield, less any amounts withdrawn. This is a key outcome that stems the significant losses that threaten thousands of members' retirement savings after they use Macquarie's platform to invest. As I've already said publicly a number of times, ASIC's first priority in the high-risk super investigations has been to preserve any remaining assets of the schemes to the extent they are available, so they can be recovered for investors or to recover funds for investors through other possible means. I'm pleased this has been achieved in the Shield matter. However, there's more work to be done to hold key players to account, and we are actively exploring avenues for compensation for victims. We are actively working with Treasury and the government to look at options for law reform in this area. We are coordinating with AFCA to provide guidance for consumers with complaints against financial firms and superannuation trustees. Another high-profile matter is the action we took against ANZ in early September. ANZ has admitted to engaging in unconscionable conduct in services it provided to the Australian government, incorrectly reporting its bond trading data to the Australian government by overstating the volumes by tens of billions of dollars, and to widespread misconduct across products and services, impacting nearly 65,000 customers. Reflecting the seriousness of these matters, ASIC and ANZ will ask the Federal Court to impose penalties of $240 million in relation to the 4 proceedings filed. These are some of the highest ever penalties we've announced against a single entity. This reflects ASIC's serious and ongoing concerns about ANZ's conduct over many years, in particular its institutional failure to manage non-financial risk. From a modern, confident and ambitious regulator, it would not surprise you to hear that we have several significant regulatory work streams alongside of our enforcement priorities. I want to specifically note our work on public and private markets. Australian private capital funds have experienced significant growth and are becoming an increasingly important source of funding for the economy. Strong public and private markets are vital for business growth, investment, innovation and meeting Australia's future economic needs. In February this year, ASIC released a discussion paper outlining our preliminary views on capital market shifts and called for industry feedback. On 22nd September, we published a progress report, an expert paper on private credit in Australia, which called on industry to lift its standards. Responses we have received to this work have been positive to date, and the private credit industry has shown a willingness and openness to implement greater consistency in standards and practices. In November, a few weeks from now, we will publish our response to the February discussion paper and articulate our intended roadmap. There are many other key areas of focus for the agency, and I just mentioned them quickly: the ASX inquiry, registries, auditors, our work around digital assets, vulnerable communities, insurance, simpler and better regulation, financial education via Money Smart, all of which helps, and that's not an exhaustive list, all of which helps ensure that we have a fair, strong and efficient financial system for all Australians. We're here to answer the committee's questions. Thank you.
Thank you very much for that opening statement, and we will incorporate that into the Hansard. Before I go to colleagues for questions, I'd just like to remind all senators present of the Parliamentary Joint Committee on Corporations and Financial Services oversight of ASIC hearing that was held on the 18th of September. Just in terms of your questioning, some of the matters that you may want to interrogate here will have been well examined in that process just a few weeks ago. So I'd encourage people that have questions to look at those transcripts when you're thinking about your questions. So I am going to go to Senator Walker just for a question first.
Thank you. I've just got a few questions regarding ASIC's work in engagement with First Nations communities. I know ASIC has released its Indigenous Financial Services Framework after, pretty extensive consultation with the First Nations community. Can you give us a bit of an outline on how the consultations have shaped the framework and how it's guiding your work in the banking sector more broadly?
There's a lot of work we're doing with First Australians and seeking to ensure they get a better deal from banks. A key player in that work has been Commissioner Alan Kirkland, so I'll ask Commissioner Kirkland to give a response to your question, Senator.
Thanks, Chair, and thanks, Senator. The framework, which has been in place for several years and indeed predates my appointment as Commissioner, is a really important document in guiding our work. Importantly, the consultations that led up to the framework reinforced that First Nations consumers and communities have very different experiences due to a range of cultural and historical factors that influence their interactions with the financial system, and that we need to consider those in the work that we do in regulating the financial system, as well as the work we do through streams of work like Money Smart, which the Chair mentioned. In terms of our ongoing work, we have an Indigenous outreach program which predates the framework, but its work has increasingly been guided by the framework. It operates, I would say, like an internal centre of excellence on issues impacting First Nations consumers in the financial system and on how best to engage with them. So, for example, when other teams are thinking about how they might frame up a surveillance project, they'll often speak to the Indigenous outreach program around whether there's a First Nations perspective we need to bring in. If our investigations teams are investigating matters affecting First Nations consumers, or indeed taking matters to court where we have First Nations witnesses, the program plays a key role in supporting them. The program also does some of its own work on major surveillance projects, and one of the best ones of those has been our Better Banking project in recent years, which has ended up with banks' commitments of total refunds of over $93 million to more than 920,000 low-income consumers across Australia, many of whom were First Nations consumers. So it's a good example of, I guess, the impact of that team as guided by the framework that you mentioned in your question.
Thank you. And sort of just to follow on from that $93 million refund, what lessons do you think other financial institutions can take from that?
Other financial institutions should take from our work in that area, well, importantly, that ASIC is very interested in the way in which their actions and products have impacts on First Nations consumers, and we are particularly interested where there is evidence of harm. And in this case, there was really clear evidence. When we first looked at this issue, the evidence that the banks themselves gave to us suggested that around 2 million Australians, many of whom were First Nations, but not all of them, but around 2 million Australians had been left in high fee accounts when they were people on very low incomes, dependent on Centrelink payments and eligible for government concession cards. So institutions need to be thinking about how their products impact on consumers, and particularly First Nations consumers, and designing products with those needs in mind, and paying great attention to the way in which those products are distributed and any evidence of harm that is coming through the data that those institutions gather.
Thank you. Thanks, Chair.
Thank you. Senators from the Coalition.
Thanks very much. Good afternoon. Nice to see you all. I just have a couple of brief questions, noting the Chair has indicated that the committee has already, I think, extensively canvassed the recent financial collapses about the First Guardian Shield and Lion matters, right? So we probably won't agree on this, but I mean, I would say historically ASIC has struggled to respond quickly to warnings it receives. So in relation to the First Guardian matter, when did you first receive notification from someone, including potentially industry, that something wasn't quite right?
Yeah, thank you. Good afternoon, Senator Bragg. In relation to First Guardian, we received reports about selling practices that we had been long concerned about, that involve cold calling, lead generation and unlicensed advice. So you'll be aware, no doubt, that super switching has become available since 2005. We have long been concerned about selling practices and risks to investors of switching their super. So in June 2020, we received reports about, as I say, conduct involving selling practices.
June 2020.
June 2020. Now, that we had, as I said, been this had been an area that we had been concerned about for quite some time, so it wasn't like this was the first time we had concerns about particularly cold calling in relation to super. However, none of those reports referred specifically to the First Guardian Master Fund as an underlying investment, and none of those reports highlighted or gave us any evidence of funds being misappropriated by the operators of the First Guardian Master Fund. Our activities in relation to the First Guardian Master Fund commenced as a result of the investigation we had underway into the Shield Master Fund, and we became aware when we saw significant amounts of money being channelled through financial advisors into this First Guardian Master Fund that there may be issues with that fund as well as with the Shield Master Fund, and we started investigating it very shortly afterwards.
Okay, so is the answer to my question June 2020 or another date?
The answer to your question is that we received reports about cold calling, lead generation, selling practices and unlicensed advice, some of which referred to the First Guardian Master Fund as well as other funds.
In 2020?
June 2020.
Okay, and then I understand that you received more industry-based warnings or other notifications in October 23, is that right?
Are you sorry, Senator, I'm aware that there has been some reporting about the FAAA referring issues to us, yes,
sure
but as
exactly
I say, we were,
yeah.
again, well aware of those issues in 2023.
Okay, and then regulatory action formally commenced in September 24, is that right?
We're talking about the
First
Guardian Master Fund. We commenced a preliminary investigation into the First Guardian Master Fund in February 2024. As I say, we became aware of the issues.
That's the investigation starting, right?
That's right. So we became aware of the issues with the First Guardian Master Fund in January 2024 as a result of our investigation into Shield. We commenced the investigation shortly afterwards in February 2024. We commenced a formal Section 13 investigation in September 2024.
2024, okay. So, First Guardian, so you have some warnings in 2020, maybe they're broad, you have more warnings in 2023, and we see action, hard action in September 24.
Well, I'm not sure that's how I'd characterise it, Senator Bragg. I think you said at the outset we may agree to disagree. We received reports in relation to First Guardian and other funds back in, what date? June 2020. We were well aware of these selling practices, cold calling, financial advice, cookie cutter advice. We'd done a range of activity. We took a range of action at the time in relation to others that were involved in that kind of activity. We were not on notice in relation to any underlying concerns about that fund itself until January 2024. We started an investigation the following month.
Okay, then in relation to Shield, we're
Yes.
talking about initial warnings in October 23, is that right, or earlier?
May 2022, we received similar reports
May
about the
23.
selling practices, some of which specifically referred to the Shield Master Fund as one of the underlying investments. Again, none of those highlighted or gave evidence of investor funds being misappropriated by the operators of the underlying fund. In early April 2023, we received a report for the first time that raised concerns about the fund itself. We commenced a preliminary investigation later that month, and we issued notices shortly afterwards to
In February 24,
Macquarie.
right?
Sorry, Senator.
In February 24, you take regulatory action.
No, we commenced an investigation in April 2023.
Yeah, but an investigation is not the same as actually seeking a court order or...
Well, an investigation obviously predates our court
but you have
action or
lots of
anything
investigations
else.
that don't necessarily result in prosecutions.
Yes, we do many investigations that don't result in prosecutions, as all regulators do. We did, though, Senator, in May 2023, issue compulsory notices to Macquarie, which then led to Macquarie taking the Shield Master Fund off its platform. I think it was in early June 2023.
And then Lion, my understanding is you had warnings in July 24
So
and then took
Lion-
action in February 25. Is that right, or was that wrong?
So Lion is in a completely different category altogether, Senator. So I just would want to make sure that we don't mix the Lion investigation into the work we've been doing.
Look, I mean, they're all people, and they're all people who live in a country where they expect that laws will be enforced. And I think the expectation is that we have all these laws in the books. We've got one of the world's longest corporations laws, right? We've got conflicted remuneration laws, which ban commissions. We've got a requirement that people invest in accordance with the PDS and don't steal the money, right, and take it offshore. We have all these laws, and so whether these people have invested in First Guardian or Shield or Lion, I don't think they really care. I think their expectation is that you will protect them when you receive these warnings. Now, what it sounds like is, in all these cases, you've had warnings for years, you've had investigations, but in the period between receiving warnings and actually taking regulatory action, which is different from having an investigation, these people have been fleeced.
Yeah, I understand your point, Senator Bragg, but there are important differences to point out. In the Shield and the First Guardian matters, we're talking about investors who understood that they were moving their superannuation funds from one regulated super fund to another, and they, as we've talked about, or as you're alluding to, many of them have lost significant amounts of money. In the Lion situation, Lion at no time held an AFSL. Investors found the Lion Property Group through Facebook advertisements. There was no connection to lead generators or advisors, and those people...
So I didn't hear you. Did you say it did or didn't hold
It
an
did
AFSL?
not hold an AFSL.
Yeah. So it was like a Melissa Caddick style situation. They had a fake licence.
I don't know that they had a licence at all,
Almost
Senator
done
Bragg. I'm not saying that. And those investments were done through self-managed super funds. So yes, that situation is different, and I can take you through the background to the Lion Group. But I understand your point, Senator. These are significant issues for investors. We absolutely acknowledge that.
They are.
But we do reject the imputation that you're making, which is that ASIC has somehow failed here. There are multiple investment opportunities available. We have a very permissive investment scheme, and ASIC acts as quickly as we're able to on these kinds of issues. And far from not enforcing the law, in relation to the Shield and First Guardian matters, we have taken some 45 different court actions. We have frozen funds, we have got travel restraints, we froze the assets of the Shield Master Fund to ensure they are available to be returned to investors. We've got equity trustees in court, we've got Macquarie in court, we've got an outcome that Macquarie's refunding $330 million to those impacted investors. So I do have to categorically deny your assertion that ASIC has not been an active enforcement agency in relation to these very significant issues.
Of course, I respect your role, I respect that you've got to say that, but the facts bear out that it took a very long time to get moving on these things and to achieve regulatory action. So my last question is, my last question is, what assurance can you give the investors, whether they're in Lion or Shield or First Guardian, that you're going to be able to help restore their position? Because I don't really think it matters what structure you're arguing they've invested through. They all live in a country where they expect that the conflicted remuneration laws and the investment in accordance with the disclosure documents would be reasonable expectations. So how are you going to restore this position for those three groups of people? And in doing so, what are the lessons to be learned here about how ASIC can move quicker next time when it gets these sort of warnings?
Senator Bragg, firstly, in relation to the investors in the Shield Master Fund and the First Guardian Master Fund, I think we have been very public and strong in our indication that we have prioritised getting monies back for investors above everything else. We've had a very significant outcome in that regard in relation to the Macquarie investigation, and we have the work that ASIC's done both in freezing the funds in the Shield Master Fund and then taking court action against Macquarie have achieved very significant outcomes there. We are on the record as saying we are continuing to do everything that we can to try to make investors whole. So we have stood up a significant team of people. They are literally working around the clock. They will continue to do so. They are extremely passionate about these issues. They are engaging with investors all the time. We recognise the serious impact that these failure of these funds has had on those investors. We take it very seriously. And our second element is to make sure that those entities and individuals that have been involved in creating this sorry mess are held to account, and we're certainly very committed to doing that also.
Sorry, Chair, just the official didn't answer my question about the Lion matter. So what about Lion? What will you do for them?
Well, the Lion matter we are investigating at the moment. Senator Bragg, I can't say much more about that at this stage, except we're investigating it and we'll explore all options.
Well, we want you to do everything you can to help these people because, as I say, I think their expectation that they live in a country where all these laws we've put in place here in Canberra are going to be enforced is not an unreasonable one.
We agree and we enforce them, Senator Bragg.
Thanks, Senator Bragg. Senator McKim, did you have questions?
Thank you. Look, just on the matter that Senator Bragg was asking about, it's clear that there's not going to be enough money from liquidators, from super fund reserves, from the compensation scheme of last resort to compensate all of the people who lost their, such significant parts, or in fact, in some cases, all of their retirement savings. Is there anything available to the government that ASIC could recommend to government to actually provide for the full compensation for people for their losses?
I think Senator McKim, again, as I said in my answer to Senator Bragg, I just want to make sure we separate the different funds here. So in relation to the Shield Master Fund, of the monies invested, the majority of that money was through the Macquarie platform, and those investors have now been made whole. And we are currently in court in relation to the other trustee that was involved with the Shield Master Fund, equity trustees, and the amount of exposure for equity trustees is significantly less in that matter. And there are also funds that have been frozen, and the liquidator has to do its work, and we have to see what that shortfall is. And to the extent that those investors have been provided with financial advice, and for most of the investors on that platform, they were required to have financial advice, then they may well have access to the compensation scheme of last resort. And for many of those people, their investments would be less than the $150,000 cap in the CSLR. So I think I've said before in other forums that we don't want to give false hope, but we also don't want to give no hope to investors. The First Guardian situation is certainly more challenging than that, and the liquidators are continuing to do their work, but it's clear that there is a significant deficiency of funds, although they are taking actions against a variety of entities and individuals that are involved in the First Guardian, that were allegedly involved in the First Guardian Master Fund. So again, there may be some funds there. In terms of options available to the government to provide more fulsome compensation, I am aware of, I'm probably not in a position to give detail on it unless Mr Savundra can. There is a provision in the SIS Act that does give a government, I think, some opportunity to find a way to give compensation or set up a remediation fund of sorts. I think that has been done rarely in the past. I think the difference that we have in relation to these matters, Senator, as opposed to the circumstances in the past, is that the super fund hasn't failed in this situation. Some of the funds held on the super platforms have failed. And so these superannuation members have actually still got their accounts. The problem is that the assets or the unit value of those accounts has precipitously fallen to be near zero.
Mr Savundra, did you have anything to add?
Senator, not really, other than to say I think the available options to governments matters for the government. I think ASIC is looking at what it can do within its remit to pursue remediation or compensation. So that's what we're laser focused on. The government will obviously do its job.
Is it open to ASIC to make recommendations to government in the section of the Act that you mentioned, Ms Court?
Well, look, it may be Senator McKim, but I think the bigger issue we're focusing on at the moment is getting on with our job of investigating, holding people to account and working out what ways we have within the legal system to get money back to investors. I think the other thing to remember with these issues, Senator McKim, and I haven't really gone into describe the model itself that we've been grappling with here, but you may be aware that there are a chain of different parties, entities and individuals that have contributed, in our view, to these significant collapses, and they range from lead generators, financial advice firms, obviously the people behind these funds that have failed, the superannuation trustees that we've talked about, the ratings agencies and indeed the auditors, and there is a complex web of culpability in our view. It won't surprise you that many of the players in the chain are pointing fingers at each other, but it's quite, there is a potential there that all of those players may have some financial role to play in compensating people that have suffered as a result of these misdoings, in our view.
Can I ask, would a ban on unfair trading practices, including in the financial sector, have made it easier for ASIC to take action against lead generators, therefore possibly preventing many people from getting switched into like Shield and First Guardian?
I think, Senator, again, I have to tread carefully because issues of policy and policy advice are a matter for Treasury and for the government, but I can say that ASIC has publicly advocated for an unfair trading prohibition in financial services. Yep. And one of the reasons for that is that if you look at the lead generators here, for example, there is a grey area as to whether or not they are licensed or unlicensed, whether they should be licensed or not, are they providing personal financial advice or not. And the benefit of an unfair trading prohibition would be that it covers that field, so there will be no gaps or holes to fall through between what is licensed conduct and what is unlicensed conduct. And one of the challenges of investigating the complexities of these matters, if you think about the role of the lead generators, each lead generator has a lengthy conversation with a particular consumer. And so the question and we're talking about some 12,000 investors across these matters. So the question for ASIC and its investigators is almost having to look at every single one of those calls and work out, is this provision of financial advice? Are they unlicensed? At what stage should they refer someone through to the financial advisor? So you'll appreciate that that's a complex web, extremely resource intensive, and something like an unfair trading prohibition may assist us in that regard.
Your evidence, Ms Court, is that if there was a ban on unfair trading practices, it would make ASIC's investigative work less onerous?
Look, I'm speculating, Senator McKim. It would depend how that prohibition was framed. It would depend on what the remedies were available for contravention of such a prohibition. But certainly it is one of the things that we have turned our mind to. We've turned our mind to a range of issues following the learnings that we've taken from our deep investigations in these matters, and that issue is one of the ones that we have thought about.
Yeah, but nevertheless, ASIC's position is that you still, I guess, Mr Longo, it's a question for you, you still would support a ban on unfair trading practices in the financial sector.
Yeah, that's long been ASIC's position, and as Deputy Chair Court alluded, there are probably a range of potential areas for reform arising out of these events. How we think about managed investment schemes, how we think about super switching, how we think about the regulation of super in general. But regrettably, the circumstances of people in Australia losing their money through investment in managed investment schemes, if history tells us anything, that will continue. And that will continue for all sorts of reasons unless there are restrictions imposed on people's choice as to where they put their money. Because the role ASIC is cast in is picking up the pieces. And what needs to happen is we need to have more prevention, less cure.
Yep.
You're at 9 minutes.
All right, thanks. I do have another batch of questions post this one, Chair, but if I could just use my last little bit of time to pick up on something that we just discovered through the questions to Treasury earlier this afternoon. We're waiting for Labor to deliver on its 3.5-year commitment for a public registry of ultimate beneficial ownership. Treasury have just informed this committee, I'll paraphrase them, they're waiting for ASIC to do some work in terms of upgrading your business register. I'm not quite sure about the terminology. How's that work going? How long is it going to take? We've been waiting 3.5 years for a public beneficial ownership register. It'll be a tremendous innovation for financial transparency in this company, including for a whole bunch of nominee companies that are funding fossil fuel investments, that they're hiding their identity behind nominee companies. How are you going, Mr Longo?
The beneficial ownership register is a matter for government and the law.
I understand that, but they're waiting for you.
That's a connection that I may need some help to clarify. Certainly able to talk to you about all the work and progress we're doing to uplift and modernise the registers, and I'll hand over to Commissioner O'Rourke, although I'm not entirely sure about the connection between the delays.
So I'm not, just to be clear, Ms O'Rourke, it would be unfair to ask you about the connection. That was me paraphrasing Treasury.
No, I'm happy to
and
talk
I'm sure all the work you're doing...
But I'm sure Commissioner O'Rourke, who's done a lot of excellent work with the team in this very area.
If you want to respond to that, but the main thrust, and just in the interest of time, I'm sure you're doing a lot of really interesting work, but what sort of time frames are we looking at in terms of the completion of that work?
Thank you. Then I'll need to rotate the call.
Yeah, no problem, and I can answer briefly. So thank you for your interest in ASIC's registers. We are taking a lot of steps to both stabilise the legacy technology and then what we describe as uplift it. And part of the uplifting, so improvements to our registries, will permit the creation of new registers, including a beneficial ownership register, should the government legislate the creation of such a register for unlisted entities. You'll be aware that there's proposed reforms to improve for listed companies, and we're pleased to be part of the administration of those existing provisions. So in answer to your specific question, we are tranching the work that we're doing to stabilise and uplift our registers because of their legacy technology, and the earliest a build could commence in relation to something, should there be legislation, would be with what would be the third tranche, which is 28-29. So that would be the first earliest that the technology would be available, but as I said, conditional upon there being the legislation passed.
Thank you. So just for clarity, when you say the third tranche, that is the tranche of work that would allow for the creation of a public beneficial ownership register?
Yeah, sorry, we've got 3 tranches. We've completed one. We're in tranche 2, and that third tranche, which is the time period I referred to, would be the earliest. It's not currently planned. There is for the beneficial ownership, because that's a legislative decision or authority that has not yet occurred, but that would be the earliest based on the technology foundations upon which such a build could occur.
Okay, so...
Oh, absolutely, subject to funding as well as...
Tranche 3 hasn't been funded yet.
Yeah.
By government?
Yeah, we're in the middle of...
We expect to be funded.
So just so I understand, Mr Longo, and thank you, Chair, I appreciate your indulgence, but so we've just been told today that an election commitment from 3.5 years ago by Labor to put in place a public beneficial ownership registry is now effectively not being worked on in Treasury because Treasury is waiting for ASIC to complete the work. And you've just told us that ASIC's just told the committee that the tranche of work that will be required to support a public beneficial ownership registry won't be completed, did you say till 28, 29, Ms O'Rourke?
Yeah, that's the
till 28, 29, and that work hasn't even been funded yet by government. Is that where we find ourselves?
I think it's fair to say we expect to be funded, but
I should hope so too.
The registries came back to ASIC about 18 months ago. They went to the ATO in April 2021.
I am making no adverse reflection
I accept
on
that.
ASIC.
I just want to, how can I put it, clarify for the committee that the magnitude and complexity of the technology debt, I'm trying to think of a way of putting it succinctly, is huge. And so we're talking about a very complex rebuild. So first we had to stabilise these registries because they were so old, so that would raise a whole range of investments we had to do. And we're right in the middle, and I think it's been quite successful, with all due respect to everyone involved, of now uplifting and modernising. And what Commissioner O'Rourke is saying is that if everything goes according to plan and the funding continues, we should be in a good position to be able to deliver, if the Parliament passes this legislation, to create a registry that doesn't presently exist.
No, I understand.
Thank you. I'm going to have to rotate the call.
Thanks, Ms O'Rourke.
Senator Hume.
Thank you, Chair. And before we begin, we've forgotten to acknowledge the fact that Mr Longo has announced that he won't be continuing on in this. Did I miss that? We didn't acknowledge that. I'm terribly sorry. I know that you announced
I've got 8
that.
months to go, Senator.
I know, but you announced it the day after the joint standing committee hearing, so we didn't get a chance to acknowledge it there. So I will acknowledge it here.
It was actually the Treasurer's announcement. I'm but a humble servant of the government.
Of course. But can I just say thank you very much for your service, continuing service until that date.
End of May
date?
Next year.
End of May.
That's
End of
right.
May. Thank you very much. I want to ask you about a couple of things. The first is something that you mentioned a little earlier, which was the need for regulatory reform or reform to the regulatory framework for managed investment schemes, which I know is something that there are some very passionate people around this table. The government announced that it was going to do a review into managed investment schemes and the regulatory framework back in October 2022. So that was its first budget. There was an announcement then. You did a submission to that review in 2023, September 2023. It was 50 pages long. It was pretty heavy reading, but really important reading. And there was a number of recommendations that you made in there. That review seems to have gone nowhere. What do you know about where the review into the regulatory framework for managed investment schemes is up to?
Well, we engage with Treasury continuously on a range of issues, including obviously this one. The government, we've been working with Treasury and government on a range of issues arising out of the most recent set of problems we've had with Shield and First Guardian. I think it's really a matter for government as to where we go from here and the priority any law reform will get. I don't know whether any of my commissioners can add to that.
Well, in terms of
Alan? Yeah.
Excuse me. In terms of the specific question, my understanding is the review itself has been completed, but then any further action, such as release of a report or something like that, would then be a matter for the government.
So it's been completed by Treasury and given to government.
I'm not aware of whether or not it's been given to government.
Do you know, Minister, whether the review has been given to government?
I don't have anything in front of me that gives me the answer to that question.
Do you think, is there something that you can just type and just say, has it gone to government? Is it sitting in government or is it sitting in Treasury? Before we start pointing fingers.
I'm sure there's a team listening who'll let me know if there's an answer that I can give you, Senator.
All right, that would be very good. There was a number of recommendations that ASIC made in their submission. I'm wondering whether anybody at the table could tell me, had those recommendations been put into place, whether some aspects, I'm sure not all, of the First Guardian Shield disaster and Line 2 could have been avoided. Or, if you would like to rephrase that, if those recommendations that you have made in your original submission from 2023 are put into place now, could we avoid a repeat of the First Guardian Shield disaster?
Well, I really don't want to speculate in the middle of this situation as to what a particular law reform would have achieved. But I think we can all agree that some of the anti-hawking provisions, had they been revised, some of, not all of, the misconduct that we think led to the current situation could have been avoided. But the ecosystem here is pretty complicated. As I think Deputy Chair Court mentioned very briefly earlier, our whole arrangements in Australia are very permissive around investment. And so a lot of we encourage people to invest, and there's no restrictions on that investment, broadly speaking. So, and it's very easy to register a managed investment scheme. So I think the critical feature of the current situation is that all of these losses occurred within a regulated superannuation environment. So I think it sort of behoves us all to sort of step back and say, well, how do we think about reform or changes so that the sorts of losses we're seeing here can be avoided or certainly diminished. But as I said earlier, we're a risk-taking, investing nation. That's what being part of a democratic capitalist economy is about, and there will always be losses. And so the critical question is if we want to reduce those losses, and then I think we do need to think about restricting, particularly retail investors, from being able to invest in anything, pretty much.
The anti-hawking issue, I think, is a really important one, because obviously that was a Hayne Royal Commission recommendation, and it was legislated, and clearly what we're seeing is people subverting that law or circumventing that law is probably a better way of looking at it. That's something that clearly ASIC had picked up on some time ago and notified government that this was occurring. When did you first tell government that you could see people trying to circumvent the anti-hawking provisions and that they needed to be stopped?
Commissioner Kirkland can recall the sort of the policy history around that particular issue. As the Senate, as you've quite correctly noted, there was consideration given to this very topic coming out of the Royal Commission. Certain decisions were made at the time, and Parliament took a position, and we've been living with that position, I think, since October 2020.
And it was unanimous across the Parliament. Everybody wanted to get rid of hawking.
So I think circumstances have now arisen where I think we need to revisit that. From ASIC's perspective, I think we would be in favour of a more conservative position, and that could very well have had a beneficial impact on the situation we're in at the moment. But I do hasten to say that and again I go back to some remarks that were made earlier, we're talking about a pot of money that's growing all the time. Bad actors are attracted to it. The lead generation part of this is significant, but not the only part of what went wrong here. Commissioner Kirkland, you want to add to that?
My understanding is that ASIC, I guess, raised issues around some limitations of the reform at the time that it was being considered. And then, as Deputy Chair Court mentioned earlier, we've been doing lots of work around this issue of lead generation over recent years, and we've continued to brief Treasury on the practices we've seen, the potential harm to consumers, and our concerns about those practices. And I think probably our thinking has broadened out to be not just about I guess the anti-hawking reforms, but just thinking more generally about that business model and practice of lead generation that's been mentioned earlier in this hearing, because it does involve businesses that are often they often purport to not require an Australian financial services licence. They design their practices in a way that is intended to support that assertion. And they're very clever at attracting consumers and luring them into conversations that encourage them to switch their super, and they're being funded by a range of the other entities in this complex web that we've talked about in relation to matters like Shield and First Guardian, and ultimately that money is often coming out of people's superannuation. So we think there is a case for really looking more broadly at those business models of lead generation, thinking about how best to disrupt them given the clear evidence of harm.
So I could not agree with you more. But I'm wondering when you first raised this with government. Did you raise it with Treasury? Did you raise it with ministers? Did you do it formally in writing? Did you just do it conversationally? Was it in a round table? How often and when have you raised this issue?
So as I mentioned earlier, my understanding is that the concerns were first raised at the time that the reforms were being framed and considered within Treasury in the aftermath of the Royal Commission. And then we have regular engagement with Treasury around all of the work that we're doing, and so the issues continued to come up from time to time in the period since.
So have you formally written to government, written to Treasury and said this is an area of reform and it's urgent?
In recent months, Treasury has invited our views on whether there are any regulatory gaps that might be addressed as a result of the matters that we've been discussing. And as part of in response to that request, we have said that we think there is benefit in looking at this issue of lead generation, considering whether there are any regulatory gaps there, right, and whether there might be some reforms that would appropriately address those gaps.
Okay, so let me be a little bit more clear, and you can take this on notice. But since this government was elected, how many times has ASIC raised the issue of the circumvention of the hawking provisions and the growing concern you have with lead generators? How many times have you raised that with the government, in writing or verbally or at a round table, and on what dates? If you could provide that in writing, that would be very helpful.
Yeah, given the breadth of the question, I would need to take it on notice. Of course. But I would say it's really only in recent months that we've really heightened and clarified our concern around lead generation practices as a potential area where there's a regulatory gap.
Yeah, okay, thank you. I just want to ask, sorry.
Before we jump to that,
sorry.
Can I ask one question that's come to mind since we had our hearing recently? The sample of the generation of interest that was tabled on the day of the inquiry had an address that was domiciled in another jurisdiction, right? It was a UK address where the contact was coming from. Can I perhaps ask on notice what observations can we make and what further consideration needs to be taken about overseas interactions with what's happening here in Australia, because there is a limit to our sovereign capacity to manage these things. What needs to happen to interrupt that overseas domiciling to get around some of these laws?
I think that is probably something we need to take on notice, but I would say that in all of these investigations there are plenty of players that are based on shore, and they're keeping us very busy in the investigatory work, and so I think there are plenty of people that we have scope to investigate and take action against.
Sadly, yeah. Thank you.
I've got one more, just a little issue that I want to cover off on. Let me be very... after the joint committee met, my emails were bombarded with additional information, things that people wanted me to ask, and trying to weed my way through it has been extraordinary. But there was one thing that stuck in my mind that I wasn't quite that I wanted some clarification on. The company Keystone, which my understanding was the asset manager for Shield, is that right?
Excuse me, yes, Senator, the responsible entity for Shield.
Yes, okay. And now, ASIC tried to put Keystone into liquidation back in September last year, but the courts didn't want you to do that or denied that, or what happened then in September last year, is that right?
No, I don't think that's quite right, Senator. I'm just trying to find...
That's all right. As I said, I'm pulling together bits and pieces of information from all sorts of emails. So if that's not right...
Perhaps what I could tell you is, in relation to Keystone, commenced a formal investigation into Keystone November 23, interim stop orders made in February 24. We made our first application to freeze the assets of Keystone. In June 24, we sought orders to have receivers and managers appointed to the property of Keystone in August 24. We got orders made to remove the voluntary administrators Keystone had appointed and have them replaced with our selection of administrators in September 24, and creditors resolved to wind up Keystone Asset Management in December 2024.
I missed that. And what was wrong with the original administrators?
Keystone, who was subject to our investigation, sought to have their own administrators appointed, and we had concerns about their objectivity and independence, and we sought to have them replaced.
Okay,
and we
so the ones that you replaced them with, are these the ones that are from a company called A&M, what are they? Does that sound right?
No, Deloitte are the administrators.
Okay.
There is a company called, there's a lot of acronyms in this investigation. There's a company called AWL or something to that effect, AML, that is one of the, I think, associated with one of the lead generator or financial advice businesses. Sorry, I'm being vague, Senator.
That's all right. I'm trying to find my way through this
sorry,
myself.
Senator.
It's really hard.
Sorry, forgive me, Commissioner O'Rourke's just helping me. Creditors resolved to wind up Keystone on 2 December 2024 and to appoint Jason Tracy and Glenn Konevsky of Deloitte, in brackets now A&M.
A&M, that's what I was trying to get to. Yeah, that's exactly what I'm trying to get to. Okay, so my understanding is that the liquidator told the unit holders that they were in fact creditors and that only creditors could then vote on whether to put Shield into liquidation. And that there was an alternative model that was proposed that said that rather than put it into liquidation, you could restructure it and that way the unit holders would get potentially more money. It might take a bit longer, but they could get more money. But the liquidators wanted to melt it all down and their model was entirely reliant on positive outcomes of certain litigation along the way through. But they used equity holders essentially as creditors. And then, once they were appointed liquidators and started the liquidation process, they turned around to the equity holders and said, oh, actually, you're not creditors, which means that you get further down the pecking order in the liquidation. So the people that were at the bottom of the pecking order of the liquidation voted for the liquidation because they were told they were going to be up higher in the pecking order. Is that right?
I would have to take that on notice, Senator. I recall there was a dispute at around the time that the Keystone liquidators wanted to take one particular approach. I don't know, Mr Sabone, if you're more across the details, and I'm doing what I should not do, which is speculating slightly. My recollection is that we were not happy with what was being proposed by those liquidators. We didn't think it was in the interests of the investors, who we've always had at the heart of our concerns, and that's the reason why we sought to have alternate and independent liquidators appointed. So there may be, it may be referring to that dispute, but I'm very happy to take it on notice, Senator. It was, there's been a large number of windings up and different liquidators appointed across a number of these assets. But Mr.
And Senator, happy to take it on notice and provide you with a more fulsome response. But just to make clear too, as in the position we took was by making submissions to the court and the judge was satisfied that liquidation was the appropriate course here. As in, we've heard from a number of investors that, you know, and this I think is being perpetuated by certain people with interests, that had administration been allowed to be carried out, this wouldn't have collapsed. Right. But ultimately there's an independent arbiter or umpire, the judge. The judge was convinced that liquidation was the appropriate outcome in this matter. So it's not something ASIC does unilaterally. We need to go to court, make submissions, and the judge was satisfied that liquidation was the appropriate outcome in the circumstances of this matter.
Okay. I mean, I can only trust others' opinions that understand this matter more deeply than do I, but just let me be very clear. Is it appropriate for unit holders to be considered as creditors in a liquidation?
I just would have to take it on notice.
Would be it's surely unusual. They must be equity holders as opposed to creditors.
There are just so many legal technicalities around superannuation, their rights, unit holdings and the like. That's all. I just would be speculating here. But it's something we could find out very quickly. In fact, somebody may let us know as we're sitting here, Senator.
It just sounded, there was something there that didn't sit right. It did sound like that a lot of these unit holders had essentially been convinced that A, they were creditors, B, so then they voted for liquidation, but then C, got told that they were much further down the pecking order in that liquidation than they anticipated. Had they known that, they wouldn't have voted for liquidation in the first place. Okay. Anyway, I will leave it there. Thank you. Thank you, Chair.
Thank you, Senator. Senator McKim.
Thanks, Chair. I wanted to just ask a little bit about ANZ's misconduct. I'm aware of the fact that you've given evidence to another parliamentary committee on this recently, but could I just ask, so the $240 million fine that you've sought to have imposed on ANZ for serious misconduct matters, is it right that the maximum fine that you could have sought was $3.3 billion?
It may have been, Senator. I don't have the figure in front of me. What I can say, though, is the way that the penalties work under the Corporations Act is that yes, there are very significant penalties there. It depends on the number of contraventions, so you multiply the number of contraventions by the maximum penalty. I think we've got to the point frequently with matters that the maximum penalty is so high as to be almost meaningless. And so the things that guide penalty, there's a range of factors that are included in the legislation and in the jurisprudence about the factors that you take into account. But in many of the matters that we take to court, if you added up every single misleading statement to a consumer on a website, certainly the penalties can be, in the billions of, the maximum penalty, could be calculated to be of a significant magnitude.
Yeah, thank you. I mean, it's an interesting words that you use, almost meaningless. I mean, some might argue that $240 million is pretty meaningless to ANZ. For example, it's less than 4% of the profit that they recorded in the last financial year. How did ASIC arrive at a decision to ask for this $240 million fine, which I'm happy to put on the record, it's basically parking meter change to the ANZ for incredibly significant episodes of misconduct? I think Mr Longo's described it as grubby and unacceptable. So how did ASIC land on the $240 million figure, and did you have any communications with the ANZ before you lodged that application?
So, Senator, the penalties that ASIC is... First, I think we need to be clear that these penalties are yet to be imposed by the court. And as Mr Savundra was saying a moment ago about an independent arbiter, the court will bring its own diligence to the matter and determine whether or not the penalties being submitted by ASIC and agreed to by ANZ are sufficient. We consider these to be very substantial penalties, whether you consider them in total or individually, but $240 million across all four matters is by far the largest penalty ASIC has ever sought against one entity.
Pretty serious misconduct.
It was very serious misconduct, Senator, and in our view, the size of the penalties, which, as I say, are really a magnitude above any penalties imposed against one entity under the ASIC legislation, reflects how seriously ASIC took this matter.
But Ms Court, I mean, I guess, I'm sorry to interrupt, but look, they made $6.5 billion last year. Do you think they're going to be worried very much about a $240 million fine? Like, do you honestly think that that's a disincentive to a corporation the size of the ANZ? And remember, this is all post the Banking Royal Commission,
yes,
right? Like, this is outrageous corporate behaviour. It's a gross and egregious failure, at the very least, a gross and egregious failure of their corporate responsibilities. It is, I totally agree with Mr Longo, it's grubby and unacceptable. I just don't think $240 million is going to scratch the surface of their grubbiness and their unacceptable behaviour. And honestly, I don't believe it's going to be a disincentive. I think we're going to be back here again in a year or 2 or 3 years. We've had the Banking Royal Commission, we've had a slap on the wrist with $240 million. Honestly, it's not enough. This corporate misbehaviour has got to stop. And honestly, I think ASIC's got to play a far stronger role in terms of these recommending much higher penalties to the courts for behaviour like this. And I think I'd speak on behalf of a lot of Australians when I say that.
I think, Senator, we understand and agree with the sentiment of what you're putting to us. We also are of the view this was egregious and unacceptable conduct. I think, though, it's important to recognise that we're operating within the parameters of the current legal regime that we have. It may be worth reflecting that I think it was just last year in another unconscionable conduct matter against a major bank, the maximum penalty that was able to be imposed at that time was 1.8 million. We've now gone up to more than 80 million. And one of the things I think it's fair to say that ASIC has been doing in recent years is working very hard to get the penalties imposed against major financial institutions significantly increased. And I think, with respect, that we're making some very good progress in that regard. There is always work to be done, and these are very large financial institutions with, as you say, very significant profitability, but the size of ANZ and its financial circumstances and the history of contravening conduct that you've drawn our attention to were some of the reasons that we felt that a penalty that was of a very significantly higher magnitude than any previous penalty against a single institution was warranted. And perhaps I could go on to say, Senator, that if it is the case that this penalty does not send a specific deterrence message to ANZ, which is, as you may be aware, the purpose that the courts have articulated for why penalties are imposed. It's for deterrent purposes. So if it is the case that this penalty does not serve as a deterrent for ANZ in the future, well, then we will have a very strong argument to put to the court next time that says a penalty needs to be even higher.
Was this negotiated in any way with ANZ? Like, did you have discussions with ANZ about what sort of penalty they might think was reasonable in the circumstances?
Senator, as is often the case with parties when we come near to the conclusion of an investigation and we make those parties aware that ASIC is proposing a litigated outcome, then we do have, without prejudice, discussions. That's in the normal course. It wouldn't be appropriate for me to divulge the nature of the discussion. Suffice to say, ASIC formed the view as to what the appropriate penalties were for the various contraventions here. I have to say it's an art, not a science, but we have a range of other matters, determined matters, both contested and settled, and so we formed the view that these amounts were appropriate given the nature of the misconduct that we were investigating.
All right. So, Mr Longo, when my colleague Senator Pocock asked at the Corporations and Financial Services Committee why ASIC hasn't held executives or directors to account for the grubby and unacceptable behaviour, you indicated, paraphrase you here, that you're going to defer to ANZ's own internal remediation program and wait to see how that went. And if you think that's an unfair paraphrase, I'll offer you the opportunity to correct me. But I mean, isn't it the case that until individuals, like a corporate fine, such as the one that you've sought to have imposed in these circumstances, is one thing, but you do have capacity to sanction individuals for these failings, or you have the power to impose or vary or revoke an entity's financial licence. So why have you chosen not to sanction any individuals? And secondly, why haven't you used that power to, for example, ban ANZ from being contracted as a duration manager with the Australian Office of Financial Management for a period of time, to actually hit them a bit more where it hurts, Mr Longo?
Well, I'll take that last one because it's the easiest one to deal with. It's AOFM, Australian Office of Financial Management. As far as I know, they've made it clear to ANZ their business. They're not going to be doing business with ANZ. But that's a matter entirely for AOFM. I don't have any power of AOFM. They can make their own decisions.
No, that's right, Mr Longo. But just to be clear,
and I don't have the power to ban ANZ from being a duration manager for AOFM.
You do. No, you do have that power.
Senator Kim, you're at 10 minutes.
Yeah. Okay, sorry, but if we could just clear this up. So AOFM doesn't have a specific power to ban an entity from receiving contracts, but ASIC does, is my understanding.
With all due respect, ASIC does not have that power.
All right.
It's in any event, it's in the gift of AOFM as to who it wishes to choose to be a duration manager for raising money on behalf of the Commonwealth. As far as going after individuals are concerned, again, it is not in ASIC's gift to simply say to impose sanctions on individuals. As I explained before PJC, we live in a situation of the rule of law, and in the situations that are subject of these 4 proceedings, many hundreds of individuals were caught up in what went wrong. And so in circumstances where we can clearly sheet home responsibility for the whole of the alleged misconduct against 1 or 2 people, then ASIC has run cases like that against company directors. But in the case, perhaps I could be allowed to finish. In the case of ANZ, these matters took place over a long period of time. There were many, many individuals involved. Our law does not permit cases to be brought against individuals for their small role in contributing to a big corporate problem. Now, ASIC does not shy away from going after individuals if that's appropriate in all of the circumstances. I should also remind the committee that we do not lightly commence litigation against anyone without the advice of experienced senior independent counsel. And very often when we bring circumstances to the attention of our counsel, independent counsel, whose responsibility is to present our case to the court, we cannot and do not bring proceedings, whether it's against corporations or individuals, without reasonable prospects of success. So I can reassure the committee, if we thought we had a reasonable case against an individual, a court case, then we would have seriously considered taking it. Having said all that, can I just acknowledge that there's always been a high level of frustration that there isn't more accountability in corporations against individuals. Where ASIC can take a case against individuals, it does. And over the last couple of years, I can brief the committee on a number of court cases where we've gone after directors of companies. But in the particular circumstance of the ANZ matter, that opportunity did not arise.
Sorry.
Senator McKim, I'm going to have to rotate the call if you can make this your last question.
Sure. So, Mr Longo, are you saying that you don't have the power to disqualify an accountable person? Because that's specifically what I'm asking you about. Section 42 of the FAR Act gives the regulator the power to disqualify an accountable person. You don't need to go to court to do that.
The FAR legislation sets up an accountability regime for senior executives. And we jointly administer that legislation, which is relatively new with APRA. And I'll ask Chris Savundra to give me a bit more help on this in a moment. But senior executives have accountability requirements, and provided they take reasonable steps to comply with those requirements, that is the end of the matter. If we're able to establish within the FAR regime that the individual did not take reasonable steps to discharge their responsibilities under their document or the standard under FAR, then that is action we could take. But that's far away from the facts we were dealing with in ANZ.
Well, Mr Longo, didn't ANZ specifically admit to not taking reasonable steps under Section 22?
The FAR regime, Senator, applies to people. It does not apply to a corporate entity.
Senator McKim, we're going to have to rotate the call.
Senator Bragg, I think you had a couple of follow-ups.
Thanks very much. A couple of questions on housing. Now, my understanding is that the Treasurer has asked you to do something with RG 97.
That's correct.
Okay, what did he ask you to do?
Well, what we've publicly said we'll do, and we're in the midst of doing, is a review of, I think, the stamp duty aspects of RG 97.
Yep.
And that came out of an investor roundtable that we were at. But I'll ask Commissioner Constant, who's taking responsibility for that process within the Commission.
Yeah. Senator Bragg, in response to your question, we've got a review underway where we're focused on two discrete issues, and the one you're referring to is whether stamp duty should be excluded as a disclosable transaction cost in Reg Guide 97.
So when you say it would be excluded, i.e. the members of the fund wouldn't see that fee anymore?
No. What it means is that it would be potentially treated akin to these fees when it's a listed trust, for example. So it's about the way they're disclosed. It's really important that they be disclosed, and of course they can't be taken out of the equation. So the question is, for example, RG 97 at the moment, the way it sets up is that if it's unlisted, it's disclosed differently to where it's a listed rate. So the question is, should the two be aligned?
So let's just assume that this is a dumb question. So if I invest in a listed property fund, I do not disclose the stamp duty costs in the same way that I would if I was a unlisted investor.
If you are a super fund.
Yeah.
So at the end of the day, the stamp duty must be paid. So it's about the context in which we're talking about. Exactly. So it's about the way that the cost is described. So in an unlisted property, it's disclosed as a transaction cost. In a listed property, like a real estate trust, if you are a super fund, it's rolled into the investment fees disclosure. Now, at the end of the day, both are disclosures. It's really critical, it's important that there be disclosure of the fee. The question is whether it's a distortion that one is disclosed differently to the other, and whether that leads to distortion in terms of investments.
So what's the point of this? Is it to promote institutional investment of housing?
From our purposes?
Yeah, why are you doing it?
So,
because I mean, you're an independent regulator, are you not?
Correct.
So, but you've been asked to do this by the government.
We have committed to do this by the government. It was part of the roundtable action.
Yeah, the Treasurer did a press conference here in Canberra. He said that he'd asked you to do it. So you're doing it because you've been asked to, right?
Mm-hmm.
Sure. So from your point of view, given you're an independent regulator, what is then the how do you work that out? How does that conflict work?
Yeah, so we don't see it as a conflict. I mean, this year as part of our ongoing work to ensure that our regulation doesn't stand in the way of productivity in terms of regulation that's not effective or not necessary for achieving the aims, and as part of the productivity work of the government, was called out by industry, a range of voices across industry, that this might be creating a distortion in terms of investment and therefore inefficient.
Sure.
So the process we've got is a working group that I'm actually chairing. And
who's on the group?
There's a range of folks on the group. There are industry bodies, for example, the Financial Services Council and some of the super fund representative groups, a range of super fund CEO or CIO level, because it's important. CBUS's CIO is on that committee.
Cool.
Funds from across the sector, Senator. So we have different representations. We have representations of platforms, of retail, of industry, because this needs to be model agnostic in terms of the outcome. And the questions we're posing are, is this effective disclosure? Is this creating distortion? Is there any question to be asked in terms of, for example, leading some folks to misunderstand the way these fees work into the performance of the funds?
So is the point to promote the idea that super funds will be investors in housing? Is that the idea, to promote institutional investment?
Not from our purposes, no. Our purposes is to understand whether this is effective disclosure.
That's all it is?
Is this effective disclosure? So if effective disclosure is about ensuring that superannuants, people who are looking at where they should be investing, understand what the fees are and how that affects the performance of the funds, and also that disclosure doesn't create distortions in the way funds are invested.
Okay. How many people are working on this?
Within ASIC?
Yeah.
The superannuation team that supports the work that I'm chairing in this regard. So some of the people in the superannuation team.
How many?
On any given day, it will differ.
It's not a very good answer. Do you have any sense?
The superannuation team, I'd have to take that on notice as to how many people work on this.
Okay, but I mean, there's a lot of corporate crime in Australia.
Yes.
We've just canvassed all the catastrophes that people are living through, and you've been asked to do this by the government for some reason that you say that it's not for you to determine. I respect that.
It's very clearly not.
I'm wondering how many people are down there working on this while they could be fighting crime and putting people in jail.
We would say that this is important regulatory and supervisory work as well, part of our agenda to ensure that our disclosure rules, our regulatory and supervision work, our reg guides are promoting effective disclosure, effective conduct regulation, and that does not hamper productivity unnecessarily.
So when is your work going to be completed?
By the end of November is the terms of reference and the announcement.
And will it be a secret report, or will it be a report that everyone can see?
There'll be recommendations to government,
but that will be secret
it's a very
or
broad.
Public?
I would say I don't know that we have described what the outcomes would be. There is no secrecy though here. This is a very broad group. I think there are 15 or 16 representatives on the working group alone at CEO and CIO level.
That may be the case, but this is the most secretive government since the Keating government, according to the Centre for Public Integrity. So it sounds like you're going to have this one as a public document.
I'd have to take on notice. There is no intention for this to be secretive. I don't think you would chair a working group with 16 different representatives alone of very different organisations.
Just finally, are you managing any conflicts of interest in relation to members of the working group? I know you say CBUS is on the group. Also, the CBUS chair is the president of the Labor Party, as well as, I think, president of that fund. So does that present any conflicts of interest, and have any members of the group lodged any conflict of interest notifications with you?
There's been no registration of conflicts of interest.
Okay.
I think the breadth of the group and the representative level means that this is a very broad representative group to really understand the questions.
Okay, we look forward to your report. Thank you, Chair.
Thank you, Senator Bragg. Senator McKim, I'm assured you have 2 questions.
Yeah, I'll be very
given
brief.
we're quite behind.
Thanks. Just first one to tie off on the ANZ matter. I mean, Mr Longo, can I ask, did ASIC specifically investigate, during your investigation, did you specifically investigate whether any individual person at ANZ, like for example the chair or the CEO, failed to take reasonable steps, and whether they therefore could have been disqualified as an accountable person? Sure.
I'll do my best, Senator McKim, but the investigations into ANZ were not conducted under the financial accountability regime. So I'm just trying to confirm, are you referring to a particular provision within the...
Yes.
Yes. So the financial accountability regime commenced for the banking industry on the 15th of March 2024. Almost all of the conduct that makes up the various ANZ matters that are the subject of this series of court actions predated that, Senator. So we didn't consider the FAR regime as part of that investigation. I can say, and I was going to swing back to this just to say to you that, yes, there are various challenges associated with joining individuals, as Mr Longo has outlined, as liable for the acts of corporations, but that is an issue that the financial accountability regime was introduced to try to redress. We are a co-regulator with APRA in relation to that regime, and certainly we are actively, when we're investigating these kind of matters now, considering FAR-related contraventions. Both agencies are. We haven't had an action yet, Senator, but I can assure you that we are actively considering it and actively engaging with financial institutions. Both agencies are, under the terms, if you like, or in accordance with some of the financial accountability regime obligations.
Right. Thanks for that, Ms Court. Mr Longo, final question to you. It's already been referenced that you've announced that you'll not be seeking to renew your term. Would you regard it as a conflict of interest if, like, there's a term, the revolving door? I'm sure you're familiar with it. It applies in this place, much to my frustration and the frustration of my party. Would you regard it as a conflict of interest for you to leave your current position and walk into a role in an entity like, for example, a big bank that you're currently regulating? Would you regard that as a conflict of interest?
I finish up at the end of May next year. My priority is to do my job till then.
Yep.
And from the 1st of June, I'm going to have a break.
Well, I'm sure it's well deserved.
I'm going to answer your question. I'm going to have a long break.
Okay.
And I'm very familiar with the issue that you're raising. And I think the committee can have a reasonable expectation that I won't be doing anything like that for quite a while. But I think it's important to acknowledge that I absolutely accept the premise of your question. I've been chair of ASIC by then for 5 years. I plan to have a real break. I do not plan to leave public life, but I'm very conscious of the need to preserve the dignity and independence of my office, whoever is in it, and to not do anything which will undermine confidence and the integrity of the office. I feel that very strongly. I've lived my whole professional life according to those principles. So the only other thing I would say is we're silent on this in Australia. There's no, even the convention that I've just tried to talk about isn't written down anywhere. But I am very conscious of the point you're raising, and you'll just have to wait and see to whether I conduct myself in accordance with those sentiments.
Thank you.
Thank you very much, Senator McKim, and thank you to all of the ASIC representatives. That concludes this session. So we will now suspend for dinner and resume at 6:55 p.m. Thank you very much.
Thank you.
45 minutes.
7 o'clock.